Back. It's Wednesday, July 16th. Paul Capetta's here, wearing a very nice collared shirt, making me look bad. How you doing, Paul?
I'm doing great, Frank. How are you?
Oh, it's just a fantastic Wednesday morning. It's pretty hot outside. I have a good amount of sweat on me still from walking in.
The humidity was no joke this morning.
It hasn't cooled off, really.
No.
I'm going fly fishing in Michigan this weekend. But it looks, knock on wood, like it's going to be like 70 to 75 degrees.
That's beautiful.
Which maybe I'm getting ahead of myself because maybe the humidity for some reason is going to be like unbelievable.
Yeah.
But I think it'll be nice.
I mean, it was 94% humidity this morning. You felt it immediately as soon as you walked outside.
I went and picked us up some hot coffees.
Yeah.
Because coffee's just got to be hot. I know you guys can do the cold coffee, but
anything with caffeine, no cream or sugar. Just
Celsius? Are people still drinking those?
I'm pretty sure those are bad for you. No. I don't know.
Well, it can't be as bad as it was for the euro yesterday. Let's get into the platform because I want to talk about the price action we saw yesterday and then also go over what I thought was a great study from our main research man, Glenn, on essentially big moves, but more closely tied probably to binary events, economic data events, and whether or not markets reverse in the hours after those events. We saw a hell of a reversal yesterday in this Eurodollar market. Looking at the hourly chart, the study that we're going to look at is hourly data, so we'll make it a little bit of an hourly show here. Paul, yesterday, inflation is reported in the U.S. It comes in higher than it was last time, lower than expected. Classic mixed number. You have immediately dollar selling. This is, I believe, the move off of the number. It's right. Yeah, it's right in here. This would have been the hour. This is 8 o'clock Eastern. The number comes out at 8:30. You have a rally in Eurodollar all the way up to was trading around 116.50, 116.60, going close to 117. And then, Paul, the rest of the day, it was a bloodbath for the euro. It was one of the strongest rallies we've seen in the dollar the last several weeks. What happened in your mind?
There was some good digestion of that number right off the bat. It was a good 15 to 30 minutes where you didn't know where euro was going to go for the day, and then they started hitting it aggressively, and they didn't really give it back at all. We were kind of sitting at the desk waiting for the give back to come, and it just didn't come. And I think we finished pretty much at the lows yesterday. We've seen a little give back this morning. It did bounce off the 116 level, which gives you some hope, but we're trending that way back, and we've got PPI this morning, so it's going to be another kind of interesting morning ahead of us here.
It's just always funny to me that the economic data, it matters in a way. The news items, they matter in a way, but there's some kind of this might sound crazy. There's some kind of higher market power at work. And I don't know if it's, some people might be like, well, it's the commitment of traders. It's how many people are short versus long. And then if it's at this certain price point, then all of these shorts, they have to, liquidate these positions at some point. Or if they're all these longs in the Eurodollar market, they have to liquidate these positions. Whatever it is, there is something at work at a time like this where it just seems like the vibe has changed on dollar in the last couple of weeks. The sell-offs in dollar are bought back quickly. And here we're looking at Eurodollar the last couple of weeks. And you can see ever since they got up to 118, Paul, every time they've tried to rally this Eurodollar market or sell off rally the euro, sell off the US dollar, it hasn't been able to get any legs beyond any of these prices and has started to work its way lower, actually. And yesterday was a classic day where it's like, okay, the expectation is higher inflation in the U.S. The inflation number that comes out is less than what was expected. And so right off the number, you get the classic what would have been the theoretical reaction? Well, if inflation's not higher, then treasury prices should move higher because interest rates are going to come down here in the US. And you had that for all of 10 to 20 minutes. And then just overwhelming, complete reversal of that entire idea. And it just like seems to me going into the number, it was like, okay, this number, it rarely is a huge surprise. Rarely is it like, oh, we're expecting 2.7% and we got 7%. And it's like, it doesn't really happen. And so the number at the end of the day probably didn't matter. It just feels like there's been, like I say, like a vibe shift. And now people are either liquidating their dollar shorts or people are jumping on the dollar long train because interest rates don't appear to be coming down as fast as previously thought in the U.S. And it seems like the kind of X factor in the room is the Trump tariffs, Trump Iran-Israel war kind of like fear factor seems to diminish as well.
Yeah, there's a lot to unpack in the CPI data yesterday. Obviously, CPI takes into account energy prices, so that's a piece of it that you have to take with a grain of salt because energy prices were higher in June. But it comes back to this idea that inflation's still pretty sticky. We thought we have had inflation coming down, as our little chart that we'll show you, but it hasn't got back to that Fed target of 2%, which is where they look to start cutting rates. Now, many will argue that maybe they're going to be behind because this is lagging data, but the job market has held up, so they don't really have a reason to get kind of into an easing mode at the moment. So that brings back your dollar strength. It's an interesting one. I mean, I think you called out the Treasury move yesterday. I mean, that
crazy
was crazy.
Crazy move. Yeah.
But yesterday was a very interesting day in that you saw price action that we maybe haven't seen in a few months, probably 5 months, I'd say.
Yeah. If this was April, May, June, that number would have come out. They would have rallied Eurodollar 20, 30 points, and then it would have just drifted higher for the rest of the day. But like I say, it seems like, and yeah, maybe it is just simply the fact that like we had a strong non-farm a couple weeks ago. This is now inflation data that didn't surprise to the downside, and it is higher than it was previously. And so now it's like, okay, we're just going to take all of the interest rate cuts out of this market, and the U.S. dollar is at lows in a ton of these Forex pairs. And so now it's like, all right, it's a little bit of a dollar bull period, given all of the context of the dollar lows plus taking these cuts out of the market. Because, yeah, now you're looking at this July Fed meeting. And it's funny, this is almost always the case, and so I'll reiterate it again, that these odds go to close to 100% in one place or the other, no action or some action. Almost every time by the time the meeting actually comes up. And that's why these seemingly small data points like inflation or non-farm, or you got PPI again here today, GDP, whatever, you might think like, oh, well, I'm just going to wait for the big Fed meeting because that's when the actual decision is going to be made. The decision is made, these small data points on the path to that Fed meeting, because, yeah, this chance of a cut, Paul, a couple of days ago was at least more than 5%. A couple of weeks ago was, I think at certain points, 20% or higher that they would start cutting in July. Now it's no chance. And if we go out to September, this is the one now to watch. It's back close to 50-50. But we've seen this at certain points as recent as a week ago. Majority thinking that there is definitely going to be a cut, maybe two cuts by this September meeting. And so really interesting to see. Yeah, that bond move yesterday was crazy. You saw a rally in treasuries for like that 10 to 20 minutes or so, and then they sold all the treasuries off really, really hard. Anything else on your board? Obviously, the Eurodollar move was the biggest mover as I go across here. Nice to see dollar Swiss franc actually rallying continually into this morning, back above 80 cents. It's been a rough ride for this market the last couple of weeks, but anyone that's been hanging in on the carry trade, long dollar, or looking for a reversal in this extreme, you finally got it. Down below 79 cents was the low, back above 80 here today. Anything else that you're looking at?
No, dollar yen's has kind of reemerged as
just strong.
It's strong, but there's some headlines coming out in the next week, really the next 4 or 5 days, that is going to be pretty pivotal. So overnight, the Japanese 10-year hit all-time highs that we haven't seen since 2008.
Okay.
We've got a Japanese election on Sunday. We have Japanese inflation this week.
Nice.
So you're talking about a slew of events that can get very interesting in this market. The bond market is reemerging. The bond vigilantes, that term is back again. The news they'd love to talk about it, but fiscal responsibility or lack thereof,
sure,
is coming back into play. So these markets are going to get real interesting. This one does have a 4-day roll today. So that's
what I was going to say. They were looking particularly juiced today.
Yeah.
6 points for long dollar yen.
Yeah.
Into the close.
Yeah. There's a Japanese bank holiday on Monday.
Gotcha.
So that's why you have a 4-day roll. So.
Well, that market obviously not thinking right now that any of the events that you just quoted are necessarily hawkish for the Bank of Japan, just because we're set up right at 150. I mean, this is a market that in recent weeks has been as low as 142 here in July. It got just below 143, so the 142 handle didn't get down to 142 even necessarily. But if you go back in time enough, I mean, we traded down to 140, and that was the kind of peak of carry trade is unraveling, Bank of Japan is hiking, the U.S. is cutting. And now with all of that stuff that you're talking about, which sounds like it could be painted relatively hawkish for the Bank of Japan and for Japanese interest rates, and potentially bullish for the yen, market not thinking so, hanging in right around its highs. So that'll be really interesting to see. And yeah, those 6 points obviously not risk-free given all of the information that'll be coming out of Japan for the next couple of days. But a really interesting market that is giving you some of the highest volatility if you're into that. I don't really have anything else. You said we have a PPI here in a few minutes, 45 minutes. PPI is expected, just like the headline inflation numbers yesterday, to be slightly higher. And then from there, a couple more Fed speakers, and then, some Japanese data throughout the night. Anything you want to hit on before we get into our study?
No, not really. I mean, UK inflation data came in higher than expected, but that was kind of a non-event. Cable didn't move too much.
Well, and again, kind of to my point of, it seems like these economic events and all these news stories, they're meaningful, but when you have like a higher degree of like, it seems like people are just piling back into this U.S. dollar trade, which they have on or off for the last couple of years, ever since we saw the huge dollar rally in 21, 22. There's been, I mean, probably more than 5 times that it's like, oh, the dollar's unraveling. Oh, actually, now we're all piling back into the dollar trade. And yeah, you get a higher than expected print out of UK inflation, and this pound can barely muster up a 20-point rally, can't even get back to 134. And this is a market that was trading, that looked like it was going to trade 140 2-3 weeks ago. So we'll continue to monitor it. The story right now just seems to be dollar bullishness. A lot of it seems like it's coming off of interest rates in the U.S., so we'll watch all of that. But let's actually pull up the slides and take a look at really fun study. Trading effects, volatility shocks. Should you fade them? Should you follow them? We're going to take a look at a lot of data points here, Paul. Basically, the setup for this study is intraday trading, okay? We're going to be looking at hourly candles. And I guess the best way to say it is, if you got a big move in 1 hour, should I go with that move or should I go against that move? What is the next hour report? What is the next 2 hours report? What is the next 4 and 8 hours report as the average result of that market's price action following a big hourly candle? Right off the bat, I mean, what I love to ask people this as almost like a Rorschach test kind of thing. If you saw a big hourly candle, and let's bring up a chart here. Glenn has highlighted this big move that happened July 10th at night at 8 o'clock Eastern. So obviously not a big economic event, but just a big move. And you'll get a couple of these every week, it seems, in some of these major Forex pairs. Does that make you want to buy or sell that big drawdown, that big red candle? Oh,
the big red candle. So typically I would personally look to fade it. That doesn't always work, I can tell you that. You really got to watch the price action when these markets get moving in one direction. Because if they get to a key level and they keep going, it's like, okay, maybe I shouldn't be buying here. And then you're
everybody bought at that key level, and now everybody's getting out below it.
Really quickly, yeah. It really depends on the situation, and the mechanics of your trade got to be tight if you're playing the kind of the fade, some of these big moves. So,
that's a great point here, because whether you are fading or following any of these moves that we're about to analyze across 7 pairings of U.S. dollar and other major currencies, the mechanics have to be big, and the data will actually show that as we go through it. It can't be just like, oh, that's a big hourly candle. Yeah, like I'm going to go with the trend or go against the trend, and then I'm just going to see what happens. Because even if the odds are in your favor, let's say that the odds are in your favor for fading that move. So if you see a big drawdown in 1 hour, buying it. If you see a big rally in 1 hour, selling it. And I've seen so many people, myself included, make 5 ticks, 10 ticks, and then just be like, oh, this is great. This is, easy. I've won 2 out of the last 3. And so I'm up, 10 ticks on my winners, and I just took a 10 tick loser. And then it just takes one, oh, I bought it. There was a big hourly drawdown in Eurodollar to 116, and I bought it. And then it got below 116, and it just collapsed to 115. And I lost 100 points on that trade to take all of that, those prior gains and everything else away from you. So consistency, always the key. I'm glad that you brought that up off the top. But here is the setup for the study, Paul, looking at Euro, Pound, Yen, Aussie, CAD, Swiss franc, and New Zealand dollar against USD for the last year, analyzed all the hourly moves for the last year, and essentially filtered for, okay, if there was a 0.2% or a 0.3%, 0.4%, et cetera, down move, up move, what was the action afterwards in the next hour, in the next 2 hours, 3 hours, 4 hours, 8 hours, and just essentially looked at a win rate based on if it was, 0.4% in hour 1, 0.4% down move, and I bought it. In the next hour, would I have been profitable? In the next 2 hours, would I have been profitable? Or if I had sold that down move following the trend, would I have been profitable in that next 1 hour, 2 hour? And so obviously nothing is lost. The faders either win or the followers either win in any of these scenarios. Surprised to see, before we get into the actual data, that you are seeing more fades than follows right off the bat, Paul.
Yeah. I wouldn't necessarily say I'm surprised, because you do kind of see there's some mean reverting characteristics in FX markets that this is kind of what you get. But dollar yen being follow across the board, isn't exactly surprising given it's been a trending market better part of 4 or 5 years. So it's really hasn't, like, that's a market where it has a different dynamic going on, where something like a euro dollar or an Aussie dollar, that's an easy market where you, not necessarily easy market, but a market where you see the kind of big moves and then the fade will fade the next couple hours.
More consistent reversion.
Yes, exactly. That's exactly how I should put it.
And yet, the thing that's always interesting to me, whether you're looking at studies like this, which is pretty pure price action, buying or selling, or even a lot of the option studies that we used to do, based on like, okay, like, and it's essentially the same concept, right? Where it's like, if volatility is low to medium, do you tend to get inside moves? Do you tend to be profitable from selling options or buying options? And there was always like a threshold where if volatility was really high, selling options, actually the win rate on it started to lessen, whereas you might think like, oh, well, it was a really high volatility, really big option premiums, and so I'm getting the biggest prices, so it should be the most profitable. But sometimes you'll see volatility cluster, and so I'm not surprised to see it, but it is always interesting to see that, like, you see around the big moves 0.5% or 0.7% in 1 hour. That's a big move in an FX market. You're seeing more follows, which is to say the next hour there's actually more volatility in that same direction. Yeah. Whereas the small to medium moves, you're seeing most of the reversion focused around there. It's kind of like the equivalent for those options traders of like selling options in the S&P when IV rank is like 10, 20, 30, 40%, sometimes can be more profitable even though you're getting smaller prices than if IV rank is 100%. Because if IV rank is 100%, vol is the highest it's been in the last year, the market is really, really moving. And so that's an interesting trend that I picked up here, is that some of the best reversion results are in that kind of small to medium moves on an hourly basis, whereas when you start to get big moves on an hourly basis, that's when you start to see that trend following, the continuation of those moves. Now, here are the win rates for each of the markets based on if you had faded these moves, what would happen in the next hour, 2 hours, 3 hours. So now essentially any move outside of a 0.2% on an hour, which is what we're kind of categorizing as a big move in this study, what was the success rate in the next hour to 8 hours? And the big thing to me, Paul, as I was looking at this with Glenn yesterday, is there's a lot of green on the board. So fading the move has the last year been more successful. Again, historical results not indicative of what's going to happen in the future. But another interesting trend here is that after 3 to 4 hours, these odds don't seem to get better, which is to say you should probably look for that. If you're day trading or looking to fade a move, you should probably look for that reversion in the first couple hours of trading.
Yeah, that's normally when you're going to see it or you're not going to see it at all. I like the way that Glenn has kind of laid this out, and that as you kind of hold this position for longer when you're fitting a move, your odds of actually making a profit kind of start to go down, because different things start happening in the market, different news events, the narrative starts to change, whatever it may be on that day, and it kind of takes out that, just whatever that narrative is. Yeah.
The way that I kind of view it is like, if you're day trading or you're trying to get an edge in the market, you're really looking for market inefficiencies. And so if something crazy happens, if there's a non-farm at 8:30 Eastern time and you're like, oh, I think this is too big of a reaction, or I don't think this is big enough of a reaction, that potential for inefficiency is probably unfortunately, it's probably in the first couple of seconds, but to minutes to maybe an hour or two. Whereas to your point, after like 3 or 4 hours, they've priced that event.
Yeah.
And so now you're kind of betting on something else happening, which is like, okay, you can try to predict what the news story is going to be today at 1 o'clock in the afternoon. I have no clue. But just to wrap up, obviously the opposite side here is a lot less green going with the trend, but it is interesting to see that these green numbers start to populate going with the trend over a longer time frame. And so that could more mean like, and you see this a lot, that maybe it's a strong non-firm number and the dollar's rallying, and then maybe it comes back a little bit in the next hour or two. But then as the next Asian and the next European session come in, they digest that as another, dollar rally. That's at least how my brain sometimes thinks about those things, but not a lot of consistency for following the trend. So we'll stick with more of the fading strategies, at least for setups like this. Contrarian strategies have the edge when reacting to major hourly moves for intraday scalping in most pairs. Dollar yen, the last year and probably last couple of years, given how it's been trending, has consistently been favoring momentum trades. Dollar CAD posts the highest win rates. Yeah, we saw some of those win rates at 58, 59%, which is crazy, of fading those bigger moves on an hourly basis in Canadian dollar. Aggregated data shows timing trade exit is less important. Profits can be seen in as quickly as an hour. So yeah, hanging around too long, probably not for the best. But that's it, Paul. Thanks for joining on that study.
Thanks, Frank.
We'll throw it now to Tom, Tony, and Vanetta coming up next. Stick around, everybody. Peace.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Hola.
Hola.
It is
How are you?
so gross outside. I opened my door and the humidity punched me in the face like I owed it money.
I didn't go outside yet today.
How did you get to your car, genius?
Don't listen. Don't
What do you
listen
mean?
to him. Don't.
Do you park so your garage is accessible from inside your house? So
Yeah.
you go, okay. And
Yeah.
then you
Yeah.
parked in this, you could still feel it in the garage here because it's the garage.
I didn't.
No,
Okay.
he didn't feel anything.
No,
He's
no.
immune.
No. I have an enclosed, like, I park in the enclosed part.
You have a habit trail?
Yeah, I have a tunnel.
No, my glass is fogged up because I was in my air conditioned car, and as soon as I got out in the parking garage, my glass is fogged up.
It is a real world problem.
humid. Look, the level of wizardry and witchcraft that I had to do to get my makeup to
Don't think we don't know.
not slide off of my face
Don't think we don't know.
should be I don't know, recognized. That's it. That's all. How are you guys today? Good morning.
Special.
You are special today. Are you wearing long sleeves?
Yeah, I didn't know it was hot out today.
Oh my God. I saw some kid from the brokerage side. He's wearing a Patagonia jacket, and I'm like, I literally just said, "What's wrong with you?"
Well, it's cold in the office, and I
Well, he says he leaves his house at 4 a.m. and that it was cold. I was like, it wasn't even cold at 4 a.m.
Yeah, I mean, no, I'm not. You know, I have this shirt. I have
a this shirt. Are you okay?
I have a this shirt. All of a sudden, he becomes Italian.
You are this close to Velcro shoes, my friend.
I don't have Crocs on today, but I have my Cubs jersey here, so I could go.
That thing's like see-through.
You can go skins too.
Is there a name on it?
No, this thing is nice.
No, I can see through it. If you hold it up to the light, like, look, you can see the neon light behind me. Hold it up. You can see through. It's see-through.
Well, I do that just to get you all worked up.
No. Drier than the Sahara. But you do you, dude. I mean, there's a lid for every pot, I guess. I don't know. I've lost all control today. Matt, you have not left your house. You were smart. You stayed home with your pool.
Yes. SMRT.
But did you take the dogs out this morning? Like it's
my God!
gross.
You think he takes the dog? This kid, he doesn't walk a dog.
I didn't
take the dogs out. I mean, did you see? Look at me. I'm all made up. I'm looking beautiful. You think this just happens overnight?
Ooh, let the dogs out.
Ooh. No, you're supposed to walk your dog. You can't just let them out in your yard.
Actually, I have to tell you, I'm in the pool right now.
You have a swim up bar and you put your laptop on the swim up bar.
This is correct.
All right, that's not bad. That's pretty nice.
I don't think I ever walked Chili once in 10 years.
Which is why he suffered from clinical depression. That dog was depressed.
I don't think I walked him once in 12 years.
You're supposed to walk your dog. That's how they get all the smells and the scents of the neighborhood. They don't get enough exercise.
They run around.
That's not true.
It doesn't help. It
does. I hope you guys get so many emails today from people. You're supposed to walk your dogs. And it's good for you too. It's good for both of you.
No, I mean I like to walk. I just I'm not a big dog walker.
Are you going to get another dog?
It's on my list to do this year.
This year?
It is to-do list.
So 2025 is not the year of the snake. It is the year of the dog.
No, it's when the road shows are over.
Okay.
Like October.
Uh-huh.
I think I'm going to start the process
of rescuing a dog from one of our overcrowded shelters.
No, I don't want one of those mangy mutts.
Okay. All right. Shelters are overcrowded, man. It's a problem.
I know.
Okay. All right. And then when does that dog become my responsibility?
Shortly thereafter.
Yeah, There it is. All right. Well, did you guys watch the All-Star game last night?
A little bit.
Heard congratulations to former Cub Kyle Schwarber. They had kind of like a penalty kick or shootout situation.
It was like a
yeah.
It was cool.
That's cool.
I didn't stay up to watch it, but I watched the highlights.
Okay. Did you watch that?
I didn't watch it either, but I saw some of the highlights. Obviously, I saw his
Schwarber was good.
Schwarber.
He's in Indiana.
He went to Indiana, yeah.
Yeah, I know.
Yeah. All right.
Yeah, I wish the Cubs hadn't given up on him, but whatever.
Well,
he saved the day.
He's had a decent career at Philly.
Cubs are sometimes not great at making choices.
I mean, no team's great at making choices. It's not,
Like in baseball?
Well, when you look at the All-Star game last night, there's a lot of players. I mean, Javi Baez was playing for the American League, and the Cubs gave him up, but then they got PCA in return. So, it's, you don't know.
The highway? PC? Oh, no, that's PCH. Who's PCA?
And Pete Crow Armstrong.
Oh, I can't with all the acronyms. SGA, PCA, LBJ.
I know, it's a young kid thing. I don't get it.
SGA is a good acronym. PCA is a good...
SGA just makes me think of like the Small Government Association or something. I don't know.
No, SGA is good. PCA is good. Both of those are good.
Okay. Well.
I mean, for sports fans, those are good.
It's just hard to keep track of everyone. It's too many acronyms. I like it when they have like nicknames and stuff, like White Mamba.
It's easier that
See,
way.
that's good.
Yeah, I agree with you.
No, they didn't call him when he was actually playing.
Scalabrini? Yes, they
They
did.
didn't call him the White Mamba.
Yes, they
When
did.
he was done playing, he became the White Mamba.
No, my recollection says
He's not the White Mamba.
he's always been White Mamba.
He was like 8th man on the bench. You know,
Scalabrini.
he was one step away from the D League, and then
Wow. Okay, I'm sorry. And what was your shooting
he
percentage?
became the White Mamba afterwards.
I'm just saying it's better than PCA.
No, PCA is good.
Better than White Mamba? No.
Oh, is a nickname? No, White Mamba's good.
Yeah, like I'm just saying.
Yeah, I mean, there's been basketball. I don't know if basketball had after Chocolate Thunder. There wasn't much.
Oh, Chocolate Thunder? Who's that?
Daryl Dawkins,
Daryl Dawkins, yeah. See, that's good.
Dr. J. Yeah, there was.
Yeah, Clyde the Glide.
The Iceman cometh.
Yeah.
Yeah.
Mm-hmm.
Yeah, it's all good. All right. Well, what did you get up to, Bat, last night?
Ooh, quiet night last night. Sat outside and had myself my new drink, Vanetta, which I think you're gonna love. It's basically whiskey and diet ginger ale. It's excellent.
Ooh.
What?
Ooh.
Yeah.
You know what? I'm not
Yeah.
mad about that at all. Like that sounds really good.
Whiskey and
Yeah,
diet
yeah.
ginger ale?
Yes, very
That's
good.
That's called the Batista? What is that called? What is that?
That's called, you don't want to drink straight whiskey at 6 o'clock at night, so you put a little bit of ginger ale in there.
Unless you're a
Diet.
degenerate. Yeah, of course.
Yeah.
Actually sounds pretty
You're
good.
allowed as a man to have a drink.
As a man.
dinner.
What whiskey you got, Bat? What are you sipping on?
You know what? When I mix it like that, I really don't care. I just use
Yeah.
the bullet. It was,
I like Bullet. Yeah, Bullet's
Yeah.
great.
yeah. Yeah.
Oh, summertime, a little Bullet and lemonade. Ooh,
Yeah, just you just do a little well drink. There's nothing wrong
Yeah.
with that.
it's good. But I'm
Yeah,
not drinking
yeah.
now because of my gains.
Yeah, play a little music, play a little music in the background, send the kid out to go get some ice cream or something like that. Take advantage of mommy. You know how it goes.
Nope. No, dude, not this close after your birthday. I already know how this works. She's like, no. She's like,
You're so true. You're so
shut it down.
true.
Like, she's done for 2025.
I got shut down. I'm not gonna
Yeah.
lie. I got shut down. You're 100% correct.
Yeah, your birthday's
You're 100%
over.
correct.
So thank you for
Because
your
you're tired
service,
too.
Lady
Don't
Bat.
give me that. Yeah.
Yeah, I clocked you. I was like, no, that's cap. That is that is all
Oh, well, it
sorts of cap.
happens.
But what
It
are you gonna do?
happens.
So you've been to one baseball game. How many more are you going to after the All-Star break? Because you've only been to one this whole season.
Yeah, I'm going to go to a couple more.
What, 2, 3?
I don't know. I'm not. I got a lot of plans right now. I got a lot on the
In
table.
between skiing in the spring and everything else you're doing, yeah, sure, you got a lot to do.
Yeah, I got playing some golf this weekend. I got some other things going
Oh, you're playing golf again. You
Yeah.
have the bug.
I got some stuff going on. So I'm busy.
Oh, farmers markets?
Farmers market, golf, host. I haven't been to my coffee shop in days.
Oh, man.
So
Yeah, you got a lot. That's a lot that's happening around you. But anyway,
yeah, I'm very busy.
okay.
Very,
well,
Very
we
busy,
are
very busy.
Very
we are very busy here on Tasty Live. It is a wonderful Wednesday here, and that means it's an Assume the Position Wednesday. What does that mean, you ask? I'm so glad that you asked. And that means at the top of the 8 o'clock hour, you're going to get a Tasty Bites. These are strategies for smaller sized accounts, and today's topic is synthetic options, a capital efficient alternative. Ooh.
Ooh.
Wait, what are synthetic options? If they're in your hands, they're real. No. I've worked here too long and I hate myself.
Yes, you have.
No, what's a synthetic option?
It's like a synthetic strategy, not an option.
Oh, okay. Because I was like, I thought.
Oh, so you lied.
Well, I didn't write the title, but it's like synthetic stock. It's just different synthetic strategies.
Gotcha. Okay. Then at 8:40, we have What's Your Assumption? This is the part of the show where we do viewer-submitted trades. Viewers write in with an underlying that has a directional bias, and Tom and Bat try to put on as many trades as possible. That's at 8:40. Then 9 o'clock, Skinny on Options Math. Jacob in the house, Beyond, IVR, Nuance, in Volatility. Ooh.
Yeah, he's going to cover.
He's getting jazzy with it.
Yeah, he's having a little fun with the names, but Jacob's going to confuse us all, but he's going to cover different other things other than implied volatility that we look at.
Okay. All right. That is going to be at 9 o'clock, so buckle up for that. And then we got live from the trade desk at around 9:20, Big Boy Scotty S. Scott Sheridan counting down the top trending tickers over at Tasty Trade. And also today at around 9:40, we got Johnny Trades, Nikki Bat, coming in studio with his trade ideas, especially great if you don't have Sosnoff like money. But Nikki has some wonderful trade ideas, which you do not give him credit for when he puts on a good trade. But he's going to be in at 9:40. And then Liz and Jenny are going to be live from the floor of the SIBO, which is always exciting. And it's Truth or Skepticism. 1 o'clock, Tom Sosnoff, Dylan Radigan. What are you talking about with Dylan today?
You know what? We're going back and forth. We haven't made a final decision yet.
Okay. There's
a bunch of topics, but
there's a lot going on. Yeah.
Yeah, there's a lot going on.
Yeah.
But it's going to be a fun one.
It's going to figure that out. Tom Sosnoff, Dylan Radigan. That's live here, tastylive.com, or on our Tasty Live YouTube stream. Say hi to us on YouTube. If you want a more interactive experience, come say hi to us nicely in the chat and hit that like and subscribe button and that bell notification so you never miss any Tasty Live content like Bat's podcast. Hey, in the meantime and in between time, you guys want your daily dose?
Sure.
I'm going to need you to be all the way on board.
Sure.
All right, hit me with my theme music. Let's go.
Our leading story, breaking news.
Across
the wire. Leading story. Top story. Jump in.
In today's headline, this just in.
Breaking news.
All right, everybody. Today's a wonderful Wednesday. It's July the 16th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Sure. Ready
Bless
for the
you.
news.
Are you okay?
Good
That
tight.
was... Did you just sneeze in your hand and rub it on your face?
I rub it all over Tony's stuff.
You're supposed to sneeze in your elbow.
You sneeze like this. It's totally fine.
Sneeze in your elbow.
Why would I sneeze in my elbow?
Because for transmission because it's more sanitary to sneeze in your elbow instead of sneezing on your hands and then you're touching
They
everything.
teach you this in kindergarten, Sosnoff.
You're supposed to sneeze on your hands and then touch everything.
Sneeze in your elbow.
You sneeze
And then everybody else becomes immune. Sneeze in your elbow.
Immune.
Yeah, I mean, my immune system is strong working here.
I'll tell you right now.
Let me tell you something.
Most floor traders, pit traders,
Sure.
they never get sick. You know why? Because people have been spitting on them for 20 years, and they're fine. You can't.
I was going to say because the amount of Quaaludes they took kind of balanced things out.
You can't hurt them. Like there's nothing you can do.
I guess, maybe. I don't know. Anyway, hey, this is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Mr. Bat, are there any earnings?
You could take a look at UAL, probably, would be one of your better ones. And then you've got GE, Pepsi, Travelers, TRV, Abbott, ABT. But UAL probably the one you'll look at if you look at anything.
Yeah, UAL is a good trading vehicle.
And UAL had a nice little bump after Delta had their earnings, too. So don't make that face at me. I'm just saying, I didn't know if the move was already out because it went up a decent amount after Delta. So what's the expected move in United?
I can tell you that.
Excellent question.
You don't know.
UAL trading $86 and change. It's actually up about 40 cents, flirting with 87. Has about a $6 expected move.
Okay.
On an $86 stock, better than what we saw in like Goldman Sachs, which is a $700 stock and moved $9. Very small move in Goldman Sachs last night for earnings. Actually, it's $7.
All right. Well, come on, United. I'm a United girly. Hey, first headline, dollar rides treasury yields higher as tariffs begin to bite. We got our first little glimpse in yesterday's CPI that tariffs were materially starting to impact the way people are feeling price pressures in things. But the dollar rose alongside treasury yields Wednesday. What was going on? Let's talk dollar going this way, bonds going this way. What did you do?
With respect to the dollar?
Yeah, or bonds yesterday too, because yields were higher, so that means bonds were down. And you're going to have PPI come out today.
Well, we're already long bonds, so we didn't add to the position, but it was a bad day in bonds.
Yes, it was.
In the dollar,
Well, bonds went lower. We're long them. Yeah.
Yeah. In the dollar, we were playing the dollar higher, and the dollar went higher, so that worked out nicely. I mean,
okay, it kept pressure on the yen.
The yen's up small today. The dollar's down small today. The moves are the dollar's up small today. The yen's up, so the dollar's down against the yen and up against the euro and the other currencies.
Gotcha.
But,
But there's small moves,
but
right?
the moves are very
euro's
small. Yesterday, the euro took a big dive.
Okay.
It was the first day the dollar had a nice ride.
Okay.
But we did fine in there. We've been playing it to the upside.
JP Morgan CEO Jamie Dimon says the Fed's independence is absolutely critical. The president said he's not going to try to remove Jay Powell, Dimon told reporters. He says the independence of the Fed is absolutely critical, and not just for the current Fed chairman, who I respect, but for the next Fed chairman. How much weight is in Jamie Dimon's words as Powell faces more and more pressure? I guess now he's in trouble for decorating his office. I don't know what's going on. I hate everything.
I mean, Jamie Dimon's right in this case, and Jamie Dimon's rarely right when he talks.
Mm-hmm.
I mean, if anybody, I'll give him credit for one thing.
He says playing around with the Fed's going to have adverse consequences.
I'll give Jamie Dimon credit because he's the only bank CEO that actually comes out and talks.
Sure.
That's one good thing. The bad thing is whatever comes out of his mouth, it's usually idiotic.
Okay.
In this case, I agree with him that the independence of the Fed is absolutely critical.
Sure, no matter who the chairman is.
Yeah, no matter who the chairman is.
Or
the independence
chairperson,
of the
whatever,
Fed is critical. I don't think the Fed's as important as people think, but the independence of the Fed is important.
Okay. All right, leave that there. Hey, this is interesting. What are your thoughts? Oh, well, that's weird. I don't know why things do that. What are your thoughts? President Trump is expected to sign an executive order that would help make private market investments more available to U.S. retirement plans. Previously, this was only available to like accredited investors, so having access to like private equity, venture capital sort of funds, real estate, things like that. What do you think about opening up those markets to more traditional like 401ks? Because sometimes people are like, well, there's illiquidity, there's other risks that people don't know about. Is it positive? Is it negative? Is what?
I mean, we've always felt that that every market should be open to every person and let people make their own decisions.
Mm-hmm.
You know, I don't like when the government or when the regulators decide to play, who can invest in what. I've always hated the whole accredited investor thing. It's never made any sense to me.
Okay.
I mean, the challenge here is going to be to keep the scammers away, because people are going to fall for, the problem with private markets that a lot of people don't understand is that people set their own prices. So like in the private market, you could say like Tony Batista can create Batista Inc., right?
Mm-hmm.
And you could say it's worth $100 million.
Okay.
And if somebody, if he can find somebody to invest in $100 million, great. I mean, there's no marketplace to determine the actual price.
Right.
And so it's very hard to mark those. So I think people just have to they have to really understand that they're investing things that they might not know what the actual value is, and it might not have any liquidity at all. But, again, I don't want to be the person that tells somebody you can or can't do something.
Right.
I mean, if you want to invest in something that's a private marketplace, you should be able to.
I don't know how I feel about it, because just the risk is like if you just blow out your whole retirement,
obviously that's a bad thing.
Like on the next, Theranos or something, then
exactly.
I'm scared for what that means.
Again, we have to be careful in one of the ways that people learn, learn financial literacy, and so they learn about this stuff. They learn about diversification. I mean, listen, only 1/1000th of 1% of all the people that invest watch Tasty.
Sure.
Those people understand. You want to be non-correlated. You want to be diversified. You want to do lots of things. I would have no issue at all with any Tasty trader in the whole world. Okay.
Even the galaxy.
Any Tasty trader anywhere. This would be great for them because it would open them up to other opportunities that they can make their own decisions on. The problem is the other 99.99% of the people in the world, don't understand the risks of not being diversified, of private investments, of no liquidity. So there's some challenges there. But you know what? Again, the only way to learn is to open things up.
Okay. That was very well.
I don't know any of the details of this, so it's really hard for me.
Right. And I don't know either. But I just thought it would just be an interesting discussion just about
we have
the concept.
We have long been advocating for retail investors to be able to participate in, non-public offerings and in OTC things and in capital raises, tokenization, everything. We don't want any limitations.
This whole week has been touted as crypto's big, beautiful week, as several cryptocurrency-related bills backed by President Trump were supposed to make their way through Congress. Well, surprise, surprise, surprise. Several of the bills backed by Trump failed to clear a procedural hurdle in the House of Representatives yesterday. Hours later, Trump says that GOP holdouts will, in fact, back it. I don't know what's going on. But it was supposed to I thought this was a slam dunk. I don't really know what's going on, but something stopped it yesterday. But crypto has been at all-time highs. Let's just talk about crypto because it's hitting, 120 on the reg, and this is a damper on that.
Not really.
Okay. I tried.
It's not a damper.
Bat, what are digital assets doing this morning?
They caught another bid, 119.1 after trading, as low as 117 and change. They're 119, trading near their highs, about $500 off of their today's highs, not their highs of 123 or so, 123,000.
Okay. U.S. prosecutors and the CFTC have dropped all of their investigations into the crypto-based betting site Polymarket. The FBI had raided the Polymarket founder Shane Copland's home last year, but now they're like, you know what? Our bad. The DOJ and the Commodity Futures Trading Commission has dropped all investigations into Polymarket. Prediction market provider is free of U.S. investigations now. So,
I am a big fan of Polymarket, and I'm a big fan of Shane's. I started talking to that kid. He's only I want to say he's 26 or 27.
Oh, that's young.
I met him when he was started talking to him when he was 20 or 21. Mm-hmm. And we've had just a kind of back and forth relationship for the last 5 years. He's a really smart, really interesting kid. And listen, I give him credit. He built $1 billion business by the time he's 27. Both his parents are New York public school teachers.
Oh, wow.
And he's had to do it with everybody coming after him. Literally,
his house was raided by the FBI. That's got to be traumatizing.
Was another firm.
Yeah.
That was another firm that turned him in.
Yeah.
But he's done it on his own. He's built $1 billion business. He just raised $200 million. He's an unbelievable story. He's super smart. I don't know. I have a lot of. He's an interesting kid. Mm-hmm. I have a lot of respect for him. I've spent hours talking to him.
Sure.
So you know what? Good for him.
Good for you, kid. Good job, Shane. Hey, in other news, JP Morgan's Jamie Dimon and Citigroup's Jane Fraser are now considering stable coins after a Wall Street crypto pivot. Y'all wouldn't shut that F up about how much y'all hated crypto. Now you're like, stable coins, yay! Mm-hmm. Make it make sense. JP Morgan Chase CEO Jamie Dimon and Citigroup CEO Jane Fraser both said yesterday that they were going to get involved in stable coins, the latest evidence of how Wall Street is pivoting to embrace digital assets. What are your thoughts on the 180?
Well, it doesn't surprise me at all. We've embraced this for years now. I don't, I mean, they're just waking up.
Are you going to invest in Citicoin?
I will not. I will not. I don't care about it one way or the other. I don't have an account at Citibank. I do have an account at JP Morgan.
Yes, as a private client.
I mean, I seriously had an account at JP Morgan for like 25 years. I mean, they're nice. I don't know if I'll buy their stable coins.
Bat, what are some of the financial stocks doing today? Or Circle?
They're up. Yeah, they're up a little bit. Citigroup's up around 50 cents or so to 91 and change. I looked at JP Morgan. It's up to about 50 cents, a small little bit in some of these banking stocks. Again, they're mirroring the market. They're closer to their highs than their lows.
What about Circle?
Ooh, Circle. Sorry, let me get that.
No, you're good.
That's a different animal, by the way.
Well, it's a stable coin that you can trade. How is that? I mean, it's
no. I know it's just different than.
Sure, yeah, it's not easy peasy lemon squeezy to trade it.
202, let's call it. That's going to put up around $7. 202 would get it.
That's a big move.
Is a big move. It's not near its highs of almost $300, but it's definitely not near its lows of $75. So yeah, $202. It's been going kind of sideways in a big range. I'd be ranking there as irrelevant because of new stock.
Sure. You doing anything in Circle? No.
We are not.
Okay. Hey,
you look at the markets. It has earnings August 12th. You look at the markets in here; they're over $1 wide. It's a tough option trade.
Gross.
It's It's a tough stock to trade.
Nvidia hit new highs this week. Nvidia and AMD doing their part to just basically carry the NASDAQ on their backs yesterday. But Nvidia's planned resumption of sales of chips in China is actually now part of the U.S. negotiations on rare earth, according to U.S. Commerce Secretary Howard Lutnick. What are you doing in chip stocks as they just continue to rewrite the rules, I guess?
We didn't do anything in chip stocks
yesterday. Yeah. Any opportunity today?
Nvidia opened higher by $7-8 and kind of sat there most of the day. It's sitting there right there, just under 171.
I mean, AMD, Nvidia, Taiwan Semiconductor, they were all up huge yesterday, including some of the Chinese stocks. I think they're going to be a pretty good short today.
Even with low IV, you got to be careful. I'm just telling you, girl.
No, I think they're going to be a pretty good short today. I don't think they're going anywhere today, but I'm not selling them in the hole. I'm waiting. If they bounce, I'll sell them. I think the best one for me to get short would probably be Nvidia, but maybe AMD. I don't know. We'll see.
Okay. Well, speaking of rare earths, Apple inked a $500 million rare earth magnet deal with that MP materials company that I announced last week that the Pentagon had invested in and is a majority shareholder in. So now Apple's like, yeah, here's $500 million. We need these weird, super strong magnets. Okay, thanks. Bye. MP Materials was up big yesterday, obviously. Apple, MP, whatever.
We have an Apple position on. We don't have an MP Materials. I don't even know what the symbol is.
It's just MP.
Apple up around $1.
Oh, MP. We've never traded MP.
I'm pretty sure it has options, Bat.
Yeah, it does have options. It's a $61 stock. Earnings are August 7th. I'm taking a look at the options here. They're not bad, 20 cents wide. You may have did something.
I might have did something. Say thank you. Put some respect on my name. Thank you very much. I'm going to keep it moving.
Get your name out my mouth.
There's a number that just came out.
It's PPI. I told you that earlier.
S&P's up 8. Now, they did close about $10 underwater yesterday?
Yeah, thereabouts. Sure.
Something. I don't know exactly. They were about $5 to $10 underwater.
Okay. So they got some of it back.
They got a little bit back. Bonds up 7, 8, maybe.
That's the bigger move, Sal. Enough 112.07 there on the bonds after trading under 112.
Yeah. S&P's up 9. Like I said, I think I want to say that they closed $5 to $10 underwater last night. Mm-hmm. That's under fair value.
Meaning they closed a little bit weak. They closed a little weak, yes.
They closed under fair value.
A little bit. Yep.
Here's a chip stock we don't talk about a ton, but that's Broadcom, AVGO. Their chip unit unveiled yesterday a new networking processor that aims to speed AI data crunching. What are you doing in Broadcom? We just don't talk about it a lot.
No position. It's my worst stock of 2025.
Is it really?
Yes.
Wow.
I got caught both ways in there.
Oh, no.
And we're talking about Broadcom, which is AVGO trading
I got caught
just
short,
under
and I got caught
unchanged
long.
280.
You're like a Cincinnati chili. You got caught 3 ways in there.
I had a debate with somebody.
I'm funny.
I had a debate with somebody about 7-way,
3-way, 5-way, 7-way.
7-way chili over the past weekend.
I bet you're fun at parties.
He's a blast.
I gotta tell you, I have trouble with that. It's
with the city of Cincinnati.
No, not the city of Cincinnati. I've been to Cincinnati a couple times. I'm fine with the city of Cincinnati.
Sure.
I have trouble with the 7-way chili.
Okay, but it's not for everyone. So maybe you just get a 3-way. Maybe you can't handle the 7-way.
Well, you know what your problem is, Sadnov? The chili they use sucks. Like, it's not good.
The chili they use is not spicy.
Why does it have to be spicy? Have you met the people of Ohio? Do they look like they can handle spice?
If you're gonna put chili over spaghetti, you gotta get a little spice. It's missing something.
So then be like Beyonce, put hot sauce in your bag, keep it moving.
No, it can't just be hot sauce on
Oh,
everything.
that's what I think. Sazonov and Beyonce. That's the two I always think of. Put them together.
Simpatico.
Yeah.
Hey, CoreWeave stock climbed yesterday.
I could do worse,
CoreWeave stock popped yesterday after the company announced a $6 billion AI data center project in Pennsylvania. The state of Pennsylvania is getting like $90 billion in investments because they have like natural gas and like all these data centers and stuff like that. It's part of the Pennsylvania Energy and Innovation Summit that is happening in Pittsburgh. Trump and his administration are talking AI and investment in the state. Again, massive investment into Pennsylvania. CoreWeave, CRWV. What did you?
We don't trade a lot of it.
You don't trade a lot of it. Okay. Well,
142 and change. Looks like it's up around $2. Earnings are August 13. August options are kind of untradeable, to be honest with you. About 60 cents wide.
Speaking of this massive Pennsylvania deal, Google announced that they had agreed to secure as much as 3 gigawatts of U.S. hydropower in the world's largest corporate clean power pact. The deal between Google and Brookfield Asset Management includes an initial 20-year power purchase agreement, and that will be generated from 2 hydropower facilities in Pennsylvania. Oh, get that water ice. Now I want a water ice. I want a water ice real bad.
Water ice?
Water ice. It's my Pennsylvania accent, my Philly accent.
I've never had a water ice.
A water ice?
No.
Yes, you like an Italian lemonade. It's a water.
Yeah, I know.
It's the same
It
thing.
is.
Whatever. What are you doing in Google?
Not Google.
We're probably like a few deltas short, I'm guessing.
Earnings looming July 25th. Looks like it's up around $1.50.
I feel like I just report this every day, so I'm just gonna report it again. Palantir stock hit a new high yesterday. Earnings due August 4th. I literally just have nothing to say. Just Palantir just keeps making new highs. What do you do? What?
Nothing.
Okay.
I got no position out of there.
What's the IV in there, Bat?
It's all right.
Palantir PLTR 42 is pretty good. It has earnings August 4th.
Yes. Are you going to trade it for earnings?
We already have a few positions on, but we're just hoping it just sits in.
Didn't you just say you don't trade it?
No, I didn't say I didn't trade it. I said we haven't traded it in a while. We have positions on there.
I hate your semantics so much. Okay. What are your positions? Just big fat strangles?
Yep.
Okay, money bags. Hey, this is interesting. Anthropic, which is backed by Amazon, has their Claude AI suite, but they're launching a new suite of tools for the financial services sector. These AI tools can help financial professionals make investment decisions, analyze markets, and conduct research. On a scale of 1 to 10, how much validity would you put in an AI financial analyst?
0. From Claude, 0.
How about you, Bat?
Ooh.
If it's just analyzing data or earnings reports or doing back testing, drilling down, like we use some variation of that.
How would I use that? You know me.
I know. Well, I was just curious. It's called Claude for Enterprise, and they will get, as part of it, you will get real-time access to financial information through data providers like PitchBook, Databricks, S&P Global, and Snowflake. Not sure what Amazon is doing because you can't trade Anthropic.
Amazon AMZN trading 226 or so. It looks like it's unchanged, maybe down a dime with the mini S&Ps up 14. Earnings August 7th.
As you mentioned, some of the Chinese stocks were up yesterday. Baidu announced they are bringing their driverless cars to Uber globally. They will deploy their Apollo Go autonomous vehicles on Uber outside of the U.S. and mainland China. By partnering with Uber, Baidu has found a company with a widely used app that already operates in 15,000 cities globally. Baidu.
We don't have a position on right now. But it was up big yesterday.
Yeah, probably on this news.
Baidu, Sadnov, you're looking at something that you like to trade. It has earnings August 28th, IV rank of 32.
What about Uber? You trade Uber a lot.
No position right now.
Oh.
Yeah, get your act together, Sadnov. Uber 36 IV rank, earnings August 6th.
Okay. This is a weird sentence. This is a weird headline. It's a weird concept. The chain smokers, Mantis Ventures, has closed $100 million third fund. Mantis Ventures is a venture capital firm co-founded by Alex Paul and Drew Taggart of the DJ group, the Chainsmokers, and they've raised $100 million in commitments for their third fund. It's 25% larger than their previous $80 million funds, and they've invested in B2B companies like a cybersecurity firm and an AI financial startup. Can you imagine? You're like, oh, who'd you get backed by? Oh, Andreessen Horowitz. Who'd you get backed by? Oh, Sequoia. Who'd you get backed by? The Chainsmokers.
I would rather take money. I would rather take money from the Chainsmokers than Andreessen Horowitz.
I know, but it's a weird sentence because normally you think like electronic DJs, you're like, okay, you're going to have a vodka brand and maybe like headphones, but you don't think that they're going to be like, oh, let's start a venture fund. But I love it. Okay. You don't think that it's just odd?
It's a little odd when you hear about it.
Thank you, Bat. It's just,
you're welcome. I'll play with you.
Thank you. Yes, and.
You're welcome.
Yes, and. So why don't you invest in the Chainsmokers fund?
Yeah.
I don't want to, but I'm happy that they're doing this.
Yeah, okay. Hey, Bat, I pulled this for you. Roblox. I know Vinny's too cool for Roblox now, but Roblox has launched a licensing feature on their video game platform to allow IP holders to integrate their characters and worlds into the games. They signed a licensing partnership with Netflix, which would then allow developers to use characters from Stranger Things or Squid Games.
Nice.
Cool.
I'm sure Roblox not working.
You're short Roblox?
112 and change, trading near its highs. It's unchanged, but trading near its highs. Earnings July 31st.
What about Netflix?
Ooh, Netflix and chill. You know, I tried to find something on Netflix the other day. Couldn't find anything, but earnings are July 17th. That's tomorrow after the close. IV rank of 36. Looks like it's up around $1.50.
I watched that documentary on Netflix, Bat, about the Titan, about the sub that blew up with all the billionaires on it.
How was it? I mean,
it was actually good because you're like, okay, how did they get to this point? And it actually answered a lot of questions, and I thought it was well done.
Okay, cool.
It was pretty good. So do with that what you will. So you're not doing anything in Netflix either?
Not yet.
Are you going to do something for earnings?
It's a good question. The markets are a little bit better than they've been in there.
Okay.
They're a little bit tighter. Somebody wrote me an email, said like, what's a reasonable tight market for $1,000 stock? And I'm like, 0.1% of 1% maybe. Okay. 1/10 of 1% I don't know. We'll see tomorrow. We haven't done anything yet.
All right. Well, stay tuned, everybody. This is so funny. Billy McFarland, speaking of documentaries, Billy McFarland, the fraudster who brought you the Fire Festival, he sold the rights to the brand on eBay this week for $245,300. We don't know yet who the buyer is or what they plan to do with the cursed IP. He literally went to jail for this. He came out, he's like, we're going to do Fire Festival 2. And then that was like a flop. But then he sold the brand for, I mean, Game gotta respect Game. Like, if he's getting almost $250,000 for his shenanigans, I don't know what to say. Like, scammers are gonna scam. I'm not a fan of this.
I'm not a fan.
Who would give him 204? I don't understand who would pay for this and what the value is.
It's a good question.
In that regard, I'm mad at eBay for even sponsoring this. Bat, what's eBay doing?
Sadler, have you ever bought anything on eBay? I'm gonna say no.
Probably not.
I like
77
eBay.
and change, basically unchanged. Earnings are July 20th. They are looming. eBay's near its highs.
This is interesting. If you watched the All-Star game last night, you will have seen the debut of some new technology. Baseball's ABS challenge system was used at the All-Star game, and it shows we need it in real games immediately. It refers to the automated ball strike system, and it uses Hawkeye tracking to monitor pitch locations. And basically, when the home plate umpire makes the initial ball or strike call, the ABS system allows players to challenge calls they believe are incorrect.
And it worked.
Yeah. Yeah, but normally it had only been used in the minor leagues, and then last night it was used in the All-Star game. So
I know there's a bunch of purists out there that hate this. I freaking love it. It's so much better.
Okay.
Can't stand those umpires.
Is it gonna slow the game down again? I mean, they finally got it fast down there.
No.
So in the All-Star game, each team only had 2 challenges, and then they would retain the challenge if the call is overturned. MLB is evaluating the use of ABS during spring training and the All-Star game, but they haven't yet implemented a plan for the full league.
Yeah, I just wish everybody would do it like hockey does. You can challenge in hockey, but if you're wrong, you get a 2-minute penalty.
Oh.
And in baseball, I'm thinking like, you know.
And in football, don't you lose like a timeout or something?
In football, you can lose it. You lose a timeout.
Yeah.
But in baseball, you get 1 challenge during the game, unless you're right, of course. And then this thing they're saying too. But I think that these umpires, they're just not that good. They try, but
they're not that good. How the heck do you locate an orb going 104 miles an hour in the time-space plane?
Well, that's the whole thing. So Wimbledon went to full electronic.
Sure, yeah, and then the players complained.
Well, they can complain all they want, but it's great. I mean, these guys serve 130 miles an hour.
Sure, no, I get it.
There's no way you can see it that fast. The baseball, they throw 100 miles an hour, and these umpires, no, they got to have this.
Yeah, all right. Hey, finally,
I liked having the pitcher mic'd up. I thought that was cool. I listened to that. That was fun.
Oh, I didn't know that. That's cool.
Yeah. Clayton Kershaw
was
him all mic'd up. It was fun.
Yeah.
Don't they have to like bleep them out? Because I would just be cussing to myself.
They kind of do. But
okay, I was gonna be like, I would just be, depending on.
Throw a slider, but I don't actually have a slider, so.
That's
right. I mean, it's unrealistic. I mean, during a game and stuff, but it was kind of cute.
I think it's good that they let Kershaw pitch because
for sure.
I thought he was retired. How old is he?
He's 100.
Oh wait, I was gonna say. I was like, wait.
I mean, because I believe Kershaw's from Atlanta.
Oh, okay.
He's from Georgia.
Yes.
And so it was kind of like, they were throwing him.
They brought Ludacris back and Jermaine Dupri. He's 37 years old. That's old.
Who, Kershaw?
Yeah, I just Googled it. March 19th, 1988.
Yeah, well, he just threw his 3,000th strikeout at, Dodger Stadium.
Yeah.
And I heard my son was there. He said it was really cool.
Okay, that's great. But he's 37 years old. But good for you. You get that bag, Clayton. You do you. Hey, following today for my viral video of the day. Anyone who's met me knows that I love love. Like,
You love what?
I love love. I love romance. I love couple goals. Have you ever?
No, I've spent 14 years with you. I'm gonna give you a little pushback on this, but go ahead.
I love love. I don't love you. There's a difference. No, but I just like, have you ever like dressed with like alike with your wife? Have you ever like coordinated outfits or like you're going
It happens all the time, but inadvertently. I mean,
My wife would kill herself.
I'm just saying, but she elevates your she elevates you.
She would kill herself. She would kill herself. If I said let's dress like, she would go. I
meant like complimentary, not saying like totally matching.
Sometimes we wear the same color just because, like, I don't wear green.
Thank you. Yes, like complimentary. Yes.
Sometimes we both wear shoes. Sometimes.
Fine. You know what? I will take it. But I saw this video go viral, and it is just like peak couple goals. I don't know who this man and woman are, but they are on vacation and they are having the time of their life. Watch this.
He's whipped.
Mima and Papa with the shoulder shimmy. They are amazing. Please protect them at all costs. That's the goal, right? Is to be married to your best friend. To be married to your best friend. That's the goal.
That's the goal. But I'll answer for you. I'll get you out of this segment.
It just makes me happy. That's all. Leave me alone. Bat, what's coming up next?
On that note, I'm going to let you out of this segment. I'm going to take a quick 90-second break and get back. We got more Tasty Live after this with Confirm and Send. Good job, Vanetta. You love love.
I don't love you.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with confirm and send. But before we do, let's take a look at the market. Even the S&Ps, after the number came out, caught a little bit of a bid. They're up about 15 or 16 handles. You can see last night they were a little weaker, unchanged when we came into the number. Traded down to 62.57 and change, and up to right where they are right now, 6,300. So enough more sideways action in the market. As you can see here, for the last week or so, we've really been going sideways, wrapped around the 6,300 number. NASDAQ up 22, Russell up 14, and the Dow up 172. Volatility in by 31 cents. Volatility really not catching any of a bid yesterday. Certainly no bid today, down 31 cents. Bonds caught a little bit of a bid, Sadnoff. They're off of their highs of 112. Ooh, sorry, I got to put that number first. 16, but well off of their lows of 111.25 made prior to the number. They're 112.09, up 10 ticks right now. Bitcoin with a little bit of a bid, 119 and change, up 2,400 on the futures. Ethereum doing the Ethereum thing, Sadnoff. Ethereum is sneaky, up another 4%, up another $132, over 31.84 right now on Ethereum. Oil down 56 cents. Last few days of slide continuing there. Gold up $4 and change. Gold been going sideways too, Sadnoff. Goldman Sachs was the earnings play, well inside the expected move of a very small expected move. It's up around $6 or $7 right now. Tonight you have UAL, GE, Pepsi, TRV, and ABT. That's all I got.
Yeah, we'll do probably. I think we have a Pepsi position on small though, but and we have a UAL position on. That's about it. And we have a Delta position still, which I don't know if that'll be impacted. All right, let's do it. These are emails that came into us overnight. I'm ready. Kind of liking this little rally in the NASDAQ here for a good place to get short. But we'll see. Maybe too early. We'll see. Confirm and send. It is Wednesday, July 16th. You mentioned yesterday you mentioned Netflix was untradeable because of $2 wide spreads. I understand this. And I know we want a very tight spread. I'm curious, though, does the spread preference ever change for higher price stocks? For example, does the stock trading at 1,200 ever get 1 or 2 cent wide spreads, or does price matter? That being said, I often wonder if you have a back-of-the-envelope formula for deciding what is tradable and what is untradeable.
I don't have a back of the napkin one, but I may have a back of the envelope one. No, there's really no formula for it. But I will say this: $1,200 stocks will never be penny wide. Just remember, the counterparty does something against everything that you do. So everything you do gives the counterparty some delta. And then typically they'll go in and buy or sell stock or add it to a position that they already have. So the markets on the stock dictate the bid-ask, dictate the market on the options typically. So if you have 50-cent wide markets on a stock, you'll typically have a little bit tighter than that market on the options. If you've got $3 wide markets on the stock, you're going to have typically wider or at least that wide markets on the options. So you can look at the stock bid-ask to try to find the bid-ask on the options.
So that's very fair answer, but I also do have a back of the envelope, back of the napkin hack. And my back of the napkin hack is when you're looking at a stock, and again, this is just a back of the napkin hack. Think about things as 1/10 of 1%. So if you have $1,000 stock like Netflix, right? Mm-hmm. 1/10 of 1% would be like $1, right? Wide.
Okay.
That'd be an acceptable market for that. When you think about that with like a $10 stock could be a penny. So $100 stock would be a dime. I mean, these are all reasonable numbers, right? I'm not saying it's perfect because you can have a stock like the SPY, which is a $600 stock, which has a 2 cent wide market. You can have a stock like Apple, which has a 2 cent wide market, which is, a $200 stock. So there's definitely stocks out there that are more liquid, that are better. You can have an Nvidia, which is a $170 stock, which the markets are a penny wide. So you can definitely have much tighter than that. But all I'm saying is if you want a back of the napkin hack, 0.1%.
Okay, that's fair enough.
Yeah, it's just a ballpark. Let's go next slide. So when you're putting in an order above the market, how do you determine your entry price? Like if you just want to put something, like let's say you bought something for $1 and you want to sell it higher, how do you determine what price you're going to put it in at if it's above the market?
How do you determine your entry price? So I want to sell something significantly higher than where the market is right now. I'm not interested in like finding out the mid price, right?
Right. No,
Okay,
something you just bought for $1, then you have to go wait for a couple hours. So you're going to put an order in where if you want to sell it?
Right. So I mean, you look at the delta of the spread, and that's the amount that the spread is going to move on a $1 move in the stock. All things being equal, and volatility doesn't change. So if I wanted to sell something when the stock was up around $1 and the spread I had on was around 10 delta, I'm gonna move my price on this, 6, 7, 8, 10 cents, something like that. So I look at the delta of the spread or the delta of the option.
That's the most correct answer you can give. That's the theoretically correct answer. I think a lot of this is very subjective to like what's going on in the market. Everybody has an idea. What we've taught you here on Tasty is that our technology really gives you an idea of what the expected daily move is. And so like I wouldn't be outside of that. I'm usually inside of the daily move just to be smart. Like if I bought something, let's say I bought an option for $1, and just like Tony said, the daily move, on the spread or the delta on the option we bought is, let's just say 50, just for argument's sake. And the expected move in the underlying stock for the day is like, is like $1, just to use crazy examples. Like I wouldn't expect to make 50 cents on that, which would be kind of the max. So maybe 25 cents. So a fraction of whatever the daily expected move is based on your delta. That's kind of how you determine your entry price. But what we do is we kind of just, we just pick a level based on something that's inside of the daily expected move or the monthly expected move or the, however many days the position goes out. It's very subjective. You want to be above and then adjust down. You never want to be too low, You always want to be too high and then adjust down.
Sure.
Let's go to the next slide. So what happened to all the prop shops that used to exist? I remember back in the 90s, they were as ubiquitous as Starbucks. Where'd they all go?
I just don't. I mean, there are still a few out there. They just couldn't compete with some of the larger prop shops like the Citadels and the Jumps of the world. So they get gobbled up.
I think what this person means is like the retail prop shops.
Give me an example of one that's gone away that they're talking about.
I don't know the names, but just like where you would go to, like you put up some money and they put up some money for capital, things like that.
Yeah, that's kind of what I'm talking about. I mean, those kinds of shops were fringe players at best from back in the day. I mean, I don't really have an opinion on that. So I don't have a good opinion, so I'm not going to say any opinion.
There were lots of we ran a prop business for years, but it was a professional prop business, so we were market makers. There were a lot of retail prop shops back in the day where like you could go and you could either trade in an office or you could, or basically it was for capital. So you could put up a small amount of capital and then they put up the rest of the capital. The problem is that the regulators came down really heavy on that part of the business. And so they pretty much all disappeared. There's a few pretty big ones that are still left. I don't know how legit they all are. I think the fees are very high. I think you have to be really careful. I think they limit what you can actually do, especially option-wise, risk-wise. but there's still a bunch of professional prop shops. There's there's fewer retail prop shops. It's mostly a regulatory thing. The regulators came down really heavy on the whole prop shop business. Let's go next slide. So Tasty has been talking about optimal mechanics for option trading and positions. But even though 20% of your portfolio capital is used for scalping, we never talk about optimal mechanics for scalping. Holding until you're right and having a directional bias has worked for me so far. And it looks like directional bias is a function of experience in the markets. But are there many mechanics that the research team has looked into regarding scalping?
I mean, it really all comes down to size. I mean, if you've been able to hold and wait on a position. Now, we've had some good not good two-sided action, but we've had some two-sided action, but it's been day after day, one day higher, one day lower, one day higher, one day higher after that, and then another day lower. So it really comes down to size. I think futures trading, now that we have the micros and you don't have to trade the minis, it's a lot easier for people, but most futures are too much. The notional value is just too much. I mean, most people aren't trading 500 shares of SPY when they're trading, but yet that's the size of an E-mini.
You know, this is good because this person kind of nailed it. You know, holding until you're right is not the worst thing. You can have a direction.
It's no way to go through life, though, Sal. No, if it's
you can have a direct when you're scalping. When you're scalping, you can have a directional bias, and you can hold until you're right. And I don't know that there's too many other skills. You know, listen, I like Tony. Tony and I together have been scalping for over 40 years each. We grew up in this business as scalpers. To this day, we remain as scalpers. Like, we still love scalping. It's one of the most fun things about trading. So nobody can talk to me about scalping and say, oh, you don't know what you're talking about. I literally built this business on the back of scalping and everything like that. I mean, this is how we started everything and did it for 40 years. Now we stay small and kind of wait till we're right. Back then we traded large and hoped we were right. I don't, like, it's much more of a feel. It's an engagement. It's a feel. I mean, I can't say that we should do some more pieces on scalping, but it's not the easiest thing in the world to talk about because so much of it is subjective. The research team, now I'm not really interested in their mechanics as much because they don't scalp that much, just because, they don't have the capital to scalp, and it's also not productive for us as a firm to have our research team scalping. But we want them trading, just not scalping. But yeah, we'll do some more pieces on scalping because there's so many questions. But staying small, just like Tony said, because they have micros and stuff now, and waiting till you're right, pretty good advice.
Yep.
Let's go next slide. I'm about to embark on my first options trade. I've been listening for 7 months to Tasty, but I kind of have analysis paralysis. I'm going to be trading in a small account of around 10K. I just don't know where to start. Do you have any basic advice to get me going, or can you point me in the right direction as far as content goes?
Again, I'm trading a small account around 10K. I just don't know where to start. Most liquid products, liquid stocks that you like. I mean, I have no problem with you going into a SPY and a Q just to get an exposure in a lower capital account, like a $10,000 account, because you're going to be limited on the amount of positions you can have just by how much money you have in the account. I would try to go as wide as possible. I would probably look to sell both sides as a new trader and let the stock kind of beat me. I would want my positions to have over a 65% pop when I place those trades. I'd rather you go less contracts than more contracts. I'd rather you go wider than tighter with your spreads. But I think you need to mix it up a little bit too. I would have no problem with you doing some directional diagonal spreads. You say you do analysis paralysis to bet a couple of dollars on yourself. You'd be surprised. Take a look at how much theta decay or how much risk you have, and then divide that by how many days you have left. You know, on a 45-day strategy and $450 debit, let's just say, I'm just using easy math here. You're looking at, $10 a day or less in directional risk on that trade. It's less than the price of a cup of coffee. You can make the trade. So I'd like to break it all the way down and show you your daily risk. Don't drink coffee. I've said this before. Don't drink coffee that day and pay for your options exposure.
If you've been listening for 7 months, you're ready. You're champing at the bit and ready to get going. I would love to see you just do anything. I don't care what it is. Buy a cheap little vertical spread, buy a cheap option, sell a cheap option, sell a cheap vertical spread, do whatever you want. You're, like Tony said, you're probably risking a few dollars, $5, $10, $25, $50 max. You got to get your feet wet. You got to learn how to use the software. You got to learn how to watch the markets. You got to learn how to adjust a position. You got to learn how to take a profit. Do something with a high probability of success. Just get your feet wet. Just get in there.
Yep.
Jump in the water. It's not that cold.
Yep, you have to. Yep.
Let's go to the last slide. On Tuesday morning, you made a comment that you wouldn't be surprised if the market turned around. It was up at the time you made this comment. What did you see that made you think that? Because we did close down.
Oh, you were copying what the bat had been saying for the last week or so. So yeah, and it came to fruition. So listen, imitation is the sincerest form of flattery. So I have no problem with it. Good job out of you, Tom.
That is the worst answer I've ever heard in my life. That is not what happens at all.
It's the God's honest truth, though.
Not even close.
Yeah.
So on Tuesday morning, I made the comment because if you listened on Monday afternoon, we had said, I'm waiting for the first day the market opens higher because for some reason, every time it opens lower, we just go higher. But when we open higher, it seems to go lower. So I kind of, it's the contrarian in me. And I was not going to be surprised at all. I was surprised at the magnitude of the down move yesterday. I was not surprised that there was a down move yesterday. Listen, it's just a contrarian talking there.
And it wasn't even really a down move. I mean, let's
it's 35 handles.
We've been up.
It was 35 handles in the S&P. That's okay. I mean, it's just a contrarian talking their book. But, and every once in a while, the blind squirrel gets his nut. That's all we were. But, I mean, to be fair, we think that way almost every day. So it wasn't that amazing a call. But I did think the first time that they opened higher, we would go lower.
Very good, sir. And you know what time it is now? It's time to take a quick 90-second break. So we're going to come back. We got a Tasty Bites segment for you coming up next. Those smaller accounts that wrote in, this is for you. We'll be back in 90 seconds. It's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
A little cantankerous, but...
And I'm not cantankerous. Why does anybody ever say I'm cantankerous? I'm not cantankerous. I don't even know what that means, but I'm not cantankerous.
Do you want to know what it means?
Yeah, what does it mean exactly?
Bad-tempered, argumentative, and uncooperative.
They laughed.
I heard laughing.
It's perfect.
I'm not bad-tempered. It's not my design, period. I don't want to be with you losers. All freaking losers. Degenerates. I'm not going to your stupid hat store in Manhattan.
Argumentative.
That's not Empirical Ham.
Well, they say it is.
No, they don't.
You just said she's vegan.
I didn't say vegan.
No, she's pescatarian. Okay.
Pescatarian. Never heard of it. Occasionally.
And uncooperative.
No, I'm cooperative. Yeah, what else you need?
Yeah, nothing.
There you go.
Okay.
Beautiful.
I could be
You're
argumentative.
68% cantankerous, okay? There you go.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tomas,
What?
We are back, my friend, and you know what that means. Time for a little bit more Tasty Live and Tasty Bites. Even the S&P is up 11.
Yeah. I got to kind of get in a game plan for today. I'm working on my game plan.
Game plan, or you don't?
I don't have a game plan yet, but I'm kind of getting there. I think maybe a Dewey Wackerman Howe on the opening.
Ooh, really?
But mostly, I think it's going to be the chip stocks.
The chip stocks are going to be the ones that go lower, you're saying?
Today. Yeah, a little pullback from yesterday. Yeah.
What about the overall market itself?
I don't know.
No.
But I think the chippies are. I think I got to do a little. I think I got to sell a little bit.
Okay. Because that's worked.
It has definitely not.
Volatility down another 19 cents, trading down to 1935. So if you got a key on volatility, you need a little volatility expansion before this market goes lower. Oh, look at you selling your Nvidia already.
Just sold a little Nvidia.
Just over 171.
Ooh, I was going to sell some BABA, but it's too low. And it's already down a couple of bucks.
Getting short China? You're a China lover usually.
I know, but I thought it was time to sell it today. And I want to sell some.
Every market has two sides.
We're going to sell some AMD too if we can get it off around 155.50 or 60 unchanged. All right, let's do this. Let me just get this order entered. Done. You're done.
Ethereum up $50. Sold off a little bit. Cut its winnings or up move by 50%.
And all these stocks are down just a little bit. Okay. Well, we sold a little Nvidia. We got trying to sell some AMD now. All right, let's do this. This is Tasty Bites, smaller accounts, somewhere between 2,500, 25,000, that kind of thing. So the team put together a piece called Synthetic Options, a capital efficient alternative. Let's see where the research team's going with this one. So trading stocks requires substantial upfront capital. Consider this: buying 100 shares of Amazon at $225 per share will require $11,250 in a regular margin account. That's putting up half, borrowing half. This creates a significant barrier for many small accounts, for account traders who want market exposure without heavy capital requirements. One of the reasons I just traded Nvidia, because in Nvidia, it's $171 stock, so you would have to put up a little over $17,000 if you without margin, and a little over $8,500 with margin. That's expensive if you have a $10,000 account. Let's go next slide. So synthetic positions offer a capital efficient alternative to direct stock ownership, and it could be long or short. It doesn't matter. So instead of buying the shares outright, we can create a similar market exposure using a combination of options. So long a call and short a put is the equivalent of long 100 shares. And short 100 shares is short a call and long a put. It's the exact same thing. We call those combos. And those combos are long or short synthetic stock. And you can use any strike you want. It's not 100 shares, but whatever delta you pick, that's the number of shares the equivalent is. Let's go to the next slide. So since option positions are much more flexible than simply long and short stock positions, we can adjust the deltas on either the put or call sides to meet our requirements. So at a minimum, we want to collect a credit at the order entry so we don't lose time value. Next, please. So at the money, synthetic positions closely mirror, they're actually perfect, positions with a delta of nearly 100. Providing almost the same directional sensitivity as owning 100 shares. Yeah, they're literally one for one. When those things all expire, they're gonna flatten out. Let's go next slide.
Correct.
Meaning long call, short put, and your underlying stock, they're just gonna all offset. So the pop remains around 50%, similar to stock ownership, and the risk reward profile maintains a linear relationship that matches the stock performance. The key difference is capital efficiency, allowing us to achieve equivalent exposure with a much lower capital requirements. The BPR for Amazon synthetic is 5,600, about 50% of what's required for long 100 shares of Amazon. You're saying, well, why is that? It's a different margining system. That's all it is. Stocks have
Makes
one
sense.
and options have another.
Yeah, and different regulatory. Yep.
No, same regulators, just different margining system. Let's go next slide. So when using out of the money options, instead, it can also improve your position several ways. It further reduces the BPR, which is 3,900 for 30 delta options in Amazon. And out of the money synthetics typically have lower delta, 75 in the example we have on the screen in front of you, which reduces the directional risk while providing meaningful market exposure. So you don't have to be 100 deltas. You could be 80, 70, 60, 50, 40, 30, whatever you want. And it just requires less capital if you do that, because obviously you're taking less risk. Let's go to the next slide. The probability of profit increases to 65% compared to 50% with out-of-the-money options or stock positions. If we enter the out-of-the-money synthetics for credit rather than paying a debit, it slightly improves our risk-adjusted returns. The trade-off is a different risk profile between the two strikes. It requires the stock to move above our long strike to be profitable at expiration. Let's go to the next slide and take a look. So the major benefit of trading synthetic positions is the reduced buying power. We're all about capital efficiency. And the reason you would do this is just liquidity, capital efficiency. So here's the pros of synthetic: lower buying power, potentially higher return on capital, and a better probability of profit. The long stock, way easier to manage. The cons, they'll expire, and you need to roll the position. And the cons on stock is high buying power, and it's always a 50-50 shot. That's it, 50-50. Next, please. So several important factors need attention when managing synthetic positions. The position delta fluctuates continuously with the stock and as time passes. So unlike stock positions, which have a constant delta of 100 for holding 100 shares. And then the other one is at expiration, the delta becomes either 0 or 100, depending on where the stock closes relative to the strike prices. So traders may need or should close or roll the positions in the same synthetic position. And you have to do that just to eliminate a bunch of the risk.
Yep.
Let's go to the last slide and take a look at some of the takeaways. So synthetic strategies provide an effective alternative to stock. They significantly reduce buying power and improve win rates. And they're super simple to use. And these positions allow traders to modify directional exposure and risk profile more easily than traditional stock holdings. More active position management is essential for synthetic positions. What these guys are describing here is our entire life, just so you understand.
That's correct. I was just going to say that you have to be able to look at a position and know what you're synthetically long or short also, just by looking at the position.
This is all we've ever done is, use synthetic strategies as an alternative to stock to modify our pop.
Very good, sir. Let's take a quick 90-second break. We'll come back. We got the moment we've been waiting for. Sounding off the opening bell, imminent. We'll be back in 90 seconds. Let's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
A little cantankerous, but...
And I'm not cantankerous. Why does anybody ever say I'm cantankerous? I'm not cantankerous. I don't even know what that means, but I'm not cantankerous.
You want to know what it means?
Yeah, what does it mean exactly?
Bad-tempered, argumentative, and uncooperative.
They laughed.
I heard laughing.
It's perfect.
I'm not bad-tempered. It's not my design, period. I don't want to be with you losers. All freaking losers. Degenerates. I'm not going to your stupid hat store in Manhattan.
Argumentative.
That's not empirical ham.
Well, they say it is.
No, they don't.
You just said she's vegan.
I didn't say vegan.
Oh, she's pescatarian. Okay.
Pescatarian. Never heard of it. Occasionally.
And uncooperative.
No, I'm cooperative. Yeah, what else you need?
Yeah, nothing.
There you go.
Okay.
Beautiful.
I could be
You're
argumentative.
68% cantankerous. Okay, there you go.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tomas, the opening bell is imminent in about 2.5 minutes or so. Even the S&P is holding steady right now. They're up 13 handles, Sosnoff, 1325 to be exact. NASDAQ up 10 and change. Russell up 12 and the Dow up 162. They're all up around the same on a percentage basis. I guess the NASDAQ on a percentage basis is the weakest of the group, but it's minimal at best on all of them. Volatility in by 24 cents to 1930, back near its lows, not exactly on its lows of 1920. And not on its lows of flirting with the single handle, the round number of 19. Bonds up 13 ticks, on up 112.12 after trading up to 112.16 and under 111.25. Is the bond move over, Sosnoff?
Yeah, you think you're going to rope me into giving you an answer on that?
Bitcoin up $2,400, 119.2 or so. That's rounding up by a skosh. And Ethereum up $45 after being up over 100 earlier today. I thought it was up over 100. I got a high of 31.86. 31.73. I don't know. I'll have to go back to my. Oh, I'm sorry. Ethereum. There we go. That's where I was looking at. Ethereum futures. I apologize. Up 134. They're up the same. They haven't moved. I apologize. Silver. Oil down 76 cents. Gold up $5.20, and silver basically unchanged, up a couple of small ticks. Sosnoff, you had a Goldman Sachs position, I believe, correct? Goldman Sachs trading 706 on the bid.
No.
Oh, nothing. Goldman Sachs. Oh, I thought you did.
Nothing, honey.
Well, Goldman Sachs looks like it's going to open around $7 or $8 higher.
I do not have a position on. I have a small
UAL for earnings today.
I have a small Pepsi position on, which we are up about 50 cents on right now. I don't know if I'll keep it tonight.
UAL up around. Oh, you sold your AMD, my friend. UAL up around $2 on the opening. Pepsi, you said you have a position that has earnings. It's up around 6 cents. Let's see what else is moving in the market here. You just click on net change. You can go from top to bottom or bottom to top. I'm going to AMAT, sorry, down $6. Baidu, after being higher yesterday, down $4. Marvell down 2 and change. Baba down $1.40 or so. Looks like your Chinese stock getting a little bit softer here on the upside after being bullish yesterday. Circle up $9. Netflix up almost $6. ARM up $6 and change. You sold it at 155.61. It's 153.60 and change.
No.
Oh, you sold AMD. I'm sorry.
Yes.
Sorry. I made a mistake. Bad eyes. AMD 155.58. Yeah, sorry, Saz. You're up 3 cents. I'm sorry. I thought you were up $2. You're up 3 cents. It's more in line with what you're used to.
Yes. Thank you so much.
Coin catching a little bit of a bid here, Sosnoff, up $5 or so.
Coin,
yeah, that's one you've been looking to kind of short these days. It's up $5.
Yeah, no.
Yeah, no. Nasdaq down 9. Sosnoff. Nasdaq is the only red on the screen.
Yeah, I haven't really done anything yet today. Let me just check my. I have a tiny position on in Pepsi. Like I said, I'm probably just going to get out of that. And then UAL, that one I haven't. I gotta figure out what I gotta do something in UAL because I got a kind of an inverted little weirdo position in there.
Well, if you're inverted, at the very least, you should probably take a look at what strikes you have, and then make it back to a regular strangle. If you're looking at there, save you buying power.
Yeah, no, I will. Yeah, I'm just looking to see if we have any problem children first thing this morning. Maybe Google spies. Maybe Google spy. That's about it.
You have a positive P&L. I mean, you're crying with two loaves of bread.
That's just because I'm an exceptional trader.
That's just because bonds are up 13 ticks. That's what that is.
That's just because bonds are up 13 ticks. Yes, that's exactly what that is. Yeah, there's not much to talk about here yet so far. Looking at some of the problem children, Roblox, spies. I'm a little short here. I gotta be honest. I'm a little bit short.
Roblox up almost $1.89. Hasn't had a downtick in what seems like forever. Roblox has earnings coming on July 31st.
Yeah. UAL to me is going to probably be the most of the interesting of the earnings plays. Given we also have a Delta position on, and given what happened the other day in Delta on their earnings, Delta's 56 and change. IB rank is 23. I'm probably going to leave my my Delta position on, even though the markets in there are pretty crappy. I don't know if anybody trades Delta, but the markets in Delta are very mediocre for a $55 stock. Not great. So I'm going to try to adjust my Delta position and then put on a UAL. What do you think in UAL?
Oh, man, I think the move is going to be muted to the upside just because of what you just spoke about a moment ago, how all these stocks had a little bit of a rally on the Delta Airlines number. So for me, I think the upside is going to be muted. Now, the expected move is only $6. I guess that's a little bit higher than most, but the IB rank is only 31. So I think the pot odds favor the downside in UAL.
That is interesting because after that Delta move, it's clearly messed me up a little bit, but the stock is 86 and change. Expected move is $6. I'm, with 2 days to go, I'm a put seller.
I know you are.
I kind of like.
Well, if you're not going 2 times the expected move, you can't really do that on the 2 days.
No, you're going at the expected move. You're going to be
at best. It's probably a both sides sale, Sosnoff.
Could be. I'm working it. Nothing done.
You can do your 2 puts in 1 call if you really want to, because you like to be difficult.
I doubt you're going to see. I doubt very much you are going to see a move like we saw in Delta Airlines. I just doubt it.
Yeah. Yep. You're picking up some of your Delta from that SPY August call spread you sold. You sold it at $1.96, trading at $1.77. I mean, you're not used to making 20 cents on a spread. Do you think it's time to take that off?
You're pretty funny. Like I find you to be somewhat amusing.
Amusing?
Yes, you're amusing me. But no, I don't plan to take that off.
Okay.
I plan to buy that back at, you know what price? $0.
$1.
0, mister.
Oh, 0. Oh, no, I will buy that. I will buy that you paid more. You will not hold that through expiration, 100%.
0. Anyway, not filled on anything here yet. So working it. Yeah, we got a pretty mixed opening. Nvidia just rallied. maybe we can lay some Nvidia out again. NVDA.
Nvidia trading over 171, 171 and a half.
Yeah. I bought some back. I'm just going to scalp Nvidia all day.
Is that what you're going to do? Yeah, you bought it back at 68, 70, 68.
I'm going to teach you a little lesson in scalping.
You know what? I love when you do, because it makes for a good show. I mean, you need the validation of scalping something.
All right, I covered my Pepsi, and
you covered your Pepsi, and you
widened.
What did you do? Widen your strikes in Delta?
Yeah, because I want to keep it on, but the IB ranking there sucks. I'm offering puts in United, and I'm gonna work those until later today. I think they'll may pump a little juice in there later today. Who knows? Yeah. Well, anyway, hopefully we'll get some trades on with with our trades from our customers on what's your assumption.
That's right. What's your assumption is coming up right now. So I don't know if you're ready to take that quick break. NASDAQ down 31, even the S&P is up 12. A little tug of war here, Sadnov.
NASDAQ looks a little heavy.
Thanks, Mr. Obvious. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with What's Your Assumption?
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
If you missed the live show, here's our cherry on top weekly recap.
I did let off fireworks. I should have brought a video. I honestly have never paid attention to the amount of powder in there. And they say it. So like those are like 200 grams of powder, right? And so I got a 500 one this year. So it's usually me and my youngest Austin. We literally, it's like this. It's like. Nah, dead serious. Like I don't mess around.
Tom and I normally park on the same level in the parking garage. And so when I go to get out of my car, I have all my stuff, and I see big signs on the door, elevator out of service. I was like, that's not gonna be good for Tom.
I looked at it for like 5 minutes.
And he was like, blink, blink, blink.
I'm like, this has to be a mistake.
So Bat, what he's doing now is he's asking people around the office if they will go get his car for him because he can't walk up the 4 flights of stairs.
I see you looking at my hair. You're like, you keep looking above my head.
Who can't? You've got the beard and I mean, are you like showering with Rogaine or something? What's going on? You're like going full Sasquatch.
I don't understand.
I have not been able to spend the time.
Sasquatch.
The sassy guy. Yeah, look at him. He's proud to wear it.
I was trapped once on the Air and Water show.
Oh.
I was trapped on a boat, like a big giant yacht for an Air and Water show.
These are not actual problems.
Yeah, it was. We were 200 yards off of the North Avenue beach, and I could have, technically, if I could swim, I could have made it in.
Okay, but you can't swim. We've already discussed this. You have negative buoyancy.
I went to America's Cup race here. It was the trial.
Look at you with all these rich guy activities. America's Cup.
No. Remember they had the trial for it?
I am black.
I went to that on a boat, and I was trapped out on Lake Michigan. They won't let you back into shore until like after those races are over. So you're out there for like 12 freaking hours. You run out of food. You run out of everything. You're hot as hell.
Your thong is starting to chafe.
Yes.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With what's your assumption?
Bam, 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 bam.
What do you say about that?
Bam, 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 bam. You know, today has started off as kind of like the good news is bonds up 20. They were down a point yesterday, so it's not a big deal. But S&P's up 10, let's call it, but they were down. They closed underwater, which means they closed under parity by about 10 handles last night. NASDAQ was weak yesterday. It's weak today. It's down 30, 35 right now, nothing much. And the Russell with a kind of an anemic bounce after yesterday's pretty huge sell-off in the Russell. Looking at the rest of my screen, Bat, nothing else is...
it's all quiet on the Western Front, Sosnov, and volatility down 18 cents.
Yeah, not a lot jumping off the screen at me. Apple up kind of big. Google, a few stocks. Not that much. Goldman Sachs, your big earnings play up $1.80.
Yeah, well, it's crazy how that expected move was so low, and yet it was even lower than that. I mean, I know it opened up $5 or $7, but still.
Yeah. Yeah, not much there.
No.
Delta Airlines has been the biggest earnings outlier so far. It was kind of like the first stock, and it was up way outside the expected move. But since then, everything's been kind of inside it. But there just hasn't been a lot of juice. We played J.P. Morgan. It worked. We did not play Goldman. Obviously, it would have worked, but we didn't play it. I think we will do a little something in United Airlines today, but we have not gotten filled on anything yet. Currently in United, Bat, let's take a quick look. Currently in United, my position is we have the 77-100 strangle on. That's not really that interesting.
No, not really.
Yeah, in Augie. I don't know where they're going with this one. I don't know. What do you think? Anywhere? I don't know.
I don't think so. I think it's a both side sale.
Yeah, I kind of feel like the same way. I mean, it might be. I don't know. Yeah, I don't feel like it's I don't feel like there's a lot there. But anyway, yeah. Let's take a look and see. These are assumptions, trade assumptions from our viewers all over. Let's see what they got.
Sure.
The first, Jackie from Playa del Carmen, Mexico. Have you ever been to Playa del Carmen?
I don't think so.
That is the Mexican Riviera, you know.
Okay. That's for fancy people then. I'm a man of people, Sosnov.
I'm going to bet a lot of money you've been there. You just have no idea you've been there. But I have been to Playa del Carmen many times, and not for a while, but I've been there many times. Hopefully we'll get back there. I am going to be actually doing 2 shows in Mexico in August. We are going to be in Mexico City.
That's right.
We're going to be in Mexico City. I will give information to people that are in Mexico City if they'd like to come by. And we're also going to be in Guadalajara. It'll be the second time we've been in Guadalajara doing a discussion for a grad school and PhD class, and really looking forward to a return trip to Pan American University in Guadalajara. They have an amazing trading platform, trading program and business program. And we also backed a bunch of traders there, and they've done exceptionally well. They have, little side note, this class in Guadalajara at Pan American University, they have tripled their account.
Wow, that's awesome, man.
Trading as a class, not as individuals, but trading as a class.
Power to the masses.
They trade almost every day. They discuss their trades. They have tripled their account size.
That's awesome. I mean,
It's
that's
amazing.
really great. I'm all kidding aside. That's phenomenal.
No, it's amazing. It's freaking
Yep.
great.
Yep.
So,
Sadnov, my Taiwanese peeps from Mexico say Playa del Carmen is a party town, and sold that you've ever been there.
I have been there multiple times, and when you go to Playa del Carmen, you actually go to the it's a series of hotels, along the water, and then there's a little town.
Oh, it's called Mexico? Yeah. Yeah. Okay. What do you when you go to Mexico, what do you usually do? Like go in for the pottery classes in the middle of the country?
Guadalajara is in the middle of the country. I'm going there for the alcohol and the food. But no, Mexico City is not on the beach either. So, but Playa del Carmen, yeah, it's the Mexican Riviera. We've been there. I've been multiple. I can give you a lot of hotel recommendations, a lot of restaurant recommendations. Anyway, go back to that slide, John. I got to see what they want to do here. Jackie W, ETHA, playing a high IVR instrument for a quick vol scalp, an alternative way to trade crypto, selling the August 2026 strangle. Tony, you've traded this before?
Ooh, I have not.
ETHA, Augie options.
Yeah,
these are
right.
Markets are okay.
Markets are good. Markets are good.
All right, Jackie, let's do this. What strikes?
I mean, this has been on fire lately. You know that,
well,
right?
we're gonna move these strikes up because, just because the move it's had. We're gonna go 21.28. Okay, and mid price is about mid price is 151. Let's try that first. 151.
I like the IV rank of 73 in there too. You don't have to worry about earnings because
mid price is 150 now. And take a fill. And you know what? We like that trade so much, Jackie. We're gonna do it again. Still have some stuff on in there. So we did 2 tranches.
Not one, but two mints in one.
Yeah, man, United Airlines is not the easiest stock to adjust. All right, good job. Thanks, Jackie. Let's go from Playa del Carmen to Lincoln, Montana. Wow. Ted from Lincoln, Montana. What do you got here for us, Ted?
Ted from Montana. Montana Ted.
Montana Ted. I like it. He's got, what is this? These are LE. Was this cattle or hogs?
Sosnoff, you know what LE is. Come on, it's live cattle.
I know. IV rank of 91. Woof. What is cattle? I haven't traded cattle in forever. It hasn't had a downtick, right? Yep.
Hasn't had a downtick. You are
from
correct.
Lincoln, Montana. He's looking at some. I thought they only have like bison in Montana. Put spread, nice IVR. I need to make enough money to buy a steak in the next month. I just don't see any prices coming down. Ted, I'm going to Montana. Going to Montana soon. I'm going to Montana next for skiing in the winter. I'm very excited. My first trip to Big Sky. Lincoln, Montana. I don't know exactly where that is, but we're going to go to August. Let's see. We're going to go. Oh no. We're going to go to, in this case, we got to go to SEP because it's different. It's commodity. It's not standardized. And
so SEP with 51 days as opposed to August with 16 days.
Yeah.
Of course, that's what you're going to do. Right.
Yeah. And I don't know a lot about, I'm trying to figure this out. Let's see. You want to do a put spread. So we'll buy the at the money, the 220s, and we'll sell the 218s. Okay? And let's see, if we do that, max profit is 430, max loss is 350 on one contract. Let's see what this is first. Let's see where we can get filled. So we could leave this in, or we could just go for a fill. Let's take a fill. Let's just test it out, Ted. We'll see. We did the, we bought the 220s, sold the 218s. We did small, just we'll do more. If it rallies up a little bit more, it's up 52 cents right now. Maybe we'll get lucky and get filled a tick or two better. Let's just try that for now and see what happens. Let's go next slide.
Lincoln, Montana is just about 45 minutes from the airport, Sosnoff. You'll be able to find it.
From Bozeman?
30. No, from it's called Humberside International Airport. It's an international airport.
Oh no. Anyway, we went from Mexico, Playa del Carmen, to Lincoln, Montana, and now we're going to Santa Catarina, Brazil. I like this. We're all over the world today. Santa Catarina, Brazil, SoFi. We have not traded SoFi in a while. Stock's up. Oh, wow. This stock's had a monster run.
It's about 2.5 hours from Bozeman. You're never going.
Monster run here, Edmund. I like this. Ratio spread. I like these trades today, Bat.
Okie dokie. Well, as we just started, we'll disappoint you soon.
Tasty Nation has come to play. Bearish in SoFi wants to sell a ratio spread, sell 2 of the 26 calls. We're doing August. Sell 2 of the 26 calls by 1 of the 24 calls. By 124, sell 2 26s. Sure, we'll do this. It's a small credit. It's like a 10-cent credit or a little less. But SoFi is pretty liquid stock. I think I'm gonna have. Oh, all right. Filled at 9 cents. 9-cent credit.
Okey-dokey.
All right, we'll take it. Let's go to the next slide. So, very funny. Vlad from San Francisco. Vlad happens to be the CEO of Hood, so it's cute.
Yes, this is some inside information. He's bullish on Hood, but Hood's already 101 and change, Sadnov, so I hope he put on this trade. It's up $1.80 today.
I definitely did not put on this trade. I think this is cute. I'm not going to get long Hood at over $100, Vlad. So I think you've done a great job running this company, and you've taken the stock from $8 to $100. You should be proud of yourself, but you better get back to work and stop watching Tasty. Let's go to the next slide. We're not going to buy Hood at 100. Kev from Denver, Colorado. We will be in Denver, Colorado 1 week from tomorrow. We're leaving tomorrow night. 1 week from tomorrow night. The Bat and I will be in Denver, Colorado. So we can't wait to see everybody. By the way, Mr. Batista, pretty good size, pretty decent size sell-off here.
Even the S&P is down 50 cents. NASDAQ's down 91. I mean, unchanged. Is that what you're calling a pretty decent size sell-off? 15 handles? Boy,
no, not really. But I'm just saying the NASDAQ move is pretty good. We have a bunch of.
NASDAQ's been the weakest, as you foretold.
Yeah, we have a bunch of short verticals in the NASDAQ. We're going to just cover just a tiny little bit of them at $1.13. We sold them a lot higher. So anyway, Kev from Denver, Colorado, what does he want to do here? Oh, Merck. I've been doing call spreads all spring on this. The price is stabilizing. I feel like it's either going to stay here, bounce up because the stock is cheap. How about a broken?
Yeah, you sold that spread around $1.50 and change about give it 13 days ago.
Yeah, not
nice
a bad
hold.
Not a bad trade.
No, good hold.
Yeah. I don't do a lot of short vertical spreads, but I did some this time around. He wants to do a broken wing put butterfly in Merck. Can you get filled in Merck? Maybe. Yeah. All right, let's see what he wants to do. So he wants to buy. Oh, what you mean the 85 puts? What does he want to do here?
He wants to be neutral.
Yeah.
Time frame is AUG 22, AUG 29.
I got it. So he wants to do the weeklies.
Yes.
This is a tough one for me. I got to do the monthlies because otherwise I'll forget about this position. So let's see. He wants to buy the 85 puts, sell 2 of the 80 puts. Right? Fine.
That's correct.
Let me do this. And buy 1 of the 70 puts. Right?
That's correct.
So I'll buy the 85 put one time, sell 2 of the 80 puts, skip the 75 puts, and buy the 70 puts. This trade is actually for a debit. But that's okay because it's an interesting trade and Merck doesn't move around that much. So we're going to try. And you're saying, well, why would you do a broken butterfly for a debit? Because this stock doesn't move that much. Just like he said here, price is stabilizing. Let's just try it. I think it trades around 65 cents. And I don't do a lot of broken butterflies for debits, but we're going to try. See if we can just get filled. Nothing done yet. All right, let's go to the next slide.
Next slide we go.
Not filled yet, Kev. Tony from Phoenix, Arizona. EFA.
Hey, Tony.
EFA. What is this? This is the EFA is Europe.
It's an ETF, Sosnoff. It's the iShares ETF on.
It's which one? iShares ETF.
Yeah, EFA.
It's Europe, right?
I believe so. Let's take a look.
Okay, summer doldrums bearish. EFA seems illiquid. My memory is it's pretty liquid. How do we fade this move? Are there any products or strategies? Are currencies the only options to trade? Oh, yeah. You know what? So EFA, I mean, you can trade this. What are you trying to do here? You're a little bearish. Summer doldrums. Yeah. It's got an okay IV rank. You know, you got to have a pretty strong opinion in here if you want to trade EFA. It's a stock. It's developed market countries outside the U.S. and Canada. So like Europe, Australia, Far East. It includes Belgium, Denmark, Finland, France. So yes, Northern. So Tony, Netherlands. Here's my issue with this stock. Filled Merck, by the way, 67 cents. Nice. Here's my issue with this stock. It is a little liquid, but it's got 16% implied volatility. And at 16% implied volatility, there's not a hell of a lot there. Right. Do you know what I mean? It's just. I agree with you. It's a real challenge to squeeze some money out of this thing. I'm going to pass just because this is. I don't know how to. Honestly, I don't know how to make money there too. I have plenty of currency positions on. I'm not sure. I don't even know what I would do in here. Let's go with a 16% volatility. Let's go to the next slide. Win RCL Microsoft. What? I'm short all these at bad levels, and I need help getting them lower. Don, we're not. This is a little outside of our. It's a little outside of our skill set. That's for sure. Well, TSM, you have earnings tomorrow. Is it today or tomorrow? TSM, Taiwan Semiconductor. Oh, Taiwan Semiconductor. TSM looks like it has earnings coming on tomorrow, so tomorrow morning. Right. So it's the play for today. Taiwan Semiconductor and and UAL are kind of the plays for today. We already covered our Pepsi. Win RCL. Okay. So Don, I'm short Microsoft and a little RCL, but the RCL doesn't matter. Short Microsoft. I don't know what to do yet in TSM. I can't help you, dude. These stocks have been insane. I wish they go down too. I do. Let's go to the next slide. Oltar from Cyprus. Oh, now we're going from Brazil over to Cyprus. This is the stock Vanetta talked about earlier today, MP. MP Minerals. August expiration. Stock's ripping on good news. He's bearish. I can see that. Seems a bit overdone. Markets are not terrible. Perhaps sell the 75 calls. Problem is these call spreads are super cheap. I don't love these out of the money. There's so much upside skew in here.
I was going to say there's a lot of call skew. That's why the spreads trade cheap. The options themselves trade expensive. The single options.
If you're going to sell a call spread, you got to sell the 60-65. You're going to sell
which is basically at the money, right? With the stock at 55.
Yeah. And the put spreads trade expensive. Call spreads trade cheap. Put spreads trade expensive. I'm going to sell the 60-65 call spread.
Okie dokie.
I don't know where these things. I want to just test the markets for a second. Looks like mid price is 145. I think that's a little cheap, but I'll try it.
For just out of the money spread, yeah, I would say it's cheap.
I think it's a little cheap. Well, nothing done yet because the stock just dropped 15 cents. We're going to keep working it. Let's go to the next slide. I'm working it. I've never traded that stock before, so I'm just taking my time. TLT Roberto from the south side of Chicago or the Netherlands. I'm going to take Netherlands for Roberto. TLT, I like the stock. Selling the August 15, 82 puts, 88 calls. I agree with you. I like the stock too. I'm a little bit long it. Selling the August 82 puts are too cheap. What do you want to do here? Let's sell. I'm going to sell the 84 puts and the 88 calls for $1.32. Take a fill, Phil. I got a little bit strong. I got a little bit more. I got a little bit long in there, Roberto. A little bit more than you, but or a little bit longer than you wanted to. But let's take a look and we'll see. I can't fill this crazy MP stock.
Yeah, it doesn't look like it's that liquid, to be honest with you.
No, and the markets are not good.
Yeah.
Filled 140.
Just as you say that, 143.
143. Don't love it, but it is what it is, and we'll see what happens. Let's go next slide. All right, Roberto, we'll see what happens. Richard from Redmond, Washington. Bullish. Unlike every other company that's quick to replace all their workers with AI, Uber is, well, let's be honest, drivers will probably be replaced eventually. I've never, ever get short Uber. Stock scares the living crap out of me. It's $91. What does he want to do here? He wants to get long.
Really? It's been on a 5 or 6 day slide, so maybe you like it here. Down to $1 today at 91 and change. Ivy rank at 35 is pretty good.
I do like it.
August 6th.
I do like it, and I agree with him. And I think it's time to sell the 80 puts.
Yep.
I think you can get 91 cents for them. Well, I'm trying. Stock's down to $1.10. Maybe we'll get it in a second. Let's go to the next slide. Filled Uber. Man, they squeeze you in there. Like Batista. Who's making markets in there? Batistas? Let's see what else we got here. Who is making a market? ETHA, we sold a strangle. ETHA, we sold a strangle. It's the first time
we want some more of your Q spread back, Sadnov.
Yeah. Yeah, just taking off the ones we put on a bunch. I'm just taking off some of them. You know, I guess just maybe lightening up a little bit for the winter.
For the winter,
yes. For the summer. ETHA, we sold a strangle. It's the first time we've sold a strangle in the Ethereum ETF. So we'll see what happens. LE, we bought a put spread in live cattle. I don't think we've done that for a long time. I don't even know. SoFi, we sold a call ratio spread. I kind of like those first three trades. Hood,
yep, me too.
Hood, I don't believe that Vlad was actually writing in with a trade recommendation. Merck, we sold a broken wing call butterfly. I'm sorry, we sold a broken wing put butterfly. So our position is a slightly bullish. EFA we passed because EFA we just passed. TSM we passed. We're gonna do TSM trade in a little bit. S&P's down 6 now. NASDAQ down 100.
So this is the low. This is the lows of the day. Russell bucking the trend up 7, and Dow only up 10.
Bonds bucking the trend a little bit.
Bonds going higher by 18 ticks, 112.17. They need a little bit of a bounce. I know you needed it too.
MP, that's that mineral stock. We sold a call spread. We stayed small in there. TLT, we sold a strangle with a little bit of bullishness. And Uber, we sold a naked put. We did 7 out of 10. Thank you very much.
How does that make you feel, Sadnov? How does that make you feel?
Well, it makes me feel good because we needed to get some trades on.
Let's take a quick 90-second break and come back. We got the skinny on options, Matt. Immediately following these messages with my man Jacob. We'll be back in 90 seconds with Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000%, and I made a bunch of money, and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win, and it was mostly failures thereafter that. And I thought, I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into Tasty Live. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend. You know what that means? Enough out of you. We got my man Jacob in the house. The skinny on options, Matt. How are you, Jacob?
Good morning, Tony. Good morning. I'm well. Oh, I'm just noticing that the slides today have no numbers on them, but we'll just survive. There's 6 of them total.
Okay, don't worry. We can get through this.
I can't do slides without numbers. I just can't do slides without numbers.
Well, that's why I'm here, to help you get through it. I know when you're by yourself, you really need to have, your eyes on the prize.
That's right.
For sure.
But it's all right. How are you two doing this morning?
We're special.
You're special? It's a special morning. That doesn't sound good.
No, it's a good morning so far.
All right. I'll believe you. So yeah, yesterday you had Thomas's first piece, and it went over really well, and it was all about how IVR is the greatest thing since sliced bread. And I don't disagree, but I do feel like, the power of IVR is that it collapses a very complicated concept of volatility into just a single number that you can sort of use regardless of underlying, regardless of situation, with you need a little context, but very little context in order to make it a useful number. But that means that you've thrown out a tremendous amount of information in getting there. So today I wanted to, do what we should do for a skinny, which is embellish on that or look beyond that and see what we can add to what we can consider in addition to IVR once we're sort of sufficiently familiar with IVR to give ourselves more context and nuance and understanding about upcoming behaviors.
Mm-hmm.
Okay.
And possibly, spot an opportunity or two that I think will be a relevant takeaway.
Ooh, I like opportunity spotting.
Yeah. It's
better than whale watching.
Yeah. You can't whale watch in Chicago. There's no whales in Lake Michigan.
We're big whale watchers.
I mean, I live in Santa Cruz, where you actually can see whales. Actually, there was a whale vertebra on the beach this past weekend that was pretty exciting. It's enormous.
Oh, I imagine. Wow, I've never seen one.
That was a cool thing to wash up. But yeah, let's talk about volatility and get really in depth into all of the ways one can look at volatility and deal with it. So firstly, we're going to talk about what volatility is, where implied volatilities come from, how we deal with the whole volatility surface, and then sort of look at our volatility metrics like rank, percentile, and skew. So to give us our mathematics of the day, if we accept the efficient market hypothesis, then every asset has to be, the current value of an asset has to be the risk-free rate adjusted average of its future possible values, right? That's what it means for the current price to be correct. If you don't believe that, then you think you know something better than the market, and you should just trade the arbitrage that you found over and over again. I personally don't think I have that sort of insight, so I'll take it as given that every asset price is a martingale. Now, there's a very powerful theorem in probability called the martingale representation theorem that says that any martingale, and there's a little thing I'm sweeping under the rug here, everything has to be square integrable, which is the same as being L2 finite. But we don't need to talk about what that means. You can't have things that blow up really fast, that don't die off quickly enough in the tails, but that's rarely a problem given that everything we deal with has exponential tails. So there will be a predictable function, sigma t, and predictable here means that given all the information up to time t, you'll know exactly the value of sigma. It doesn't have any randomness baked into it there. It's fully readable off of the past. And then a standard Brownian motion, just a normal, a limit of random walk. It goes up or down by 1, like flipping coins, and you shrink the size of the steps and you speed up the flipping of the coins, such that the value at time t is given by its initial value plus this stochastic integral. And so the way to interpret the stochastic integral in sort of a discrete manner is that you look at sigma s and you look at what how the Brownian motion moved from time 1 to time 2, and you say that st moved by sigma 1 times that distance. So if the Brownian motion went up, it went up. If the Brownian motion went down, it went down. And how much it went up or down is how much the Brownian motion moved times sigma. Ignoring the fact that this should all be happening in the log space and not the price space, this sigma t is the dynamic volatility of the price, right? But so it's volatility, but it changes moment to moment, and all it means is that the price behaves exactly like a Brownian motion, but sometimes it's faster and sometimes it's slower, right? Sometimes it takes bigger steps and sometimes it takes smaller steps, and the size of those steps is given by the volatility, not the direction of them, but just their size. So that gets us to what is volatility. Right? Volatility is this dynamic process saying how quickly an underlying price is moving, or any asset price, but we're primarily concerned with underlyings. If you can't sell options on it, we don't care. All right, so that gets us to volatility. Now let's think about how implied volatility comes into play. And the idea here is that you can either say in the Black-Scholes model, or throwing that out and saying, well, we know the Black-Scholes model isn't exactly true, then instead we'll say, well, given an option price, there's a single value which, if volatility was constant between now and expiration, would make that the fair price of the option, right? So down here is like the price of a call should be the risk period adjusted of its future price, which should be its value at expiration, which is the difference between it and the strike times the probability of it being there. And so the implied volatility of that option, right? So the implied volatility of an option is the volatility that, if constant between now and expiration, would make that option price correct or fair. Each option, therefore, has its own implied volatility, right? And there's options with different expirations, there's options with different strikes, and so you can stitch them all together, and you make what's called the implied volatility surface. Now, of course, the surface requires that we fill in gaps. Really, it's a bunch of dots, right? Because we don't have between strike values and we don't have between expiration values. But you get something roughly this shape. And under a typical underlying, it's going to be lowest at the money and lowest sort of in its term structure, right? Whether or not it's lower further out in time or closer in time, that has more variation, right? It can depend on earnings reports or anything like that. But typically we see sort of higher values closer in. But that's not as much of a given as the closer to the money being lower values, right? But that's not saying that. That doesn't say the Black-Scholes model is wrong. It does say that the market doesn't believe that returns are log-norm distributed. It believes that they have somewhat heavier tails than that, especially to the downside, as we'll see in a couple of slides. But so that gets you this entire volatility surface, which if you're, really looking to commune with the volatility, you should probably try to study the surface directly. That's where it has the most, that's where all the information is in the implied volatility surface. But that's probably too much information for anyone to actually use for their daily decisions. And so we're going to go on to the next slide where we're going to try to come up with different ways to collapse this whole surface down, right? I don't want to have to judge, is volatility high or low by looking at, a sheet thrown over a series of pegs, right? That's essentially what this surface is, right? I've got a little peg at each option price, and then I stitch them together by throwing a sheet over the top. And, there's a minimization process to make it as smooth as you can. But that's too much. So instead, we're going to collapse it down. And let's look at, there's a couple of ways we can do that, and we'll look at them. So to reduce the whole volatility surface down to a workable number, there are a few approaches. And the first step is that we're not going to collapse the surface. We're actually just going to collapse a curve, and we're going to do each expiration separately. This is probably a reasonable thing because except for super liquid underlyings and super short term, the spaces between expirations are pretty big, right? It's a month or at least a week or, quarterly. So the sheet was pretty kinked up between them. So we don't want to put too much faith in that. But picking one expiration, we're left with a curve. And now we've got a couple of options about how to try to extract a single implied volatility number from this curve that, changes with the strike. The simplest thing one can do is just use the at the money IV. to say that at-the-money options are the most accurately priced because they're the most sensitive to the emotions of the underlying, and so that's the one that we should trust the most. And you can use the at-the-money IV as your one. Alternatively, you can be slightly more refined than that. The platform uses IVX, which is a weighted average where it takes the at-the-money IV, but it uses a couple of the first out-of-the-money strikes as well, and does a little bit of a weighted averaging of them, just to give you a little bit more sensitivity to the structure and a little bit less like possibility of, oh, one option got expensive and the whole thing looks funny now. And then there's the VIX, which is sort of the opposite of this. It takes the whole idea that we were going to use the model and the martingale theorem and the efficient market hypothesis, and it throws all that out. It says that market regulators don't like hearing you talk about advanced mathematics. They want to have something be a like portfolio basket, a collection of tradable assets. And so CBOE has a very clever approach where they sort of have this custom built or, mathematically derived conglomeration of option prices on the SPX that give in their totality a reasonable approximation of SPX IP, right? By being a combination of a bunch of different option prices, it can be more acceptable to regulators without having to go through like an integral, which they would say is not acceptable. That's not a pricing method they're comfortable with, but they are comfortable with a big sum. So that's what CBOE did. So that gets us the VIX, the at-the-money IV, or the IVX. Any of those, right? Which one you choose to use probably doesn't make that much difference. They'll come out with different results, but like if at-the-money IV is higher one day than it was the previous day, then IVX is probably also higher, and the VIX is probably also higher. So as long as you're being sort of consistent in which one you're looking at, it doesn't make too much of a difference how you consider them. But then now that we've got a single number, right, we took the whole surface, we collapsed it down to an expiration, then we collapsed that expiration down to a single number of an implied volatility number. And now we want to know, like, is that implied volatility high or low for the underlying, right? Am I getting good or bad prices in my option trading is what we're going to want to get to. And we'll do so momentarily when we talk about the implied volatility rank. So given that number, it doesn't necessarily mean the same thing, right? GME moves around a ton relative to its price, whereas SPX is relatively stable versus like TLT, which is hardly moves at all relative to its price, right? It has very small moves up and down compared to its base price. And so you don't want to just try to go into a new underlying and look at its IV and think to yourself, well, that's good or bad or an opportunity or not. And that's why we have implied volatility rank and implied volatility percentile, because those give context within the scope of the underlying. Let's go forward one and we'll look at them. Rank and percentile. Yeah. So once IV has been reduced to a single number, it can be thought of in the context of its underlying. And we've got two ways in the platform to do this. We've got IVR, which is sort of the cornerstone of much of our approach, and that's because it gives you a linear judgment of how the current option prices are, right? When option prices go up, the IV goes up, the IVR goes up, and when IVR is high, it means that it's near the top of its range. And if it's low, it means it's near the bottom of its range. It doesn't say how much time it spends near the top of its range and how much time it spends near the bottom of its range. So it doesn't give you a good reason to think that, right, IVR is not really the metric to use if you're trying to profit off of Vega, right? If you're trying to profit off of volatility contraction, IVR can be a little hard to interpret in that sense because it doesn't tell you how often these values are occurring. It just tells you, are they high or low? But as an option seller, it does tell you if you're getting a good amount of credit or not a good amount of credit. And that's sort of why it's our first rubric for, is this an appealing underlying, right? If IVR is low, then no matter what else is going on, you're just not getting that much money for selling options in it. The implied volatility percentile, which the platform will also show you, isn't linear and doesn't tell you how these things, right, if it's currently high or low, right? If something it tells you how often it's above or below the current value. So if you have some sort of, some sort of XYZ underlying is almost always very, very low volatility. And then all of a sudden it has one day it has a little bit of a pop in volatility. Its IVP might jump to 95 because it just isn't that high very often, even though the prices of its options only went up by like a couple of pennies. And so that's why we don't want to use just IVP as a metric for determining a good trade. But personally, I like taking them together. I like if something has good IVR and IVP above 50, then I think that I'm getting a good price and there's a reasonable chance of seeing the volatility come back down because it's above its median value. right? IVR is more of its strength of its volatility, whereas implied volatility percentile is more about its frequencies. Right, so there's its size and its frequency. You can take them together. It's very easy in the platform to set up both columns for yourself, and you can look for underlyings that have good both. Once you've got an idea about what qualifies as good IVR. And then the last thing I want to talk about is sort of to re-expand the surface, to look back at, or at least the curve, to look back at the fact that we collapse all this information out and see where we can get a little bit more by looking at skew. So let's go forward one. I'm sorry about the size of the text on this one, but it's
yeah, it's gonna be hard for Tom to see.
Yeah, it's okay. You guys have talked about skew for a while. So skewness in probability theory is a measure of the asymmetry of a distribution, right? Everything's average, it's mu, and its volatility is, and when you cube it, right, and the expected value of the cube of the difference between the mean and the value divided by the standard deviation. When you cube it, that means that the really out there values count a lot more, and the values that are pretty close to the mean count a lot less. And as a result, it means that it gives you a measure where if its skew is positive, you're getting mostly values a little bit below the mean, but occasionally values way above the mean. And negative skew is the reverse. And since 1987, after that crash, pretty much every underlying distribution shows negative skew, or has implied negative skew, right? That the puts have a higher implied volatility than equally out the money calls. And that's just a fact of life that we live with, but it means that we can be sort of mindful about what the current state of skew is. Now, most people aren't going to do this expected value computation with a cube in it on their own. So I think a reasonable thing to do, though, is similar to the VIX. CBOE publishes the skew, which is a very similar formula to the VIX, but with the cube weighting instead. And that gives sort of an easy way to get an idea about what the market's current degree of negative skewness is, right? At 100, it's normally skewed. At 150, it's above. And below, it's below. And how can this turn into an opportunity? Well, it lets you know things like if the put skew becomes more extreme, then that means that the puts are even more expensive and the calls are and the far out of the money calls are relatively cheap. And that can tell you something like that you can get an extra cap, like that your poor man covered calls are going to be more capital efficient because the amount you're going to have to pay for those, long dated leap options, that synthetic stock call is going to be relatively cheap because of all the put skew. And conversely, when skew falls, right, if put skew retracts somewhat, then a poor man's covered put stops being sort of a silly joke that we tell each other and could be a reasonable trade because all of a sudden you don't need that much capital to actually purchase the securing put. Which is the reason that, once you've got IVR under your belt and IVP under your belt, but you still don't want to introduce trying to look at the entire volatility surface, you can start factoring in skew, which will give you an idea about where you want it. It doesn't tell you a directional, right? Of course, the market, right? Everything's a martingale. There is no direction. There is no market valuable directional assumption, but it does tell you sort of which direction you can find better credits in, right? When the put skew is high, you are going to get more out of your puts. You can push your puts further out of the money, and you won't need to keep your calls closer in order to collect good credits. Where when the put skew gets lower, or things become more symmetric, then you can make your trades a little bit more symmetric as well, and try to keep track that way. I think those are all the things. They can do takeaways. These are relatively straightforward. Nice big text. Each option has its own implied volatility, and taken together, they form an underlying implied volatility surface. In order to use this as a practical tool, you sort of have to come up with a way to extract a single number from it. And IVR is the cornerstone of our trading methodology because it provides the most direct measure of the available credits. But after you've mastered IVR, you can start introducing other metrics like IVP or skew to try to judge opportunities and gain a deeper insight into both the underlying volatility and its future price expectations. How'd that feel, Tony?
So it felt wonderful. Are you finished?
Yes.
Oh, good. Sadness, did you learn something?
I like the IVR IVP piece because we get a lot of questions on that. And I mean, I don't understand the math. That's the hard part for me. But I get the rest.
Yeah. I mean, but the idea here is that you want to identify your most important metrics, but then once you're comfortable using them, you can start adding nuance to them by considering other metrics, as long as you understand what each one is telling you. We want to focus on the fact that IVR tells us about how big the current credits are. IVP tells about how frequently these credits are available, and then skew tells us about which side of the money you get better credits on, or which side of the money the big moves are expected to.
Yeah, a lot of it's like kind of common sense for us, but I get it.
I mean, common sense for you. We have viewers who have not been doing this for 30 years every day of their
No. I know.
Don't ask questions, Jacob. Don't do that. Don't question what he says.
I get it. All right, cool. Thank you, sir.
Wonderful.
Good job, my friend. We're gonna take a quick 90-second break and come back. We got more Tasty Live style enough. That's right, with your friend and mine, oh joy, Mr. Scott Sheridan. Next, we're back in 90 seconds. Tasty Live.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents? I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Now, don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you're watching. I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field. Baseball game. It was a wonderful evening. It was a warm summer day, 1982. It was around 82, 83. I don't know, sometime around there. Yeah, 83. 83, let's say. It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day. No, we were playing. We played softball on the same team.
16-inch?
12-inch. With gloves. Because we were hand models at the time. Yes. I played third base, Tony played right field. You've been dying to say that, haven't you? We took him, he was a charity case.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Tomas, that's right, my friend. Enough out of you. Nothing unchanged about this, man. Even though the market's unchanged, that's right, Mr. Scott Sheridan, always coming with the heat from the Scott Sheridan Studios. Mr. Scott Sheridan himself.
Hey.
Woo!
Wow.
Woo!
Oh, wow. Small golf clap. Wow. Wow, nice to see you guys too. Tony, are you in black today?
I am. Yeah, darkish, blackish something. Yeah.
Darkish. 3 black shirts and a...
But you know what? The best thing about it is...
That's close. It's more gray, but it could be black if you washed a lot and it faded.
Yeah.
I got it.
Hey, Tom,
There.
zip down the quarter zip a little bit for me, though.
show a little skin.
Please tell me.
Show us the skin.
No, please tell me you have a T-shirt on underneath there.
He does not. He does
You went
not.
commando with a zip?
It's insane.
I
texted my dad. That was the first thing I said. I was like, "Does he have can't he wear an undershirt?"
You have to put a T-shirt on under a zip. I
don't want to. It's too hot out.
What if you zip?
He's got no underwear on too. He just goes over.
As we go Omaha.
What?
I don't own any underwear.
I know you don't.
What happens if you zip a little?
Just lets it
too close
hang.
and you get caught.
Ooh, then then it's emergency.
Well, he's got no chest hair, so that's.
Yeah, he's got a couple.
Yeah,
he got a couple.
He can get
He got a
skin.
little
I mean,
couple
if he's not fully stretched out, he bends over a little. There's skin there.
Ooh.
I could, we got a bleeder.
Yeah. And then we got a problem.
40-year-old virgin when they do the
good.
that scene
when he gets the wax on.
Where he gets the wax.
He really did that.
Yeah, that was like improv. That is one of my favorite
I
scenes.
couldn't even imagine what that feels like.
The best.
The scene, it's the lines from Something About Mary. We got a bleeder. Do you remember that scene?
Oh, he gets his.
Yeah.
Yeah.
We got a bleeder. That's great.
It's so good.
I think we're all going to hell.
Something About Mary.
You love that movie.
I love that movie.
I think I have to watch that again. Levi's actually doing the IMDb top 50 or 100 of all time. It's a strong effort.
That's
to get through.
Cameron Diaz, right?
Cameron.
Is that Cameron Diaz?
Yeah, it's Cameron
Yeah.
Diaz. Yeah, where he says he liked whatever. I'm not saying that. It's inappropriate.
The hair gel.
No, when he likes he worked with whatever. I'm not kidding. So,
like the beginning of that movie when he asked her to go to the prom with him, she goes, "Well, maybe if nobody else asked me."
So watching the top, I think 50 of all time
movies.
Yes.
This is what he's.
Well, I don't know how long it's going to take him to get through it.
What's the number one?
Well, here was his choice last week when I'm talking to him. I'm texting him. He's like, well, I'm watching Aliens. I'm like, Aliens from like the 80s or 90s? He's like, yeah, I'm watching not in order, but I'm watching IMDb's top 50.
Yeah.
His other choice besides Aliens, you're not going to be happy that he went with Aliens. Goodfellas.
So he had to choose between.
Well, he just picked. For some reason,
it's a great movie, but he won't like it.
Goodfellas?
Yeah, because he'll say it's dated. Like it's exactly what my son said.
See, I think it could.
The original Alien is from like what?
1980s.
Yeah.
I think it's the 80s.
Alien vs. Predator is pretty good.
Yeah, but those are
the original Alien. I think was from.
I didn't like the original Alien.
You didn't?
I don't like it. No.
Oh, it's bad. I think
Sigourney Weaver.
Yeah, I don't think I've seen it since the 80s.
I didn't like it. It was a weird.
But the number one, well, I don't know if it still is, but for a long time, the number one movie by every expert was Citizen Kane.
Oh, that can't be.
I tried watching it. It's not watchable.
Yeah. Will you freaking stop it? I haven't seen it. Sosnoff hasn't seen it. And my son hasn't seen it.
That's pinky up stuff.
Which one? Citizen Kane? Go Google top movies of all time. I guarantee you.
It's just like
I guarantee
I started to watch it like 30 years ago.
I turned it off. Right, me too. Mine was like 20. Same thing. I'm like, okay, if this is the greatest movie of all time, I got to watch it.
No, I couldn't watch it.
It's too old. Like
The sneaker for me. No, then I was in high school, but I flat out refused to watch the movie, and then finally my mom convinced me it was Casablanca. That is one of the all-time great movies, and that will hold up for sure.
Eh.
No, not. When was the last time you saw Casablanca?
Not for 25 years.
I'm 40-year bid.
I don't believe you.
I'm 40-year bid.
It's okay. It's just really long and slow.
Not that long.
Yeah, I don't believe you.
It's
you don't believe what? Me or Tom?
I don't believe you really like it.
Yeah.
Me? Well, the great thing about Casablanca
it's like 12 Angry Men. Have you ever tried to watch that?
Is if you ever have seen Annie Hall, which I'm assuming being a good Jew, you've seen Annie Hall.
Annie Hall, yeah.
Great movie.
Yeah.
Annie Hall begins, the beginning of Annie Hall is the ending of Casablanca. And I'd seen Annie Hall like 10 times before I saw Casablanca. And then I'm like, oh, well, I know how the movie ends. Not that it's a spoiler alert.
Annie Hall I liked.
Annie Hall was great.
Yeah, every Jew has to like Annie Hall. It's
That's
like
what
a
I
movie.
said.
It's your movie.
I said. Right. I said being a
It's
Jew.
your movie. It's your
movie. It's your people.
It's your people.
It's your people.
people's
When
movie.
they show the split screen between the Jewish dinner and the Goy dinner, it's great.
Annie Hall's great.
Yeah, I mean, unfortunately, we don't. Did he get fully canceled or is he partially canceled?
Partially.
I think he's fully canceled.
I think he's fully canceled.
Really?
But I don't think he cares.
Yeah, I think when was the last time you heard about anything about Woody Allen?
Well, he's old now. He's got to be in his 90s.
I don't think so. How old's Woody Allen? I'm going to say he's in his 80s.
I could say he's in his 90s.
It's pretty good if he's in his 90s.
He's 89 years old. 89 years old.
Close.
I don't
There we
know
go.
if it's closest without going over. Mr. Sheridan wins again. Congratulations, Mr. Sheridan. You get what's behind door number 1.
Which is nothing.
Which is nothing. What do you see?
which is nothing. All right. Did you tell Tori about the pizza, by the way, so she placed the right order for today?
No, I didn't have.
No, I'm sure 100% he did not.
No,
I didn't have the guts.
Yeah, we're getting Art of Pizza, and they're like ripping on me because they always say she orders the wrong pizza, which is my fault.
Oh, she orders the pan, which is their worst pizza.
She orders everything. It's stuffed, pan, and thin.
Yeah, there's a little bit of everything.
Thank you, Nick.
What do you want?
Stuffed.
It's so funny how the pan pizza tastes so much worse. Like it's so
unbelievable.
horrible
I know.
compared to this. It's unbelievable.
How about the thin? Will you eat thin?
Yeah, I like theirs. It's okay.
Yeah, I like the thin. I go thin.
See, and we're doing.
But you don't go to Art of Pizza for the thin. It's
I
like
agree.
going to a Chinese restaurant for a burger, and they
It's
make a
good.
good burger.
I agree
Like you
with
don't
him.
go.
I agree with him. Scary, but
Of
I
course
agree
you
with
agree
him.
with me.
So, I don't know what happened to you guys. You don't go.
No. I agree with him.
Their thin pizza is solid.
It's okay.
Yeah.
It's okay.
It's okay.
That's good.
It's not a differentiator.
Yeah, but you don't go there for the thin pizza.
I
They
go
make
there
a
for the
great
thin.
artichoke
I go
too,
there
but
for
you
the
don't go
thin
there
pizza.
For the artichoke.
I agree with you. I agree.
Here it comes.
I know you do.
Now you're going to
Thomas. I'm
throw
trying to
out
convince the other
the
guy.
chopped brisket that I also eat. You're going to throw out the Dover sole that we're having tomorrow night. It's definitely being
You
ordered.
say we. I'm not eating.
Yes, you are.
So.
I'm putting it on
It
your
doesn't
plate.
do anything for me. It's a waste.
Well, fine. I'm paying for it. So what do you care?
I don't care. I'm just saying.
Right. So eat the Dover sole when I throw it at
Boring.
you.
I don't want the Dover sole.
Tony, are you coming tomorrow?
No, sir.
I changed the
Wait,
reservation.
wait. Can I have some time to think about it?
You have until game time, which is 5 o'clock tomorrow, to make a decision. I changed the reservation to 6.
I'm going to be a few minutes late, so just make sure you order my hash browns with the onions.
Do you like them any
If
special
you
way?
think if you think I'm going to stay downtown and wait to have dinner with you, Saz, Chucky, and the other wonderful people,
Steve, Bob, Pete.
Slappy, Dewey, Louie, and Hooey. I mean, no, I ain't interested. Thank you very much, though, for the offer. I appreciate it.
That hurts my feelings.
Oh, he's cruel.
Yeah, you are.
I go with you, Scott. I mean, and I would enjoy the Dover
You
Sole
can
with
sit next to me.
I don't think so. I think he's cruel.
I might join you at EJ's this weekend.
The problem is just don't make it too many people, because then I think for sure we're stuck
Going
in
the
the
back room.
For sure. Tony, could you at least make the reservation? Because apparently you get front room tables.
You know some people.
I do.
Right?
I do.
Could
I
you, even
do.
if you don't come, could you at least make the reservation?
You know what? I would, but the last time I made a reservation for Sosnoff, myself, and the boys, I got there maybe a minute after those guys, and they all took the power seats facing the bar. Like somebody's going to look at them and say, "Ooh, I want to be part of that table." It was like Sosnoff followed by Slappy.
You know what? When you're not present, you come in pretty hot.
Yeah,
it's like I like it when you just hear the voice.
Yeah, you come in hot when it's just some noise.
Oh yeah, it's just all noise. Yeah.
Right?
Yeah.
It's like when the little dog.
I gotta do it. I gotta do it.
Yeah,
he's like yapping at the big dog.
He has like leash rage.
I gotta do Tom right now. God,
a lot of leash rage.
A lot.
You open the gate and the little dog stops.
Right, tough guy behind the glass.
Yeah. He's a big barker. He barks a lot. Yeah.
Yeah.
I mean, Todd and I, the two most handsome guys at the table, had a back to the bar.
Right, by a mile.
Like this.
It was horrible.
Go ahead.
Oh, yeah, you guys.
All right.
Something special.
I don't want to take up any more time because we have way more important things.
How was Cats? Did you go?
Cats?
Yeah. Wasn't that...
You got my mustard?
All right, I told
New York. It wasn't New York.
It wasn't New York.
If you'd never been to Katz's and you ate the pastrami sandwich, you go solid.
Okay.
If you've been to Katz's, you're going to say definitely not Katz's in New York. The sandwich was like this instead of like this.
Yeah, you can't.
I tried to get mustard, as you would say, like, what do you say, like this? They didn't ship mustard for sale. They just shipped enough mustard for the sandwiches.
That's why.
And no,
you know what?
and no Thousand Island. Not
was
even.
Was it New York prices too? Was it like
more?
$30?
$45.
No.
$45
Oh my God.
for a sandwich with a pickle, French fries, couple pickles, French fries, and a Dr. Brown soda. Iced tea was extra. That would have been a problem for Tom.
Wow.
And the sixth thought there was dessert. We got into a little scuffle. She thought there was dessert included. There was no dessert, so that was a little. I don't know. She's like, I thought there was a brownie or something, and then it became a little bit of an outrage with the waitress, and we're like, we're good. Like we're good.
Was it an outrage?
A little bit. I mean, it was a little confrontational, but we'll move on.
Wow.
Yeah, we didn't get a brownie. I said, I'll go buy you a brownie around the corner. She's like, no, I don't want brownie from around the corner. So anyway, it was good. But then they did 2 days there, Above City, and then they went to Windy City Smokeout.
Oh.
That's why they were here.
I've never been to Windy City Smokeout.
It would have rained. I think it got rained out.
I've been there before.
I have not. No.
I think it got rained out 2 of the 3 days. It was rained out for sure the first day.
Yeah, they moved like
there was a
shows
million
on.
people there.
It was oversold.
Yeah, it was.
Yeah, you couldn't. It was oversold. You couldn't get tickets.
Yeah, I tried to get.
I knew people. If you wanted tickets, you could have asked me.
Wanted tickets on Sunday.
Next time.
It looks good.
It's okay.
It's right up your alley.
Right up my alley.
Right up your alley. You get
I don't like the country music, but I want the barbecue.
Yeah,
right. And you get a lot of barbecue. You don't have to walk that far from spot to spot.
Yeah.
It's right up your alley.
Yeah.
All right. Let's get to business so we can get to real business.
But did you catch it? There was something there he didn't like, which was the whole venue of country music. Go ahead.
I can't sit around listening to country music for that long.
I got to agree. I'm not a country.
Right. I know. But other than that, it was perfect.
I'm not a country music.
I mean, I can suffer through some country music for some barbecue, but then after the barbecue's done, I can't hang around for the country music. Listen, I did my time this year. I went to whatever I did.
Keith Urban? No. Blake Shelton.
Blake Shelton. I did.
That was last
year. The $60,000 ticket.
You did your time. She
that was
just
last
wrote
year,
into me and said, I did
Wasn't
my
that
time.
last year?
I don't know when it was, but I did.
I don't think that was in.
That was the peso tickets, right?
Oh,
Where they were we thought they were
the peso.
$60,000.
No, that was February.
Pesos.
February.
Yes, that was
this
the
year.
pesos ticket.
Oh, was it this year?
Yeah.
Oof.
Yeah, that's enough.
All right, top 20 symbols
2
going
hours
through.
of Blake Shelton, and I wanted to put a bullet through my head.
Blake, if you're listening, I apologize. Top 20 symbols going through the system. First 40 minutes today, no broad-based indices or futures. Time for you, number 20, MU, M-U at a 13.
Ooh.
For everybody else, Tesla at a 15, Nvidia at a 4, PLTR at a 40, Hood at a 35, AMD at a 29, Amazon at a 26, Meta at a 30, ASML at a 10, ETHA at a 75, RGTI at a 13, Goldman Sachs at a 12, Apple at a 26, IBIT at a 44, Circle at a 6, SoFi at a 31, Goog with an L at a 42, Coin at a 36, TQQQ at a 20, SBET at a 61, and number 20 for Tom, MU at a 13.
Beautiful.
Take it away. Play
Very
some music.
Good job out of you, my friend. I'm going to let you go and play some music. That's right, my friend and yours, my son, your friend, Nick Batista. How are you, son?
I had this hidden here. I forgot about it.
Ooh, oh, that's another quarter. Oh, it's a polo. What is it?
Yeah, no.
Ooh, that's nice.
Yeah. I had it under my desk. I forgot about it.
Wow.
It is see-through, so we will be able to see your nips.
What size is that?
My size.
Yeah.
Don't get any ideas.
Oh, you know, might have to check that one out.
Don't get any ideas. I need this shirt.
Oh,
I was short one Cubs shirt.
all right.
What do you got?
Got a couple 2-tree trade ideas for you. Ready?
2-tree?
Yeah, 2-tree.
What do you got?
Let's do it. SMH. I get some short delta.
I don't have a position on in there.
Got Nvidia at 4 trillion on its way to 5 trillion, maybe 6 trillion after that, 7, 8. Who cares?
Down $5 today.
Nvidia's?
SMH.
SMH, yeah. But I mean, have you looked at that chart?
Yeah.
Yeah. On straight up.
Yeah, but it's down $5 today.
Yeah. I'm getting a little short delta.
I like the play, but I think I gotta wait till Friday.
The put diagonal spread, I'm sorry, September, August, volatility very, very low. Everybody playing for the moon here.
I think you got to get short at 2. I completely agree. In fact, I sold Nvidia short this morning.
Ooh.
Covered it.
20 ticks, 20 cents.
Something like that.
30 cents.
Hey, listen, I'm just
amazing.
I'm just a squirrel searching for nuts, right?
Amazing. All right, well, I'm doing the 280, 265 put diagonal spread, buying September, selling August. Did an 825, a cheapie, $15 wide. Get some gamma.
All right. I'll look at it when they rally up. I'll get short SMH when they rally up.
Yeah. All right. 0 for 1. Rough start.
Yeah.
NEM, you got a position?
Nope.
Stock got killed the other day. I don't know. It wasn't an earnings move.
NEM?
NEM, Newmont Mining.
Why would that stock get killed?
I don't know. Maybe on the move in gold. You know, gold been kind of weak.
Looks a little heavier.
Yeah. So I did a little spicy trade for you.
Spicy?
Yeah, it's spicy.
Go ahead. What do you got?
Put ratio. So I did the 67.5 or the 57.5, 55 put ratio. And then I sold the 62.5 call against it. So you got synthetic strangle, but you're buying that put spread.
So you're buying one of the 57.5, selling 2 of the 55s?
Yep. And then selling one of the 62.5s. So it's neutral / short delta. Got a little bit of extra short delta. Did $1.63.
I like it, but you're too tight. You got to get a little wider.
You could, if you want to do the I think the 52.5 was like at like 80 or 90 cents, right? What's the 52.5 trade?
Hold on, I'm working this
You
thing.
do the 52.5, 62.5 if you want. $5 on either side.
Yeah, the 50. I like I like this trade.
It's got high vol, 47 IV rank. I mean, you do have earnings coming up, but you know,
I'm working it.
All right.
My own version of it, but I'm working it. Similar strikes.
Okay.
Nothing done yet. I'm trying to do it for 80-cent credit. Okay, what else you got?
All right, last one.
Go ahead.
Snapchat.
Haven't traded that in a long time.
Stock's a pig. Trading at $9 and change.
Still?
Yeah. Hasn't gone anywhere. It's got earnings coming up, I think, on the 4th or something, August 4th, maybe.
Man, that stock really hasn't gone anywhere.
It hasn't gone anywhere. I sold the 10 strike puts as a synthetic cover call. $1.40.
What do you think, Sosnoff? What do you think?
$350 in buying power.
What are you doing in the Julys or August?
I did the August.
Oh yeah, it's August expiration.
Yeah, 30 days.
Yeah, I like the.
You're selling about 80 cents.
I like the
extra.
9s.
You could do the 9s. Yeah, I did this is more of like a poor man's cover call.
Yeah, I got it.
You know.
Yeah, they don't trade in between the markets here.
For which one, NEM or
any one of these things?
Oh, you got nothing going on in the market.
I mean, I can't fill any.
Oh, Vol, E-mini's 400,000 contracts, nothing.
Finally filled NEM. Took forever.
There you go. What'd you do?
I did almost what you wanted. Okay. I did the 55-52 ratio spread and the 65 calls for a 75 cent.
Ooh, and to move it further out of the money than the Johnnies.
And in Snapchat,
I take a little less risk than the Johnnies.
In Snapchat, nothing done yet. Working it.
He's been neutered.
He really has. He's talking about selling the 9 puts at 50 cents here. I'm selling $1 put, a little bit in the money. I mean,
I don't like selling in the money puts. It's against what we do here at Tasty.
What do you mean? It's a covered call.
I know what it is. I'm just saying.
I'm not against anything. You're making things up now. You're fake news.
I like to keep our mechanics as our mechanics.
Oh, you don't do covered calls now? You don't like covered calls?
I don't do covered calls.
Oh.
I can sell puts.
All right.
All right, Snapchat I filled. You got 2 out of your 3.
All right.
Sold some puts in Snapchat, 77 cents. Did the ratio spread with a short call in Newmont Mining at 75 cent credit.
Very nice.
That's a win, son. 2 out of 3. You got the majority there. Majority rules. We're going to take a quick 90-second break and come back. We got more. I know. You're the king, Sosnoff. I know majority doesn't rule, but we just say that. We'll take a quick 90-second break. Come back. We got more Tasty Live after this with Liz and Jenny from the floor of the SIBO. Next, a piece.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Steve in Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
And welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Dierking. That beautiful brunette is Jenny Andrews, and it is a wacky Wednesday on the SIBO trading floor.
It is a wacky Wednesday, and we've got a great show today. It's jam-packed because besides our study from Jacob, and in addition to our What's Your Assumption, we have a guest today
the only man on the floor who will talk to us. No, we love him. We love him. We're going to have Alo whenever he's finishing up his orders, whenever he's, powdering his nose and he feels like coming on, we're going to invite Alo, who's also known as Doug, on our show. So it'll be fun. But I'm very excited about the Jacob study today.
Oh, Jacob's study is great. Jacob's study.
I think it's my favorite.
He's going to take a multi-week deep dive into those iron flies, which lots of people have been doing with success. You like them.
Oh, I love them. I love them. And I actually give Jacob a huge gold star. I've been giving out a lot of gold stars lately, but I give Jacob a gold star for this one, and I love that it says part 1, which means there's going to be hopefully 3 parts.
I can't wait to dive into the study. I have been doing more of the 20 delta, $15 wide. This is the
Jack
iron
Tucker
fly, right,
Yeah.
not quite. Jack Tucker's 20 delta, $25 wide. Mine are $15 wide. Today I collected about $4.20 on it, and I panicked and closed it for just 15%.
So what's interesting is and I'm going to give it a prequel in this. He's taking the iron fly, but if you want to get bigger, he gets wider.
Yeah, you can.
So it's pretty interesting. It was I glazed through it, so there is a little bit of a.
Yeah, you can definitely.
I read ahead.
You can take more risk if you want. You can make it bigger if you're big by big. You can make this iron fly as wide as you want.
Did you see the results? I was surprised.
You know what you really have to pay attention to when we're going through this is the win rate.
Yeah.
The win rate, because the results are great. They're positive P&Ls, but I focused a little bit on the win rate because there were very few that had a high win rate.
And the P&Ls. Like the P&Ls, it's very interesting. Whatever. We'll get into this because we're talking about something when you can't see the book. It's kind of like taking a class where you can't see what you're looking at.
Yeah. So, okay, as far as the market goes, there's not much going on. I think at 8:40, was it 8:40 when I put on my trade, SPOOs were up maybe 10, 12?
And at 9 o'clock, they've been sitting exactly where they've been all day long.
Yes.
And that's when, once again, that's when Jacob says to put it on is 9 o'clock.
9 o'clock. Mm-hmm. I jumped the gun and put my trade on 8:40. But again,
she's itching. Be like, I got to do it now. I got to do it now. I got to put that trade on. No, I mean, it's okay. You can put it on whenever.
Yeah, you can. And again, I took mine. If I collected $4.20 this morning at 8:40, I got out for 15%, so $60. Very little. I originally put in my order for 25%, but then when the market turned red and NASDAQ was down 80, I thought, oh, what if the market starts to fall? And I just quick took 15%.
Yeah, no, I get it. Do you want to jump in the platform, Jenny, and take a look at that one order before we get our guest?
Oh yeah, we can take a look at this, and then when Alo comes on, we can ask him about this.
Yeah, for sure.
Yesterday, you heard all the commotion behind us.
Yeah. We're not on the wide shot. I was going to say, the guys behind us, there's a big order that comes in every once in a while.
Yeah, so the 2 big orders came in behind us, and I pulled it up here. One of those was
was October. I didn't realize that.
Yeah, October, 6250, 6050. It was a 200-point wide spread that a customer was buying. They bought 6,000 of these in October and 6,000 in September.
Can we see the open interest? Will you pop it open?
Sure.
Or volume or whatever you have in there.
So here's the 6,000.
There you
they
go.
Bought 6,000 of these, and then sold 6,000 of the 6050. It was a spread, and they bought it in October. They bought it in September.
They bought it. So customers are buying wide put spreads.
Wide put spreads.
Wow.
Yes. Now they're already making money on it because they paid about $48 for it, 40 something.
So do you think today we're going to hear the closing order?
I don't know. Like if you buy the spread for 48 and it's trading 51, so you make $300 on each spread, and you bought 6,000
sold.
Oh, I see. Here he comes.
If I bought that, I would be out so fast.
Let's switch to the wide shot, can we? We've got the man, the myth, the legend.
The man, the myth, the legend.
No,
Look at this guy.
Not whatsoever. Hi, ladies.
For those of you just joining us, his acronym is ALO, also known as Doug. Can I call you?
Can we see your badge?
Sure.
There he is. ALO.
That was just taken, by the way.
Somebody took
That's
your
recent.
badge.
That's recent.
No, that's recent.
Oh, the picture.
I still look like that.
Yeah, that was last week.
No, I don't. How are you guys doing?
Great. Welcome. Thanks for joining us.
Thank you for inviting me.
We have to put. You get a good. I mean, I've been giving out a lot of gold stars, but you get a gold star because no one else down here will speak to us. You know that, right?
Really?
No one.
I think they're intimidated.
Did I give you a card last time?
Yes, you did. Yes, you did.
I
cherish it. I cherish it. Thank you.
Oh, last time, I'll tell this story. After Doug joined us last time, someone took a snapshot of you on the show. They blew up.
And printed out 10 10 or 100 copies of it.
And taped them all around.
Taped them around. There's one right up there behind you, right on that wall right there.
Oh yeah,
well,
because when we did the opening bell from the other location, the picture was directly behind us to make us feel at home.
Well,
we knew you'd be with us.
Everyone down here thinks they're a comedian, so that's kind of what they do. But it's funny.
We appreciate you joining us because most guys don't want to come on and be on camera. They don't. They all say they're camera shy.
No. I've heard it once. I've heard it 1,000 times. I've got a face for radio. Every single person tells us
that. Is so old.
That's the line.
That
the
is
face
so
for radio.
old.
Oh, can I have it?
There's the picture.
Thank you, Gary.
There's the picture.
So this is what happened last time you were on.
And about 100 of those were passed out to all my guys in the crowd.
I know. Look, it could be ALO and ALO and ALO and ALO if we just can keep stacking on top of each other every time.
People were constantly coming up to me,
Gary.
asking me to autograph the picture, which was totally embarrassing. But I was.
No. So here's what you got to do. Because since we've had this show, you just have to lean in. Because they're kind of teasing you, but you just have to be like, of course I'll autograph it.
The way I look at it, it's all jealousy. So
that's right.
Okay,
you're gonna be scooped up. You're gonna be getting phone calls from other networks. You're gonna be scooped up. Pretty soon, you're gonna have a show.
They know they might not be able to do it, so that's why they shy away from it.
That's right. All right. So we do have some. We briefly spoke to you yesterday about.
Right.
Yesterday was kind of a busy day. We had the guys behind us with the big order that we were just talking about. But you also said that we're seeing some orders coming in.
Yeah, there was a 60,000 lot put
60,000?
spread. Yeah, 60,000 lot put spread. I think
we're
was.
Talking small fry.
6,000.
We brought in the big guns.
Yeah, 60,000 lot put spread that traded. I believe it was dated August 22nd, so that traded over there. So
August 22nd.
August 22nd. It was from Tuesday, though.
So
it was
August
22nd. I don't remember the strikes. I think one of the strikes was maybe 50 half.
Were they buying? So was the customer?
The customer, I believe, came in and sold the spread actually. 60,000.
Oh, here, yeah.
Oh, yeah. Well, we're looking at our platforms right there, but there is 60,000.
Yeah.
It was probably 60 half, 61, right?
There we go.
67, 60.
No, 51.
50 half.
Sorry,
right?
yeah, 50 half.
Yeah, I thought one of the strikes was 50 half.
Yeah,
it's right here, 5,100. So.
And we'll jump in the platform later and talk about what we're talking about.
It's a $50 wide spread, and you think the customer was selling it?
I think the customer sold it. Yeah, I'm 90% sure the customer came in and sold that spread. Yeah.
Yeah.
So this is what I love about being on the trading floor is nobody really knows. We just saw we saw customers buying put spreads. Now we see customers selling put spreads.
Exactly. And over the course of the last couple of days, there's been a few customers coming in buying little puts, like out of the money puts. So.
And how far?
Was
how cheap?
Was one JNY because she's been loading up puts in her.
Yeah, she's doing something secretive here, right? She's got something going here, right?
Yes.
When you say little puts,
just out of the money puts, I would say like in the 5 strikes, some even in the 4 strikes. But
oh, really?
But the longer dated ones, they have a little premium left to them. You know what I mean? Further out though, but you see that occasionally. I think in September and
that's
October.
People buying protection, right? So if a customer's coming in buying puts, that means they're buying protection.
Buying protection, or maybe has a hunch on the. My guess is they're protecting their portfolio.
Yeah.
Yeah. So they have a big, I guess, upward bias, but then they also need to protect themselves on the downside.
Yeah. And we say it's easier to buy the insurance when the house isn't on fire. When we've got
that's a very good saying.
Yeah.
That's a very good.
She invented it.
No.
She invented that? Is that new?
No, but you can't buy insurance when the house is on fire. So you can't buy these puts when the market's falling.
You can't even get near them. You can't even get near them.
Yeah.
And that's what happens. And with the, there's some numbers out this week, but I think the big thing is going into next week with the Fed announcement next week. So everybody's wondering the Powell-Trump battle going on right now.
Battle.
Yeah, that battle
Royale.
which will never end, but you know what I mean. So everyone's trying to, guess what's going to go on next week. So a stall in any kind of rate movement, I think, will not be good for the market. So we will see. We'll see how that plays out.
Okay. Well, Alo, thanks so much for joining us today. Next time we have him on, we're going to show a little video clip of him.
He's a celebrity.
Yeah. No, not close. Not close. I appreciate it. You guys are awesome. And by the way, they do a great job. Watch the show. Everyone, they do a great job.
We make them say that at the end.
No,
of the
they don't.
show.
They don't make me say it. I say it unprovoked. Have a good one.
Thank you very much. We appreciate it.
It's always fun. It's always fun having Doug come on as a guest.
Do you know how much I love a good handheld bike? I almost started speaking into that.
She almost started singing. I saw you wanted to take it and sing.
Yeah, the lounge singer comes out in me as soon as you give me a handheld.
Yeah. Okay, so you see both sides, right? And I was showing you a big order with, let's pop in the platform.
That's what I love. We're like 6,000. He comes in with 67,000. So pop in the platform and we can take a look at what he's looking at.
You can see it
now,
here.
It's easy for us to find because you just went to the open interest, right? So you just go to the open interest column and that's where you look for it.
The 5,100, 50, 50. Now it might look narrow because it's one strike after the other,
but it threw me off.
Yes, but it's $50 wide. So it's trading for $50, which is about what the...
You had, no. You have 2 in.
Oh, I was like, geez, that
You're
seems
like,
like...
wait a minute.
What is going on? That doesn't seem right. 51.50, 50... Here, let me move it. So they're saying the customer sold this. If I wanted to sell this spread, it's only 40 cents. 40 cents, you're going to make $35 and risk $49.65. I think...
But you know what, though? It could be something else. Like, that you don't know what the customers, and especially something this size, you don't know what they have in their positions. We know, that's just it, is on this trading floor, whether the customer is doing something, whether they're not doing something, it's just what that customer is doing. You don't know what everybody else is doing.
I'm tempted to buy this spread just so we can keep an eye on it.
Heck yes.
So this is going to be 67,601. I'm not going to sell the spread for 40 cents.
Flip those cards over and press that button, Jenny Andrews.
I'm going to buy it for 40 cents. This might be throwing 40 cents away, but this way we'll keep an eye on it, see if anything ever happens and if the spread ever blows up.
Well, it's August. Oh, it's 37 days.
37 days, August 22nd. Mm-hmm. I'm going to buy it just for fun. Sometimes when we see these big trades go through, we like to get in just to keep an eye on it.
I mean, yes. I wouldn't sell that. I mean, honestly.
No, I wouldn't sell that. Not with your money. Not with Tom's money.
No, but if you're looking at something that is that massive, they do look at it. I mean, we were kind of talking right before ALO popped up too about the order that happened behind us. Now, if you have a large size and it pops up $1, you know what I mean?
Well,
the one you bought, if you bought it for 48, you can sell it for 52, and you've got it 6,000 times.
Yeah,
pretty good day.
I'm just busting out my calculator so I don't have to so I make sure I've got this right. I think the spread was up around maybe 250 and 6,000 times, so $250.
Yeah, $250
times 6,000 times. That's 1.5 mil.
That's a good day.
I might be out.
I
might be out today.
And then risk off. You're just like. But it's that same thing with the trade that ALO was showing us, that if it moves 5 cents, 10 cents, if it moves a very, very small amount, when you've got massive size, you're out for a very small amount.
Yeah, I'm wondering. So ALO just went back to his
I gave him a thumbs up. I said it again.
I am just curious as to what they're going to do to him this time.
I know. I mean, I feel like he suffers consequences every time he comes on.
That might have been the last time you've seen him.
He suffers consequences, and I feel badly about that. But he's the only one brave enough to come on.
Spoo's up 9. Spoo's up 9. I could have waited for my 25%.
You could have.
Dang it.
You could have.
All right. Should we get into Jacob's study?
I want to. I do.
We're also going to be taking live tweets today. Send us a tweet. I'll show you quickly. Send a tweet. Include this just like Keaton here. Include the hashtag LIZJNY. Those are the tweets we're looking at.
I love it, Keaton. So he's using ES because he's avoiding the pattern day trading rule.
Right.
And I think that's awesome.
And he got in and out for a 10% winner.
That's amazing.
Nice.
Yeah.
Nice.
So what time did he put it on? Well,
this was end of day, 2:35. Or I don't know where Keaton is. I'm wrong. You're living somewhere else. So 2:35 p.m. Where is it? 2:35 p.m. at 8:30.
It's good. He's in Germany. I don't know.
8, 9, 10, 11, 12, 1, 2, 36 hours difference. Or if it's 9:30.
Germany or Europe. Keaton, I'm going Europe.
I don't know, Keaton. I'm not sure. I can't remember.
You gotta let us know because we need to know where you are.
You probably told us before where you're from.
Keaton, I'm going Europe.
All I know is it's midnight in Singapore.
It's midnight. No, it's midnight in Singapore. That's correct.
Something like that, because we had the midnight put seller who would tweet us all the time. And
David Poon, what happened to him?
Yeah, David Poon. I don't know. We miss you, David Poon.
We miss our midnight put seller.
All right. So let's pop in. You ready for Jacob's study?
I am ready.
0 DTE Iron Flies in depth part 1.
Part un.
Un. That's French now. Yeah. Now you're speaking French?
Yeah. And then we're gonna go to do. Next week.
You better start practicing your German.
That's all I got. No sprechen Sie Deutsch. Okay, so let's jump right into this if we can.
Okay. All right, 0 DTE Iron Flies in depth. One standout result of our 0 DTE research has been encouraging results from Iron Flies with aggressive profit targets, selling at the money premium shortly after market open with defined risk wings.
Right, and so far our testing has focused on narrow wings, meaning the $10 wide. They might not have the best win percentage, but the large credits result in very limited downside potential.
Yes.
Which I do like. So we've been looking at it. So today I separated mine instead of doing the...
Yeah, but I think for the study we got it. You usually get over $8 on the Iron
so
Fly.
Mine got like $7.90 today, but usually when I did it, $8.55.
$8.55.
So it was a lot.
So you're risking very little.
$1.45. Correct.
Correct. Traders who are willing to put up a bit more capital might be interested in pushing the wings out, but how should we adjust our mechanics? So this is going to take that $10 white iron fly and widen it, and you're going to see the results.
And we saw somebody on Twitter who did this yesterday. They did the iron fly with $20 wide wings. So let's dive into the details of iron fly success by testing a variety of widths and profit targets.
Okay. Here's the study. Using over 2 years of data in the 0DTE SPX options collected every 10 minutes.
Yes, and they considered selling 0DTE iron flies at 9 a.m. Chicago time, give or take 5 minutes every day. And that's kind of what we were alluding to when we were talking before this, is Jacob, a long time ago, the theta decay, everything on the iron flies in particular, it said wait until 9. Things shake out a little bit.
So here's where I'm a little confused, and this is where I might have a question for Jacob or Data or anyone on the research team.
Not me. No question for me.
Okay, here, Liz, answer me this. Where it says they're collecting data, using 2 years of data in 0DT SPX options collected every 10 minutes.
Oh, yeah. I see what you're saying.
And if he's just putting this trade on at 9 a.m.
No, I get it. But I think that's just a...
Because some of our trades are like...
I think that's a stock. I think he pulled that as a stock.
Because he's only putting it on at 9 a.m.
I'm pretty sure these are slides that he's just adjusting things for, because the study is pretty much...
Yeah,
how many times have we read this? The study of the first couple of days.
But so putting this on around 9 a.m. So I'm guessing they're just testing this trade, looking at it once a day, like putting this on around 9 a.m. once a day.
Well, that's what it says in the second one. But the first one says every 10 minutes.
Every 10 minutes.
It's not every 10 minutes. So good. I think that's a good catch.
You know, some of our studies, I think they're putting these trades on every 10 minutes.
Yes, that's not true of this.
Right.
This is at 9 a.m.
That's what I just wanted to clarify.
Just kidding.
I don't know. Or is that just talking about the data? The data that they've got was collected every 10 minutes. No,
You know what? It could be the data collected because look at this. Clears 10 years of data in SPX conditions.
Collected
it's
every
the
10
data
minutes.
because they're showing us when you're going to get out of it.
Right. So this is data. But this trade goes on just once.
Yep.
Just once. 9 a.m.
Yep.
Okay. Using a variety of wing widths ranging from 10, our previously tested case, to 60, essentially a straddle with, trying to reduce buying power.
With a sane VPR, meaning like an appropriate buying power.
Right, instead of, 200,000 on the straddle.
Yeah. A variety of profit targets ranging from 10 to 75 trades, 10 to 75%. Trades that failed to reach the profit target were allowed to expire.
All trades were assumed to exercise at mid-price. Okay, so here, 0DT iron flies, this is the $10 wide. This is the one we've been talking about in previous studies. And you're looking at different profit targets, and you see the win rate. To me,
the win rate just significantly goes down. Your money does not go up that much, and your conditional value at risk is always going to be the same.
So to me, I look at these win rates, 70%, then 50s, 40s, 30s. I would do the 10% profit target. That would be the one I would do. I wouldn't want that much lower win percentage.
No, and so let's just jump. I know it's not the right time, but let's jump into SPX real quick. I just want to put on one of these to show, because I like being able to show what we're talking about. So go to the 0DTE.
Where is our SPX?
It's in the July 18th.
Oh, the 2-day.
Yeah.
Okay.
So
I saw this and I thought so many days out, but it's not, because it's daily and we've got morning and it looks further than it is.
We've got an AM settlement in there.
Okay,
so you're selling the straddle, so you'd go with the 30. Look at that, I just dropped it. I just dropped the 62. You're going to go with the 30.
You're going to go with the
30, 20, 40.
With the 23. I think they would call it the 23. So when someone quoted a spread to me earlier...
But if I'm doing an iron fly, I'd go with the 30. In my slang.
Yes. Speaking about these options, I asked someone earlier what spread traded, and they dropped the 6 and they dropped the 0. So they said 25. They referred to the 62.25 as, or they said let me see.
You can't.
You can't. They didn't drop the bottom. I wrote it in my notes. So here you go. This is what they said.
And it was Ben.
05. Yeah, so they were referring to the 62, they said 0525.
So 05 and then the 25? So 250 and then 05?
0525. That's what they said. The spread they traded was the 0525.
I don't know what to do with that.
So they, when they're referring to spreads, they're trading so much, they usually drop some,
So when I'm dropping it, if I'm doing an iron fly, because I know it's an iron fly, and you know it's an iron fly, and all the tasty viewers know it's an iron fly,
was the
I would say the 30, 20, 40.
So this is the 25. It was the 62.25, the 25, when they said 0525. But the other one was the $200 lower.
Well,
The 50, the 60-50.
I'm going to say more sugar. More sugar means more information. More sugar.
So
More sugar?
for the lower one, they use the middle two numbers. For the higher one, they use the last two numbers.
Well, that's confusing as all hell.
That's why I was like, tell me that again. I'm going to put this in my notes. 0525. And then I had to search for
And then you searched.
Yeah.
More sugar? Just...
All right, so here we have this Ironfly is trading about 850. Now, we're moving.
It's moved, but this is what we should see, like wrapped around there.
Wrapped around $8.
Even if you change it. Yeah, pull that down. It's going to be 8 something.
There we go.
And here's 890. So we know the drawdown on these $10 wide Ironflies is going to be anywhere between less than $200 typically. And you can see that with the conditional value at risk.
It was down 21. Did you know that?
No, I did
That
not.
just happened out of nowhere.
I did.
Because we were just up 9.
Yeah.
That happened out of nowhere.
What the heck?
Yeah. Jeez.
You look up for a minute, discussing options.
you jump into Jacob's study, and the market drops 30. Yeah, interesting.
Yeah, I didn't even see that. Okay.
Yes.
And we're in the platform. So
and
this
that's okay. And that's why I'm thrown off, because I'm pretty sure the 25
was the at the monies.
Was the 60? Yeah, when he said 0525.
Sell that put spread.
Oh, the one we just bought. That's so far.
No,
that's not gonna go
the
up
one
yet.
that they bought yesterday.
Yeah, no kidding.
Get out. Whoever that customer is, get out.
It was down 30 almost.
Cut it out.
What's going on in the market?
They knew.
Let's see what VIX is doing. VIX up to 1867.
That's pretty big.
Big move. Big move. All right. Well, interesting. All right. Back into the study. So, if I'm choosing one from here, I'm going with 70% win rate, average P&L 61. I know you can get a higher average P&L in some other ones, but I don't want a 41% win rate.
No, I mean, honestly, for me, the $10 wide, the clear winner on this page is the 10%.
10%.
Yeah.
That's what I think.
And wait, and I know I don't, it doesn't say this anywhere in there. And I don't want to put words in Jacob's mouth, but I want to go forward, because if I'm willing to risk X amount, and this has a 70% percentage, and it's a 61 average P&L, and I'm risking $250. If I wanted to do risk more, I might double up on those 0 DTEs if on the $10 wide.
Do more.
Like if I'm going to risk $500, conditional value at risk, I might do 2 of those
instead of one wider one. Well, we'll see. Because we sized up a little bit. We were doing the Ironflies. We sized up a little bit, and I really did have that question. Am I better off widening this instead of sizing up? Are you better off doing $15 wide or $20 wide instead of doing multiple $10 wide? So maybe we'll get the answer here today. Okay, here we have $20 wide wings. So $20 wide wings, average P&L, honestly, look at this. Average P&L on a $20 wide wing, $50 average P&L. 61 on the $10 wide wings.
I'd rather the $10 wide wings. That's what I'm saying. Like, I kind of glanced at this, thinking in my head, if I'm willing to put that much at risk, I would rather do the $10 and double it up.
And here so far, that's what it looks like. I know you can get a higher average P&L looking for a 30% or 35% profit target, but your win percent isn't high enough in my mind.
Yeah.
So then $30 wide wings, again, your average P&L isn't really.
So I know you were looking at win percentage. I was looking at average P&L, because the average P&L. Let's talk about what the average P&L is. It's your wins and your losses all combined together.
Yeah.
So that's what this average P&L means
per trade.
Per trade.
So if you do this every day, on average, you're going to come away with $54 per trade. And on a $30 wide wings, I'd rather do the $10 wide.
So it is kind of like because if you kind of go all the way over for $30 wide wings, it's not bad for a 35% profit. If you're putting in the 35% profit, that's not a bad way to be if you're making $100 a day, but you're risking so much more. If you want to make $100 a day, you can just double up your Ironfly.
That's what I want to show you, like the risk on the $30 wide.
Well, you can look at the conditional value at risk on the bottom.
And here, so you're collecting 2,000, but you're risking 1,000.
Yeah.
I guess it's not terrible. It's not terrible.
Yes.
But I think, so I guess that's when it comes into.
No, but if I was going to risk 1,000, can you go back to the study? That one you're risking $1,000. Okay, so in the $1,000 in risk, you can risk, and it's a little bit more in the conditional value. We're just looking at the one. If I'm risking $1,000 a day and I'm making $100, if I wanted to risk $1,000 a day, scroll back to the $10, just do 4.
You could do four.
And you're going to be making $200.
But here's where you have to figure, you've got $4, $5, $6, $7 in commissions going in. $7 in commissions going in
So
for one lot.
Double it up. Throw in a 4 lot. I want to see what happens. I want to see what happens to the commissions. You know what I mean?
So then you have 16, 20. You've got the commissions. So that's
it's the same. So no matter what, per 1 lot's in there.
So you have to keep that in mind. Like the commissions come into play when you're making these decisions.
When you are now, I do believe.
So then closing order. This is what I'll check because
so I know regular ones are capped at 10. Like if you do a 10 lot, the commissions are capped. Then not an SPX. Remember, we talked about that with Mr. Tucker. Not
Mr. Tucker.
Mr. Tucker. That's
okay,
what
so
I'm gonna
here, I'm going to just do 4 legs here. I just want to see, I'm going to close, I'm just highlighting 4 legs to close 4 legs. Closing 4 legs is
0.
Oh wait, it won't let me do it because
because you grabbed a random leg?
I grabbed like a...
Just close 3 legs. We'll be able to figure it out.
Or I guess this one's 4 contracts. This one's 4 contracts. So closing is... $1
a contract.
So you have no commissions, no commissions out. You just have this fee. No, you don't have. You just have that $3 fee. So getting out is much cheaper. Getting out, you just have that $3.
Not doubled. So you have to make sure you're making enough.
You have to make sure you're making enough if you're going to do so many of the $10 wides. That's where the commissions do come into question. Like, do I make a wider one?
That's true.
That I think is the only issue. So if you go back to these $20 wide, where you would do...
You're still making the same amount. 59 and 51 is the same thing. You do have a little bit higher of a win rate, though, in the
61. I'd rather
61. Yeah.
Yeah. But you do have to keep the commissions in mind.
You do.
That's why I think, like, in ES, with the commissions even higher, that iron fly doesn't make as much sense.
Oh, I think it does, because you're still making money. If it's going to work X amount of times, as long as you keep it small, it does make sense.
Because what are...
So somebody just did it in ES. Go back to Ketan. Watch what Ketan did.
I just want to see the fees. I just want to see what... $62.70.
You got to do a $20 wide.
This is a 50% multiplier.
So make it $20 wide. It's $13 in.
And we were looking at like... Oh, it does not bad here.
They just took it down, remember?
Who said that?
It's on the website. It's like, we've lowered your commissions and futures.
It lowered.
And
now it's the same. So
that's
now
my
it's
website
the same.
voice.
So now it is the same.
This is less.
No, 5, 6, 7, 8. That's the same as going in on the SPX.
Whew.
Tell JD he's just got a little more coin in his pocket.
And there's no pattern day trading.
So they lowered this. Now that's recent.
The warning in this is you have to make sure you close it. Otherwise, there's consequences.
But now, so 5, 6, 7, 8, 50. Or here we've got SPX.
They're the same trades.
It was this.
No, I do
think it was
ES
the same.
ES is a little bit wider.
I think it's the same now. 30, 40, 20.
Same trade.
4, 5, 6, 7. $1 less.
In ES?
No, $1 less in SPX.
Oh, because it was 4.
It was 8 here, 7 here.
Okay.
But anyway, very similar. The futures just lowered.
Pattern day trading rule. You eliminate it by paying $1 more.
Oh, in ES.
Yeah.
If you've got that smaller account.
Yeah.
Interesting. Okay, back to the study. So, $20 wide wings, $30 wide wings. I still am thinking the $10 wide.
I mean, in my mind, the $10 wide was the winner. Now, I might have, to be honest with you, I might have my son on my brain. And that might be the reason why I'm handcuffed into thinking this, because there's nothing wrong with the other ones. If you look at this $30 wide wings,
No, but I want a high probability. I want a high win rate.
I get it. But I want a high win rate. I don't want to give that up. But all of these, if the average P&L is positive, are okay if you're doing them. The one I wouldn't do is 75% profit target.
No, they're
or
always
letting it go.
It's always
like
a
that's
loser.
the one you don't want, because technically, if you're not getting to 75% profit, it's probably so far away from you anyway. That's going to be a full loss.
Right. Now here, this is a little bit different of a story. You've got the $60 wide wings. This is synthetic straddle. Your conditional value at risk is high, $4,000, because you've got a $60 wide.
And I look at this, you better take it off at 10%.
But you've got a 90% win rate. 90% win rate and the highest average P&L.
Yeah.
So it's the highest average P&L, 90% win rate.
Are you surprised that the P&L is not a lot greater than it is?
Well, if you do a $60 wide, and especially on the open, so let's see, 25.
Because this is mimicking, what this is a synthetic strangle, meaning your wings are so cheap that you're mimicking a straddle.
A straddle. So you're getting $23, $24.
Yeah.
So if you managed it at 10%, you're getting $240. Yeah, $230.
Yeah, but so like one loss is going to take out. So remember the study we went to where if you take one loss in this, it might be more.
I know.
You're going to have to do it so many more times to get back out of it.
And like today, think about it. On the open, where were we? SPOO's up 10, up 12. Where did we open?
We opened up 12. No, we opened up higher. We opened up higher than that, I think.
Open 62.54.
Can you just
so
drop
$35 higher?
We opened up at 54.
What? Wait, what?
Dropping to 62.
Oh,
we opened up at 54.
Yeah, we opened up at 54.
So that's high. That's $30 higher.
Well, what do you think of this? What do you see here, Liz? Anything?
No, I'm kind of with ALO. I think we're going to be in this until next week.
And we've seen orders come in on both sides, right? We've seen put buyers and put sellers.
Mm-hmm.
I just can't believe there's some customer out there selling that $50 wide spread for 40 cents.
Well, you don't know what they have against
I know.
it. You don't. And maybe it's you. And you're just trying to throw us all off.
All right, back to the study. So, and look at the jump in C-bar. You know, you go from 250 to 800 to 1600 to 4000.
And the average P&L does not go up that much. That's what I find so fascinating.
But I still kind of like, my go-to now is like 20 Delta, Iron Condor, early, 840, and then hope to be out of that at 9 and then put on the Iron Fly.
Yeah. My go-to is going to be 9 o'clock. Jacob, I am drinking the Kool-Aid, and I'm with you.
Is that the end of it? Takeaways. Here are the takeaways. Our zero DTE data set continues to grow, and thanks to your suggestions, this is you, the viewers.
Yeah, it's not mine.
Because the questions we get and the comments and the tweet we got last week from the viewers, I passed along to Jacob. Thanks to your suggestions, we continue to find more opportunities in these fast-paced markets.
Overall, the research was encouraging for zero DTE traders who wanted to put a bit of capital for their short iron flies. Wider wings mean better credits and better win percentages. However, with excessively wide wings, the profit became less reliable.
Okay, in terms of mechanics, $20 and $30 wide wings seem to benefit from slightly more patience.
Meaning 25%, 30%.
You need to look for more, wait for more. With the best performance coming from 30 or 35% profit targets rather than $10 wings and 20% profit targets. Now, you know me, I'm very impatient, and one little move in the market, I was like, I gotta get out of this trade. So I'm very impatient. I like the 10% profit target.
Yeah, I like the 10% profit target too. And I like it because, you know what, if you want to jump back in, that's what I love about the zero DTEs. And I think that's what like JD is kind of liking about doing short term, because then you're out. And if you want to do something else, if you think you have an opinion, then you can do something else.
You can get back in with another type of trade.
Yes.
Our research once again highlights the importance of managing early, and given the speed of zero DTE trades, that can mean getting out of trades very quickly indeed.
Indeed.
I like this, and I can't wait to see what part two is going to be.
And here's the disclaimer. Sometimes we don't show this. I think we're supposed to.
There's the disclaimer. You can read it.
Take a snapshot
Do you remember when we did the segment Calling All Millionaires?
Yes.
This segment may cause dry mouth and nausea. Somebody was saying that before our segment.
It was so funny.
Was that the one that people didn't like, our segment Calling All Millionaires, that we had to take off the air?
No. We had a segment, Know Your Options.
That's the one that...
We had a segment, and I can't remember what it was called, Know Your Options or Options something, and someone came trying to
saying that they had the term Know Your Options.
Yeah, that we were like stealing someone's term.
I'm going to bet the person who said we were stealing the term weren't trading options.
Probably.
Yeah, ours was a little pun.
Okay, so as far as our account goes, we don't have anything to do. Although, Liz, look at that little spread. No, it's probably wide markets, and we moved just a little. Spoo's down 30.
Yeah.
And that little spread is already up $15.
If you had 67,000
of them. Yeah.
I'd buy that thing back.
Sell it out.
No, because the customer bought it.
Well,
wait, the customer sold it.
But
so
if I was the customer,
I'd be like,
with SPOO's down 33, maybe we'll sell it, but maybe we'll sell it soon.
Yeah.
What's moving today? Amazon. We have 200, 195. We have an iron condor, and it was through the call spread. It's finally coming back. 2 days to go. I think we take this off.
Well, that's a saving grace.
Yeah. I know we didn't make much on this, but this was a loser until.
Oh,
how long has Amazon been through this?
Jenny, we have 2 days left. You got to take this off.
Okay. You don't want to wait for a little more?
No.
All right, I'm going to close this. $1. If I can get $1,
that's pretty good.
That's
today
not bad.
saved us.
Then we made how much on it? $34.
Yeah, that's not bad.
Yeah, because then that's $4 in, 0 out. We're walking away with $30 on that trade. I'll take it instead of a loss in Amazon. We have a handful of bearish trades, so
it
this
was a
down
loss
move,
yesterday. This down move did help us. How's our triple Qs doing? We're up money in it finally.
Oh, this is just. Finally, we've only been in it 8 days. It's a calendar.
No, it's a diagonal.
No.
Oh, it's a Poolmatic. I thought it was a diagonal.
Yeah, it's a Poolmatic calendar. So we paid $350 for it. Usually in a calendar, we only look for 10%. We're up 15%.
We have our GTC in. It didn't get
I think you put aggressive. You wanted to. Okay, we're out of Amazon.
So
I think you put it 20%.
You know what? I think I have the diagonal and triple Qs in mine.
I have the diagonal. So on the show we looked at the diagonal. We ended up with the calendar, but then at home on our own, without even talking to each other, I put on the diagonal and you put on the diagonal.
The only thing I've got is making money today, but yes.
And you know what I did today on the train this morning? I was selling out all those puts I bought. Remember?
Oh yeah.
That's not good. I wouldn't smile. I told you down 40.
I told you she's the one who's buying all the puts.
No, I sold them out this morning on the train.
I know you were the customer buying them yesterday.
But if I would have held them, now SPOOs are out down 40.
Yeah. I really don't know. And I would actually like to toss this up to, and I love when I do this to him. Frank, can you please put in the chat why the market turned around?
There must be something going on that we don't know about. Let me check Truth Social.
Let's go into Twitter too.
Okay, I'm gonna close out of this triple Q's calendar. Right?
Yeah, that's a Poolmatic step. Well, you're running out of time. You've got 2 days left.
Although we could leave it. Look, we could leave it. We've got the 40. We're $10 away, and the one expires in 2 days. The calendar miracle would be if we go down to 240, and then that expires.
Yeah,
I mean 540, not 240, 540.
The calendar blunder would be as if we do not close this for $57, and I'm not advocating it. And then triple Qs comes right back up.
Yeah.
I mean, all we wanted on a Poolmatic is 10%.
Right. Okay. All right. Getting out of it. Oh, and let me get all this stuff pushed out. So we're going to close that. As far as other bearish trades, I know and it's up. Like everything's down and Rocket Lab's up. We need that down.
Oh yeah, of course it's up. How's our TLT doing? We put it on yesterday. TLT's down a little bit.
You know what? This morning this was up $50.
Well, that's what I was going to say. Bonds have.
But no, look at bonds now, 111.15. So what is going on in the world?
Somebody tell us on Twitter, please.
Something to the effect of like interest rates aren't going to be lowered. We've got bonds lower. We've got SPOOs down almost 40.
I'm looking.
I'll pop into Twitter. Pop into Twitter, see what's going on.
Oh, thank you very much, Asif. Trump is going to fire Jerome Powell soon.
Oh, really? And replace him with who?
He didn't tell me.
All right. Well, the market is moving. The market doesn't like it.
Yes, and Keaton is in London. I knew it. I called it, Keaton.
Oh, yeah. All right. So here, Keaton, total fees on my trade was $13. If I take $50, I'm making $37. Yeah. And he's making 37 pounds.
And Keaton, I love it. I love it. I love it. I love it. That one's perfect.
Yeah. Every day it adds up.
Yeah, for sure.
Asif. Oh, there he is. Trump is going to fire Powell soon. So that's the news. That's the news, and the market doesn't like it. Looks like they love Powell.
Is this taco trade?
Oh, what is that?
Trump always chickens out.
The good thing we closed the Q's calendar.
Uh-huh.
All right, Punish Pixels. Morning, ladies. A complex trade for your review. Buy a put debit spread.
Wait. This is Punish Pixels?
Yeah, okay, buy a put debit spread. 30 delta, 15 delta, 30 days out.
Okay.
In the same trade, a diagonal, sell 3 calls at 20 delta. You know what, Liz? You pull up Twitter and read this to me. I'll go into SPX. They're looking at SPX.
Okay. SPX, ready?
Hang on. And they said 30 days out.
30 days out.
Okay.
By a put debit spread, 30 delta, 15 delta.
30 days out.
Buying a put debit spread, which is bearish.
30
delta, 15 delta.
So I'm going to buy the 30 delta put, the 60-70, and sell the 15 delta put. That's pretty far.
It's pretty far. Are you sure? Oh, yeah. It says SPX or yes.
Yeah, 58.55. So
we'll just do this one. Okay, and then in the same trade, a diagonal, sell 3 calls at the 20 delta, 30 days out. So 30 days out.
Sell 3 20 delta calls.
30 days out.
Okay.
And buy 3 calls at the 25 delta calls in the 45-day cycle.
Okay, so I'm selling 3 of the 64.40. Then I go to the 25-day cycle.
No, then you go to the 25 delta in the 45-day cycle.
45-day cycle.
And buy 3 calls at the 25 delta.
So there's this call. That's his call diagonal. The 25 delta.
So in the diagonal, you can make money. Where are your strikes?
Okay, so
it's almost $100 wide in the diagonal, isn't it?
No, it's negative, like negative 10. You're buying the 64.50 and selling the 64.40. It's like,
oh, I can't see the 4. Okay,
because I bought the 25 delta in the 44-day.
Okay,
so it's the 64.50, and I'm selling the 64.40. So my short is $10 in. So that.
Do you know what I love about this? Here's where my eye line goes. So you've got negative theta because you're buying it, right? And you have very little delta.
So I get the put. So the 70s. I don't know what I think of this trade.
I don't know what I think of this trade either, but let's break it down, okay? So the diagonal is not necessarily bullish because it's the 20 delta, 25 delta.
So you're getting $42. You're paying $42 for this one, and you are getting. Where did that one go? Hold on. 30 days.
30 days, yeah.
And why am I opening at 37? It jumped. Did you see that? Oh, no, here, 30 days. So $42 on the one, and the other call is 26. So you're paying a lot of money for that. You're paying a lot of money for that diagonal, and that diagonal, if we shoot up to that point, isn't going to be a good winner because your call spread is almost like a short call spread.
You can't look at this on the curve because you're crossing streams.
No, you can't. You can't look at. I would look at this as 2 separate trades. You're paying for this diagonal $20, and then you're paying for the put spread.
Yeah, so the put spread is protection to the downside, right? You have a very wide put spread that you're paying for. And the diagonal.
You're just paying. It's not like sometimes when you look at a pair, you're selling one to pay for another. But here, I would look at this as 2 separate trades. You're paying for that diagonal. You're paying for that put spread. It's not like you're selling one and taking a credit to pay for the other. So I would just look at this as 2 separate trades.
Yes. And that is the breaking news. Trump indicated he's likely to, thank you so much for breaking the news well before it came to any device that I had here. I really appreciate it. I'm serious. It finally started coming in.
Oh. So we got the news. We got the news first.
I'm telling you, Twitter.
From Asif.
I love you guys.
Thank you,
Asif.
Thank you, Asif. Okay, so I just want to make sure we read this right. In the same trade at diagonal, sell 3 calls at 20 delta, 30 days out. Buy 3 calls at 25 delta, 45-day cycle. So
close at 15% profit.
Because they're both debit trades, look at them as 2 separate trades. One's a diagonal, one's a put spread. I wouldn't look at that as a pair or a package. Yeah.
No, but Punish Pixels, I will tell you, Punish Pixels has been in this for a long time.
He knows what he's doing.
Let us know how it works out because it looks, I like creative trades and
yeah, Punish Pixels knows what he's doing. Okay, we do have a lot. So here's Hatim. Iron Fly for today, 820 with 10% GTC. Good luck on that, Hatim. And I want to take a look at the earnings for today.
Oh, I do too, because it's already 45,
and look,
by the way.
Eric, done for the day.
By the way, it's 45.
Oh, we're busy. All right.
And I'm ending the show just a minute or 2 early.
Okay. All right, so people are posting their trades, which is great. I love that they share it with all the viewers. We're going to jump right into earnings because we do have quite a bit to do.
Ooh, UAll, AA, KMI, TSM, Pepsi, and ABT. You all go straight to it for me.
Straight to you all. You all, $86.
This is a huge bump with Delta's earnings the other day.
Do you want to sell Strangle in you all?
Sure. I have stock. I've just been waiting for earnings.
You've been waiting for earnings.
I've been waiting patiently for earnings.
And then you'll probably sell a Strangle
around it. So that's the same thing as double puts.
Yeah. So 650 expected move. I mean, a Strangle in you all sell the 80.
And I'm telling you, I would like to say for the record, I'd rather be lucky than smart. And me closing my positions around my 100 shares of stock was because earnings were up and the premium was out of them. So I didn't have anything around it when it shot up. So like I said, that's luck. That's not like trading.
Well, still.
Because I was waiting for earnings.
But oftentimes we have stock positions and we're constantly in and out of options around them.
And I will do options around them, but I saw earnings were on the horizon with them, so I closed everything. I usually have calls and puts against my UL, but I closed them both.
Right. Now here, if I had nothing, I might sell a Strangle, 80 put, 95 call, get $174.
That's not bad.
It doesn't look bad.
That's not. You're only using 1,000, right?
Right.
1,000 and
That's not
change.
bad.
That's not bad. It's not
Because
bad.
the other airlines.
Now, Delta gapped up so much that I can't imagine you all doing the same thing.
And,
like,
and
you
all
got the
gapped
bump
up,
from
but it came back right back down, I guess. So it did gap up on Delta's earnings, but came right back.
Well, it came back to the top of its gap.
Right. Yeah, to the bottom of
its gap.
Right.
Yeah.
So I don't know. We could do a Jade Lizard. Could do a Jade Lizard where you don't have the upside risk.
Yeah, I like that better.
Then you're getting $100 instead of $170, still using 1,000, but our break even 78.
Which it's 50 cents away from where our break even was.
Yeah. Okay.
Yeah.
What, Jade Lizard and you all?
I like it. Are you pushing stuff out?
Let me get this on and then I will. So far today, activity. All we did was buy that little put spread in SPX.
And close our Amazon.
Close the
I
Amazon.
want to get filled in you all though.
Close the Amazon. We are working you all. Oh, and that we never got out of that put spread in triple Qs. That was the.
And now we're only down 17.
I know. I'm gonna cancel it and we'll look at it. We'll keep an eye on it. All right, you all. I'm gonna replace this. But how low do we want to go? 95.
Oh yeah, I see what you're saying.
Otherwise, I can just bring the calls in.
Bring the calls in.
Yeah. Anything else on the earnings list that looked good? All right. Even you all got away from us. The market was just kind of bouncing back.
It is bouncing back.
So we were at the 79 put, which is fine. And then I'll bring the calls down, 93, 94.
Yeah, that's fine, 97. Even go 96.
Yeah.
It's pretty wide. It's what, 84 at 112? That's a pretty wide
I know
market.
these markets and you all are a little wide.
But you
okay,
failed.
we're in. Jade Lizard.
Push
sold
that out, yeah.
Naked put and a call spread, collected about $100.
So we went that route. There's no risk to the upside in a Jade Lizard. So if it pulls a delta, we won't lose any money, but we won't make any money.
Yeah, I mean, what's really shocking to me are the bonds down in the 111 handle again.
I know. Can you push the UL out? Yeah.
Yeah.
Let's take a look at the bonds.
This morning, I thought about.
I was like, ooh, our bonds are doing good today.
I know, and I had some put that I added on yesterday. I was like, oh, maybe I'll close them. And then I thought, no, I'll wait for a little more.
Yeah. Famous last words, Jenny Andrews.
Not
famous last words. Let's take a look at our bond position.
It's not going to look good.
It's
not
not going to look good. But we have what do we have? The 111, 110?
We have 112, 111, and it's trading below that now.
Ooh.
And in TLT, this was up $50 earlier, is now down 35. So TLT was trading about 85 when we put that on. Now it's 84.5.
The market giveth and it taketh away.
Crazy.
Yeah, that is crazy.
Well, hope you have cash for that Florida house. I don't think the interest rates are coming down.
I don't think they are either. They were saying the 30-year just passed 5%.
Yeah. It's crazy.
That's not mortgage rate. That's interest rate on the ZB.
Yeah. But it is interesting, like new people buying homes, what a difference the interest makes for them. But, you know, I don't know. Anyone who owns a home and has a low interest rate isn't going to sell it.
No, they're not going to sell it. You know, you can sell a house with the interest rate now. Julie, talk to our friend Julie about this.
Yes. We have a friend who's a realtor. She was telling us about that.
Yeah.
Sell it with your I don't know. I'm not.
You have to have a certain one, and you can do it. Talk to her about it this weekend. She'll give you the whole lowdown, is my guess.
I'm not really buying anything right now.
All right, we only have a couple minutes left, Jenny. Just kind of keeping an eye on the time. Oh, and they're heating up.
And SKU's only down 14, so we're having a rally. There's a rally in the alley. Get your stocks. You know what's been on?
I'm sure they love when I clap in the audio.
I heard Vanetta talking about Circle. So if you take a look at Circle, up $26 today.
And I would like to say it from the chat, Ledge, remember Ledge? He did 2 separate Jajun trades on the SPX bounces.
Okay, nice.
Good job.
Nice. But what do you think is Circle up $26 today?
Well, all those, it's crypto week. So it is crypto week, and that's got those other coins in there. So this is, that should be up there. Is Bitcoin still up too?
And I was going to show you the crypto, yes, we agree. I got a phone call yesterday from someone who has never traded anything. Is a truck driver.
Oh, great. They went in on crypto?
And he said, Jenny, how do I buy XRP? Which I knew you would like that.
Oh, good God.
So everything is up, but let's take a look at ETH.
XRP is up too.
Yeah, and ETH is having a move.
Yeah.
32, finally. I think when it gets to 4,000, I'm unloading half my ETH.
So, all 40,000 coins?
I don't know. I'm going to get rid of this.
I don't know. Bitcoin's almost 120 again. If you take a look at it, it's 119,300.
Yeah, right. So we've seen a run in crypto.
Well, it's crypto week. They're trying to push some legislation through, which I know nothing about, so don't listen to me as far as news goes. But that's all I've been hearing is it's crypto week, crypto week, crypto week.
Crypto week. All right, 10:52. Got a few more minutes. We did a U-All trade. That's all we have right now. TSM, is that Taiwan Semiconductor?
It is. Let's take a look at TSM, don't you think?
But I do want to make sure we get to everyone. So, Steve Jones, I think it was already clearly established that Trump does not have the authority to fire Powell. Thank you, Steve. If Trump attempts to get rid of Powell prior to the official end of his term, the next few months will be extremely entertaining.
It will be entertaining.
Well, I get a lot of action, right? We'll get a lot of market action.
I mean, okay, as options traders, we like two-way action, and we do like volatility. So this isn't a bad thing. Markets shouldn't go straight up all the time.
Okay, and last thing I'm looking at, Taiwan Semiconductor. Ooh, that's tough. That's tough. I think we're going to pass. We're going to end just a little early. I'm going to let you go. I'm going to miss you on the train today. Liz has got places to be, people to see, and I'm going to be riding the train alone.
Maybe. You might have to hold the train for me.
I'll try.
If I call you and say, hold the train, do you think you could?
I can hold it for maybe. The Metro has to stay on schedule.
Oh, no. I got that guy's number, too.
I think I can hold it for like 1 minute, maybe.
I got our
2 minutes.
2 minutes?
But Metro has to stay on schedule. I don't know that they're going to hold it for too long.
No, all I need is 2 minutes. I don't even know if this is physically possible.
I'll see what I can do.
If you see somebody running down the street, no, let's just look. Before we do, let's talk.
Don't run. It's not worth breaking a leg.
I can run. Did we get filled on things? Let's pop out the side while we're doing this. I know. I
don't want you to be late.
I know,
Liz.
55
I
is
don't
good.
want you to be late.
Okay.
Yeah, SPX, we got into that new point spread. Amazon, we closed. U-All, we have a Jade Lizard. That's it for the day. I don't know what else you want to do, but it just turned silent down here. It got silent. SPU's down 20, and it's silent. That's it. You're done. You're out of time.
All right. Everybody out there, good luck with your earnings trades. Actually, good luck with you all today with me. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow.
Oh, we've got our FX show tomorrow.
FX with Glenn. Tune in. Glenn's coming on.
Can't wait.
I didn't even take a look. Bye, everyone.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here.
Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Contrarians! I just signed up for Doe and opened a new brokerage account. Time to get trading!
Newbigard, big barbarian on hillside. To celebrate, let's slaughter 1,000 ewes and suck the raw marrow from their bones. Oh, yeah. Why did I say 1,000 ewes? I always get caught up in the moment.
I don't even really like raw marrow. I mean, it's fine, but it's definitely not my favorite.
Hey, maybe next time when I do something cool and smart, just give me a subscription to Bob the Trader, okay?
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. Been trading for about a year and a half, done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck.
No.
That's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. Back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and of course, our man, Glenn Freiberger, in the house with us today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my buddies, Mike and Glenn. Glenn, good morning. TastyFX. Sign up for the newsletter and open an account. TastyFX.
TastyFX.
Show the back of that shirt. It's a good back of the shirt. Look at this. Look at this one. FX.
Damn. That could be confused. That could be confused for derogatory.
Yeah.
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 But
Wore this to church.
yeah, well, that's what I'm saying. People are probably like, who's this young
You're
man?
far too innocent for those type of activities. You naughty boy.
How we doing, boys? It's a great shirt.
Thank you.
I'm doing good. Hanging in there.
You know, the Open, the British Open in Ireland starts tonight, like 1 in the morning.
Ooh.
Is that the one that's in Scotland?
Scotland was last week, but it's almost always in St. Andrews is in Scotland, but the Open is the European version of a major for golf. So it's
I
either
know
in
someone in it.
You know someone.
Yeah, one of my friends from Northwestern qualified.
Oh, Northwestern.
What's his name?
Ooh.
Has to search his name, but friend.
Yeah, come on.
Anyways,
I'm verifying. This would be.
It's in Ireland, and
His name is Cam. Last name, not sure.
Cam Young.
No.
That would be sweet. It was Cam Young. If you were just casually acquaintances with Cam Young.
That'd be wild.
Yes.
You know who Cam Young looks like?
Cameron Adam.
Cameron Adam.
I believe he qualified.
Oh.
We'll see.
Is he like an amateur? One of those?
I think so.
Hmm.
Or this is his first year out. You're below me.
Yeah, I don't know. Yeah, I don't know. Oh, he is. He's there. He might be an amateur.
Okay.
Yeah.
Yeah, because he qualified through some.
So he's Scottish.
Sorry.
He's Scottish?
Yeah.
Yeah.
Big time.
Yeah, so he's there. Interesting.
Wow.
Cool. That's fun.
You must not be as good of friends. You know, you didn't get an invite.
I did not.
Okay.
He is 22 years old, so this checks out. The math does check out.
The math be mathin',
Nice.
as the kids say out there.
That's pretty sick.
Yes.
Yeah, so go Cam. Go Cats.
That'd be sick.
Go British.
Yeah.
Very nice.
But yeah, very excited for that.
Starts tomorrow?
It starts tonight because they're ahead of us. So it'll start at like 1 in the morning.
Sure.
So naturally, if I wake up at like 4 a.m., that's really unfortunate for me because I'm not gonna be able to go back to sleep. I'm just gonna turn on the TV. You know, it's a little psycho
Who do you got?
situation. I think Russell
Everybody.
Henley's gonna win.
Yes, everybody.
Yeah,
Pretty much.
Russell Henley. I think he's gonna win. But if he doesn't win, I would love to see Justin Rose win. If he doesn't win, I would love to see Jordan Spieth win. If he doesn't win, Jason Day.
Okay.
It's gonna be
Justin Rose is
old,
Scottish
old
or
man.
British?
No, he's British.
All right, I'll root for him.
Yeah,
Hometown hero.
sure.
Everybody loves a good story.
Don't we all?
Mm-hmm.
But yeah, enough about that. What's Trump saying?
Who knows? Because
What isn't he saying?
I'll give a quick little market update. I know we got a lot of craziness happening in the currencies. E-minis are currently down 5. They were down 40 just about 10 minutes ago. They've had the widest range we've seen in a couple weeks, I would say, 2 weeks-ish. 63.02, the high of the session, 62.41, the low of the session, about a 60-point intraday range. NASDAQ down 63. You got the Dow up 20 and the Russell up 3. We've had some swift movements in the last 20 or 30 minutes here. Powell news, Trump talking, taco, there's everything here. Oil selling off a bit, Ford/CL down 53 cents, 64.84 a barrel. Volatility futures got into almost the 20.45 was the high in vol futures. We're down to 19.65, basically unchanged now. The VIX itself almost touched 20, so we had a little bit of a pop in volatility. It's since been gobbled up here. Bonds down 3 ticks. They've had a wild ride in the last hour or so. Gold was up 40, I think, at one point. 33.85, so about 30 points higher. Yeah, about 40, 46 at one point today. It's now only up 16. You got silver basically unchanged. Bitcoin's been whipping around. It was up, 19 on spot was the high of the session. We're at 18.7. So it's had some two-sided action. It's been some craziness in the market here. On the currency space, you saw the dollar just get whacked into the down move on the Powell news. If you look at the dollar index, DXY is a quick way to see that. We had a huge move lower. It's now bounced right back. It looked like, I was going to have some more pain in my Tasty FX positions, but they're now feeling a little bit better.
Yeah, wow. The world's largest taco was made in 2019, 335 feet long carnitas. The world's fastest taco trade, we got it today.
Did you just search for that?
I did.
It's only Wednesday, these are the kind of analyses that might come on a Friday. But we still have more.
Sorry, am I tainting the merits of your show?
No, not at all.
You're certainly adding to them.
All right.
Yeah.
You're a breath of fresh air.
Yeah, let's go. You're on the Eurodollar. Let's go to the trade tab just to give you a glimpse. We're looking at the daily chart. Take it down to 15 minutes.
15 minutes. Look at that.
Bam.
You don't get many bars like that.
You don't, especially that fast. We had almost a whole percentage rise in this Eurodollar in 30 minutes. Pretty unheard of.
That doesn't happen very often.
And just to catch anybody up, we had President Trump speaking about Fed Chair Powell, and some speculation saying he was riling up the lawmakers. Should I fire him? Should I fire him?
Mm-hmm.
And it wasn't until the White House officially stated that they were indicating they were going to fire Powell soon.
Yeah.
Got a huge move on that. Eurodollar trading from below 116 all the way to above 117. Similar price action in the bond market. And then now Trump coming back out and saying,
not yet.
Not yet, said.
Pretty much, he's got to.
Not firing Powell unless there is fraud. He does not intend to remove him. Firing Powell, highly unlikely. So in a world where tariff headlines has now deflated, not taking his word as law, this Powell discussion still moving markets very quickly, not too desensitized there.
Yeah.
But now we're left, in an interesting spot for sure. The backdrop beforehand was yesterday, inflation data, good for everyone, good for U.S. dollar, digested well, brought the Eurodollar to month-to-date lows. Looks like for the first time in a while, we have some stronger dollar bulls sentiment around, the top being in a lot of these markets.
Mm-hmm.
And early this morning, soft PPI data as well corroborating that story. We were getting a similar price action consistently under 116 in that euro dollar, and then now this has stolen all the good news. But maybe we get right back to where we were.
I know I felt like I was perfectly timed for the dollar strength, and then you had that move. I was scared.
You were scared.
Yeah.
You didn't double down.
No,
You were
no, I
just
didn't
scared.
double down. Yeah. Interesting. I know. No, I was scared that I'd be wrong, but I know that I'm not.
Right.
Yeah.
If you're intraday scalping any of these dollar pairs, I mean, you're getting action. Dollar yen also swinging.
Yen.
That one swinging from near 149 all the way down to 147, now back above 148. If you want to click on that, pull up that chart, you'll see
it's a
similar
big range.
price action against a lot, but this yen market highly sensitive as well, with interest rates, strong historic correlation between U.S. rates and this one.
I saw their rates were rising.
Allegedly, yeah.
Why do you say allegedly? Because there's just a lot of...
There are a lot of talk, yeah. So we'll see. They're still near zero. Even with a hike, it would keep them near zero, I think to 0.5%. So we'll see. But yeah, huge move early this morning. You guys have any speculation around this? World's fastest
that's
taco?
why we bring you here. You're our FX expert. I want you to lead me to water.
Don't teach
Or
us how to
sippy.
fish. Lead us. Give us the fish.
Yes.
Free fish.
Yeah. What's interesting to you right now? So the Japanese yen, is this one of the
Japanese
more
yen
interesting right now?
has definitely been the most trending market so far. But if you're looking to get a little earlier on a dollar bull train, you're starting to see a lot more positive tape action build in this euro dollar. And now, even with this news, shocking to the upside, kind of gives you a little insight into how fast this market could move in either
Euro,
direction.
Japanese yen. Okay.
The yen's trying to sell off again. More. More.
Yeah. So I mean, this is also an interesting opportunity to look at your existing positions. Perhaps dollar cost average into them. If the larger story is interesting to you, you're still bullish on the dollar.
Yeah.
Or you could pick. The nice part about trading spot FX here is you could keep your long U.S. dollar position trades, and you still have, for this U.S. specific news, you still have highly liquid, highly traded avenues that you aren't in. I don't know what all positions you have, but if you're not in,
I got short Aussie.
Yeah, so you're not in a euro dollar market,
I have the euro Japanese yen, which
not going so hot.
Doesn't give us our USD exposure.
Exactly. So if you're looking to add something perhaps intraday, you could look at no further than the euro dollar market. So yeah, we've seen at 10 a.m. Or 9 a.m. we're looking at 115.75, and we flashed up to 117. So that's I'd say that's your range, and now you're squarely in the middle. If you wanted to play an intraday, if you're pro taco or anti taco, what are you thinking?
Well, pro taco would probably be dollar strength.
Correct. Yeah. So
I would think that's probably the route to go. Play the taco trade.
There you go. Then you would go short euro dollar.
Yeah.
And just looking for this to fill that gap, right? So we're sitting now at around 116.50. Your profit target would be, just back under 116.
Okay.
Maybe 115.75, and that just gets you back to where we were this morning. If you believe none of the news since then,
So what is that in pips?
So that would be about 75 pips you're asking for. And if you are trading, let's see,
can I do
you're trading a mini lot, that would be $1 per pip.
I'm doing like a little micro lot.
Nice. So five micro lots, that's 50 cents a pip.
Yeah.
You're looking for around $30, $40 in profit with those profit levels.
Yeah.
And it's pretty balanced. If you were to put a stop near 117.
Oh, wait, I can do it on the, can I do it?
Yeah, you can.
All together on the chart?
Yeah, so you can, if you just erase that take profit, you could keep it as well and place trade, and then you can edit those real time.
Okay, so once you get
chart.
filled.
Yeah, so now I'd zoom into the chart a little more so you can see where you're looking.
Okay. So stop loss we'll put at 17. Somewhere around there. Let's go just past 17. Okay, take profits. We're going to go, we'll go 15. We'll go towards the bottom, 15.7.
Nice.
Okay.
So yeah, now you're looking at pretty symmetric risk reward.
That's kind of
playing the daily range.
Yeah.
Got some added volatility.
We need to get that in there for our stock traders. How come we don't have that?
It's a nice feature for sure.
And you ask, I deliver. You can now email support at tastyfx, and with all your trading questions for trading FX.
See?
And that'll take you to our help desk, our lovely friends.
Very nice.
Trading
Good.
services.
Good. Support at tcfx.com. Nice and easy. No help.us.
There's only one dot.
Whatever. Okay.
It's one too many.
This is efficiency, guys. Efficiency. Beautiful. Well, I'm glad we got that win. That's a good win. It's a good win for you.
Thank you. And mobile coming soon.
Very nice.
Developers working very hard trading FX on the go. You could get FX'd on the go.
Hey.
Are there any other updates coming that you can speak about, or anything cool, new features?
That's the main one, but I'll try and press our tech team Wednesday morning.
Yeah.
So I have, when I hop on with you guys, I have
I'm waiting for the
latest
description.
batch. Yes. Description, trading alerts are another popular
Crack some
one.
whips.
The description does make sense for the for the non
for the simpletons like
non-FXers.
us.
Yeah. I apparently was filled. I had a short Eurodollar position, and I guess I was filled today. I must have put in like a profit take order.
Nice.
Very
Because
nice.
I made $30.
Bingo.
So it must have been like into that move this morning. But the rest of them,
still not.
I'm doing better.
It's a waiting game.
I've got one of my 3 Aussie dollar. I'm short the Aussie dollar. One of those 3 is profitable. Down $14 overall.
So
oh,
sorry. Go ahead.
The dollar franc, I've got one line item profitable. The other 2 not. That's down $60. And then the dollar shekel, both are still in the dirt.
Yeah, that one's bad.
Yeah.
What I will say though is on a lot of these positions that you have, notably dollar Swiss franc, and if you were short euro dollar, the carry trade playing in your favor if you are long U.S. dollar. And today is an especially important day to call that out because it's Wednesday, it's roll day, weekend roll. And so if you look at the swap bid and the swap ask, holding a position past 4 p.m. Central today will get you that full weekend roll. So earned interest on long, if the
spread is positive.
Yeah, if the swap bid or ask is positive, you're getting a positive credit for overnight financing.
Yeah.
And that's what you guys have a lot of with your long dollar position. So it's even that dollar yen, especially interesting today. It's cheaper than it was yesterday. If you were to go long U.S. dollar, Japanese yen, you're getting 4 days because of Japanese holiday.
Yeah.
Oh, wow.
I think I've made like $25 on the positive carry.
Yeah.
Does that make sense? Because I've had it on for a while, but the difference between my funds and my current P&L is about $25.
Yeah.
If I were to
so-
remove it.
Yeah, you can get in there, do all the math, but yeah, I think a long dollar Swiss franc position over like a month would be maybe like 10% of your margin requirement at this point.
What filter, is there a way to filter to see what that would be? The line item that gives me the positive carry?
It'll be FX interest.
So on the history?
Yeah. Right now, I just raised it with our dev team. It's not showing up, but I cracked the whip on that one this morning.
Thank you.
Yeah, FX interest, you should be able to. But it's nice you can also just export this CSV, do all your own little calculations.
Yeah.
P&L analysis.
It looks like I'm getting like $1 a day.
Yeah, it's pretty good.
So that does check out.
And
for the franc.
If you hashtag never close until
All of a sudden.
until you're green.
So I could
free money glitch.
So what you're saying is I could just 100x my leverage.
Yeah.
Make $100 a day.
Why not?
Interest. And then if there's one swift move, everything's gone.
Move to Cuba.
Yeah, there you go.
Lovely.
Your credit cards.
Good stuff. Do we want to go through your slides really quick? Can we do that?
Yeah, we can do that.
Sure. Let's do it. Then we got our anatomy of a trade.
Yes.
To get through.
Very nice.
Which is a good one.
Well, today, no better time, I suppose. I've got for you trading FX volatility shocks to fade or to follow.
Like what we just saw.
Like what we just saw. Yeah, precisely. So let's look through it. The background, prepared this for yesterday's CPI inflation number.
Mm-hmm.
Still holding true here because in this summer month, FX volatility has been low. And we've seen a lot of these dollar pairs come in, but data releases and, Powell, Trump back and forth, Trump commentary can boost a lot of these hourly volatilities in US dollar pairs. So if we go to the next slide, I looked at a bunch of numbers using hourly close data for our major US dollar pairs over the past year. And I looked at a lot of hourly thresholds for volatility. So our average volatility over the past year in a euro dollar pair would be less than 0.1% in an hour, close to close. So I looked at what 0.2%, 0.3%, 4, 5, 7% covers the spectrum of 1 standard deviation to 3 standard deviation moves over an hourly time horizon. So this isn't just limited to economic data releases. Right now in virtually every major dollar market, the last hour we had, let's see, it was even quicker than an hour, which is funny. But in this euro dollar, this past hour would have been a 0.3% move, close to close. So that's what we looked at, and we looked at whether fading a move like this on an hourly time horizon or following the momentum was best for intraday trading. So looked at an hour, 2 hours, 3 hours, 4 hours, and 8 hours for what would be a whole U.S. trading session.
Okay.
And calculated just win rates, tried to make it as digestible as possible. If the P&L was positive over that time period. So
beautiful.
Frank Caberna says I present too many numbers, so I'm trying to tone that down. So this next slide got no numbers, just words, just not directions, but historic tendencies on which strategy would work based on magnitude of volatility shock. So this shows you, across most major pairs, what a small to medium vol shock, either up or down, would lead more often than not to higher success, anticipating a mean reversion off of that move. Whereas those near the end of the curve, the tails of the probability, you could see something like euro dollar, pound dollar really start to go, and an opportunity perhaps to follow the momentum. And then, of course, I know you guys see it right here, that dollar yen, not one historically to try and pin mean reversion trades because it tends to trend more often than not.
I like it.
Interesting. I mean, for the non-tail moves, it's certainly a contrarian indicator across the board. I mean, just if you look at the number of times it's faded versus followed, you certainly have a little bit of a contrarian trade in events like this.
Yeah, and this is just calculating whether the win rate was over 50%.
Yeah.
If we go to the next slide, we'll see that these are kind of it's slight edge, but if you did something like you did with symmetric risk and reward, slight edge is really all you need because there's no commission since TastyFX is compensated through IG markets. The spreads are tight during a large portion of the U.S. trading session. So your friction for these costs, I'd guess, is under 1% most times to get in and out of these. So here we're looking at, now we aggregated all of those large moves over 0.2% and looked at the time horizon for exit criteria. And here we're just looking at those fading the moves. And you're seeing, especially in that dollar CAD market, I mean, win rates of near 60%, which is, that edge is not nothing. So yeah, here, another takeaway from me, this is a lot of numbers, but what we're seeing is if you are fading this move, it doesn't necessarily behoove you if you're waiting for the move past 4 hours to wait a whole day, right? If we're seeing a mean reversion, you tend to see that play out in the first 1 to 3 hours, and not a lot of historic data backing up. Well, if I just keep waiting, if I just keep holding on, it'll revert. Consistent win rates across the board. Anything stick out to you guys here?
Well, right now
I like this dollar CAD.
Yeah.
Right.
So we would be buying dollar CAD right now because it's down on the 1 hour.
Yeah.
So I'm short it right now, but I'm a scratch. I think you gave us this last time.
Ooh, I like this.
Not you, but we talked about it.
If we want to just jump straight from this back into the platform, I think you've gotten some actionable takeaways already.
So I want to close out of this and then flip the script.
Okay, nice.
So then we'll be buying.
Flip it and reverse it.
Yeah. Little Missy Elliott.
Yeah. Anytime we can reference Missy Elliott, we do.
So we're looking at this on an hour move. We've had the percentage move. What do we got? Oh, you don't give me a percentage. Going to need to add that.
No, if you hover over the candle.
Oh, the candle. Okay. So we had the 0.2 percent move.
And even a little continuation off of that.
Yeah.
But yeah, if you're wanting to fade that reaction, then yeah, you could turn this around.
Yeah, we're gonna flip this, flip it and reverse it.
There you go.
One click close. Well, Missy.
I've been long for 3 minutes. Smashed
You got better pricing than me then.
You gotta be quicker than that.
I know. I gotta be quick. Okay.
The one click close pretty quick. You could even get.
Is nice.
There's even a quick ticket. If you were really trading that Powell.
How much where should I,
I did 0.02.
He's talking about
for your
take profit.
Oh,
but isn't this like quick reversal? Didn't you say it was 1 hour? What are on the slides?
Yeah. So
for the next hour,
1 to 3 hours. Yeah. So I mean, we've seen
to go all the way back, kind of to reverse the whole thing.
We've seen it, but if you want to just take it back to maybe the top of that range that we were at prior, that also wouldn't be ridiculous.
So we're gonna do the same, like
symmetric
risk one to make one, pretty much. Oh, I like that they give you the ratio there too.
Exactly. Booyah. Yeah, we got good charts.
Yeah, you do. Very nice.
Strong charts.
Perfect. Beautiful.
Yeah.
We got a couple of 2-tree trade ideas on. Perfect.
One day before the trade idea day. Look at that.
That's true.
Now we just need him to work.
Now I need the dollar to absolutely moon.
We're long the dollar.
We are
many
long
ways.
the dollar in many ways, yes.
It's okay.
Short the Aussie dollar, long the dollar. Long the dollar franc, long the dollar. Long the dollar shekel, long the dollar.
Well, we're moving.
Long the dollar cat.
We're moving.
But yeah, luckily, given the interest rate landscape, you're getting paid for holding those overnight.
Yeah. Right. Beautiful. Good stuff.
Well, thank you for letting me talk about the world's fastest taco on your show today. I've quite enjoyed it.
It was great to have you. Please enjoy the pizza.
Thank you. I think I'll make a pizza taco.
Oh, very nice. Very nice.
The New York way.
Oh,
The fold.
Yeah.
The fold and slam.
Very nice.
Fold and slam. Yeah, watch out. Thank you, guys.
Thanks for coming on. That was Glenn Freiberger. TastyFX, sign up for the newsletter.
Support at TastyFX.
Support at TastyFX. If you have questions, you can send it there. And open an account, TastyFX.
See you, boys.
Adios.
Thank you, Glenn.
Enjoy.
E-minis chopping around. They're down 6 right now. Reverse that big move. Pretty crazy. I like the Toby Maguire call.
Yes.
Whoever in the chat was like, it's a young Toby Maguire. He does have that.
He's just a few years shy of Spider-Man.
Yes. Beautiful.
Yeah. Fun stuff. So yeah, we are long the dollar. Everything's gonna be great as long as the dollar goes higher.
And those won't be on the follow yet. We're working on getting that system all hooked up. A little bit harder than we had imagined, but we will be working on it.
Yeah. But yeah, we both just got long the dollar cat.
Yes.
And that's pretty much it.
Yes.
Cool. Well, when we have a chance, we can start the anatomy of a trade in UAL.
Yes.
United Airlines. A strangle I held from February until a couple of days ago. So I went through all the craziness of the tariffs. UAL went from 120 down to 50, back up to 90.
The classic whipsaw.
But stayed small, withstood all the variance because I traded small, and we got the recovery we needed, and we're going to show you all of the data related to that right now.
Yes.
Okay, so UAL strangle, and it's just so funny because I didn't have a strangle on like all year, and then I threw this on. I was like, ooh, $4 for a 90-120 strangle in UAL, and then smash.
You never, I mean, you had the tariff situation. Yeah. You obviously didn't anticipate that, or the realized volatility of 50% in both directions. Those are not things that you can play for. They're tail events, which everybody that trades is going to experience many times over.
Indeed.
About being able to handle them like this. That's the most important part.
That really is.
Not avoiding them, because you can't avoid them.
Can't avoid them.
So it's how you handle them that matters.
That's right.
Yes.
So let's dive in, shall we?
Yeah.
So this is on the follow page. This is available to anyone that has a Tasty Trade account. You can just go to the follow page. You can click on my name, and then in the symbol filter, just type in UAL, and you'll see exactly what we've got here in terms of a snippet. But yeah, started with the strangle, February 14th. Happy Valentine's Day to me. $6.50. It wasn't $4. It was $6.50. And from there, the stock went from 102 to 80 to 75 to 56. That was the bottoming out in terms of when I made an adjustment, but rallied all the way back to 89 where I closed the trade. And as you can see, from the bottom to the top, I collected a bunch of premium and closed it for basically a scratch.
And that the original column is the stock price at the time of the adjustment. So you can see, numbers wise, where the stock moved and how fast it moved over that period of time, as well as the IVR there. You can see, it's one that's had very high implied volatility through the 25% down move, and then volatility has kind of leveled off, which has helped you along the way with all your rolls and adjustments, collecting that premium and being short that volatility. It took some time to pay off because volatility tends to contract. We just don't know when it contracts. So this is an example of something that took 2-3 months to actually see that volatility contraction.
Yeah, and there's some very important takeaways here that I don't think we talk about enough on the show, which we will talk about today.
Fantastic.
So yeah, if we pop over to the next slide, we can dive into the order chain. So starting from the left, bottom up, we can see all of the strikes and all of the adjustments associated with each of those rolls. So I started with the 90, 120 strangle. I eventually rolled the 120 call down to the 100 for $1 credit, rolled the 100 down to a 90 for another $1. So I went from a 30-point wide strangle to a straddle at 90. Rolled that straddle out in time from April to May for $2.20. So already we're picking up another $5 in premium just from those 3 rolls. This is when the mayhem starts. So April 4th, that was the tariff stuff. I was thinking Japanese yen, but that was last year. So yeah, tariff stuff starts in April, everything going nuts, everything selling off. UAL went from 90 to 50 in 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days. So it was cut in half in 9 trading days, which is kind of insane. So what do? Well, I'm not going to stick with a straddle at 90 when the stock's at 50 or 60 or 70 or 80. So I knew that I had collected about $1,000 up to that point, but this was damage control mode. And I went from a 90 straddle to a 90-70 inversion. Did not have enough credit to cover that inversion. So I had a 20-point wide inversion and I had about $1,200 in credit. But this was already, at this point, you
have to do that adjustment.
Yeah.
Because you're feeling the heat.
Yes.
You gotta, roll to something that's closer at the money, get you some extrinsic value. You're trying to scratch the trade now. You're not trying to profit on the trade. You're saying, you know what, I want to take this $1,000 loss to a scratch or a $200, $300 loss, something like that.
Indeed. So I rolled to the inversion for $2 in credit. So up to this point, I've got $600, $700, $800, $1000, $1,200 in premium on a 20-point wide inversion. And again, the stock is at, on April 4th, I had the 90 strike option here. So this was ultimately a $3,000 loss.
At one point, marked.
At one point.
Yeah,
marked.
Just from it being in the money.
Correct.
30 points. Yes.
Yep. So I have the 70-90 options here. I roll them to the 85-90 inversion from May to June. So this is where I'm buying in my 20-point wide inversion, rolling it out to June, and reducing it to a 5-point wide inversion for a $3 debit. So I'm turning my 20-point wide inversion with a $1,200 credit, no chance to profit, to a 5-point wide inversion. This was when the market started to rally back up. So UAL on the 9th here, UAL ripped from 56 to 72 in one day. That was that huge rally that the market saw.
Yeah.
So at this point, I was like, okay, I need to start preparing myself for this thing to recover because I think this is what's going to happen over the next couple of months. So I paid a debit to reduce my inversion from 20 points wide to 5 points wide. Even though I paid a debit, I'm still left with $900 on a 5-point wide inversion. So immediately I go from a position I can't make money on to a position I can make money on if UAL continues to rally up. Going to the right side here, bottom of the right side.
And that roll, just to add too, that roll moving your call from the 70 to the 85 strike is 15 points.
Yes.
Your net debit on this trade is $3.70. So you're selling out, $10 of extrinsic value in this roll, because to move those strikes is going to cost you a debit, of course. If it's 15 points, you would think it would be, $10, $15. But with the rollout in time, you're collecting more extrinsic value, which is reducing the overall cost. So you're taking off $10, $15 of intrinsic value for only $3 in debit.
Correct. And at this point, implied volatility in UAL was sky high, which helped me collect all this premium and not pay a big debit to make that roll, et cetera, which we will see shortly. But On the right-hand side here, just some more adjustments went from the June 85.90 to the the July 85.90 for another $1.20. And then eventually I had like 11.93 in credit, I think, total. Eventually, UAL rallied a couple days ago up to 93-ish. So now I was actually in the money on the other side, and I was like, okay, I need to just end this trade. Because we got the recovery. It was a scratch. But again,
battled it for 4 or 5 months.
Right. And this is a really important point. So we get the question all the time, when do you make the decision to close a trade and just exit it for a loss and go to something else? Well, when you have a product like UAL, there's a couple of things. If this was a strangle in like some random company, I would have been out.
Yeah.
But it's United Airlines. We've shown before they've been bailed out. Airlines are bailed out all the time. It's like,
but it's got good volatility, liquid markets.
Exactly.
It's a big company. It's
Yes.
not a one-off trade. You've traded it a million times.
Yes. So I think the broader question is, do you think the stock's going to recover eventually? And if the answer is yes, staying in a position like this that is a big loser will get you back so much more capital in your portfolio than if you close and redeploy. So like this trade, I started with $600 in credit. It was a $3,000 loser that I brought back to a scratch. How many times do I have to do a trade like this that is a winner with no issues, where I'm collecting $600 and closing it for 50% profit? That is 10 winning trades in a row with no losers to get the same P&L back that I got from April to July of the in a 2-3 month span. So again, it's not always about closing and setting up a new high probability trade. It's about believing that this thing's going to recover, trading small enough to where it doesn't matter what happens with UAL. Like UAL could have kept going from 50 to 25 and it wouldn't have changed anything. I would have just had 100 shares of UAL at a certain point with a $1,200 cost basis reduction or whatever it was. So got the rally back and turned this $3,000 loser into a scratch. Significantly more P&L added back to the portfolio than if I had closed it when it was at 50 or 60 and I'm trying to find new trades to offset this loser. It would have never happened.
Yeah. And the other way to look at it is like all those rolls were winning trades, so to speak.
Yeah.
Like all those rolls, those adjustments got you back to a scratch. So you had the losing position. All those rolls, some of them might have been $1 winner, $2 winner, 50-cent winner. It doesn't matter the exact amount, but all those rolls were winning adjustments that got you back to a trade that's a scratch despite the stock movement.
Yeah. And specifically the April 9th adjustment in the upper left corner, that was the adjustment that got me to a position where I could profit if UAL continued to rally, which it did. If I would have stuck with my 20-point wide inversion, I would have had a 20-point wide inversion and not enough credit to offset my inversion with, and it would have been a losing trade. But making that adjustment, making that offensive adjustment for a debit, and knowing that even though I'm paying a $3 and change debit, I'm still left with $900 in premium on a 5-point wide inversion, which really is a straddle in my mind. That's a position you can get to if you are accumulating your credits over time and defending in that manner, like we always do with these anatomies.
Cool.
So going to the next slide, we can take a look at, again, opening trade. And this chart looks like, it doesn't look very deep, but if you look at the axis on the right-hand side, this is a stock going from 120 to 50 in like 3 months.
Yeah, it's the worst case scenario.
Yes. If we go to the next slide, we can take a look at some of the data. So UAL's price, here you go, went from the opening trade just above 100, went down to 80, hovered around there, went down to a low of like 55, 56, and then recovered from there.
Yep.
If we go to the next slide, we can see the delta. So my delta was really...
This is the adjustments.
Yes.
Of the adjustments. So it's always, you leaned kind of into this move. You leaned long most of this, but you're still, every adjustment, when you're rolling down the calls or you're moving the position, you're picking up a little bit of short delta. You're not, you're not just sitting there and doing nothing. Your adjustments were a little bit less aggressive I would say, like a little bit more leaning directionally long than, some of the other anatomies we've looked at, which is, again, totally fine. Like that is and it ended up working out perfectly for you. But you did something. You didn't just sit and do nothing.
Correct. Yeah. And the -10 or -20 is basically saying I was shaving off 20 deltas, long delta, shaving off 20 long delta, shaving off. And then the flip on the 9th is when I reduced my inversion of 20 points down to 5, and I actually added bullish delta by doing that.
Yes.
But it was after I saw the huge rip in the NASDAQ, a couple more days of, bottoming out in UAL. And I made the decision, okay, if this is going to recover, I don't want to be stuck in a position that I can't be profitable in. So I made that adjustment. And again, you can only do that. You can only make that aggressive adjustment if you are sized small enough to where it doesn't matter what happens after that. Really.
Yes.
If we go to the next slide, we can look at IV rank. So initially, IV rank was high. I think this was an earnings trade, the 9120. Maybe it was after, but either way. IV rank in the 70s, and then it spiked to over 100 during that April sell-off, which really helped me continue to pick up premium, even though I was literally dealing with 90 and 80 strikes when the stock was at 50 or 60.
Yeah, and you're still getting paid.
Yeah.
You're getting some premium on those roll downs and those rolls just because volatility is so high.
Yep. And then as it stands, as you would imagine, after the market recovers, volatility collapses.
Yes.
Same in UAL, goes from over 100 to 50, and now it's around 30. Hasn't really changed.
Yes.
But if I was still in this position, they actually have earnings after the close today.
Yeah,
Interestingly
which is
enough.
good. You close your position. Now you can start something new, and then it's over with.
Yeah. But yeah, even if I wanted to continue this position, if I didn't want to close it, even with an IV rank of 30, the implied volatility in UAL is still 55. So there's still plenty of premium in there if you wanted to do something or continue it.
Yeah.
If we go to the next slide, we can take a look at the raw implied volatility. So IV rank just gives you context around the raw implied volatility, but these were big moves in the actual implied volatility of UAL as well. So never went below 50%. We're dealing with 50, 60, 70%, but then it spikes to 90% in that tariff sell-off and then comes back down to 70, 60, et cetera. So plenty of premium in here. It's a good trading vehicle regardless of IV rank. Even with a low IV rank of 30, 50% IV is plenty in terms of actual premium associated with those expirations.
Yes. And then lastly, the
last but
risk
not least,
profile.
Yes. The visual. That hasn't changed and will not change ever. The blue line is the stock price. The red solid line is the short put. The red dotted line is the short call that actually went away and then it came back. It was at a straddle when it goes away. But you can see I really went inverted when the stock was dipping at the lows. And then once I saw the stock spike back up to that short call, I was like, okay, if we're going to start going back above this level, I need to get this out of here. And I paid the debit to make it a much more narrow 5-point wide inversion and moved the break evens slightly lower. It doesn't look like a lot on the bottom green dotted line. So the green dotted lines are the break evens. You can see I immediately hedged and brought my call way down. Mm-hmm. But the bottom green dotted line still was improved from about 85 to about 77. So I still reduced it. It just doesn't look like it's moving because
it's a huge range. Yeah. I mean, this is a up 50% and down 50% range. So it's a huge range in the stock.
Yeah. But this is the story that you'll always see. We're collecting premium over time. We're trading small enough to absorb variance. And as long as we're collecting premium over time, regardless of what our decision is with our strikes, you're going to see these green dotted lines move wider and wider from the strikes. Or at least get closer to the current stock price and remove the need for the stock to get back up to 100, which is what we did here.
Fantastic. Good job out of you.
Thank you.
Now I sold the 75 strike put in August. Well, I'm ready.
So now it's your turn.
Yeah, it's my turn. Maybe I'll have an anatomy of a trade.
I did just get the United card.
There you go.
So I feel like I've checkmated United.
Yeah.
Or Chase, I should say. Because I got the United card. which gives me access to the United Club at O'Hare, which we will be going to before the August show in Seattle. Sign up at tastylive.com/events.
Yeah.
But they also pay for your global entry. I have TSA pre-check, but not global entry, so that they pay for that as part of like the perk thing. So I feel like I'm feeling good. Is what I'm trying to say.
So sell the 75 strike put at $1.25.
You know, I think I'm done with the undefined risk in here for a little bit.
Okay, that's fair.
But I will go with a bullish position. I'm going to buy the 85 in September, and I'm going to sell the
85 in September.
Yeah. And I'm going to sell the 92.5 in the 2-day.
Ooh.
So just a straight up 7.5 point wide spread for $7.40, and we'll make a couple $100 if it rallies. And if not, we'll hedge it. I'm gonna work it at 7:45. See if we get filled. Couple minutes left here. I'm gonna rapidly scan through here. Tony AZ followed the UAL stuff, did similar moves, had a similar P&L, a little bit bigger of a loser, but yes, it was a $3,000 loser at one point. And it removed a lot of fear of big losers. There you go.
Yeah.
Yeah, and again, I think there's one thing to be said about, for me at least, if it's a stock I think is going to recover and it's downside risk, I'm much more comfortable with it. If it's upside risk, it's a different story, which I try and mitigate that by being more aggressive. Like an IBIT, it's a good example. Like our year-long trade in IBIT started with a 50-70 strangle. Now I've got the 65-75. And anytime I get tested on the upside, I'm just shifting the whole thing up because I don't want upside risk in Bitcoin. I want downside risk. So I'll make sure that is how it's structured at all times. Let's see. Yeah, Wandara, same story.
Yeah, I'm sure. I mean, the airline stocks were super, super hot going into the year. I mean, I'm sure a lot of people got stuck in this, and Delta was another one that had similar type move. I mean, this went from 70 to 35, you know, the same sort of move.
Yeah. Yeah. A lot of these are even your favorite, Southwest.
Yeah, I got some short Delta there.
Yeah, it seems to be
E-minis up
plateauing.
4 by the dip. It has been bought.
It's like impossible to post a red day. That's what it feels like.
Can't
until it does. Eventually it will.
Market moves.
We just might be at
quick.
7,000 by the time it does.
Maybe.
Aklo.
OKLO. Yes. What are we thinking?
Up.
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 Simple.
Yeah.
I don't know if puts are probably near cash secured, right? Yeah. I mean, I think you could do something like a butterfly or call ratio or something like that. Call ratio spread's probably going to use too much capital. Yeah. Yeah, it's a tough one just because it's too much buying power for me to put something on here. I have traded the SMR, which is another nuclear, new scale power. That one's been a nice little trade. Somebody in the YouTube chat has put me on that, so I've traded that one as well. But yeah, I'm gonna hold off on this one on Aklo.
Fair enough. Ethereum position's working.
Put that in the cherry picks yesterday. We've been talking about this ETH-A, which is the ETF for Ethereum. Ethereum up another $150 today, another 4%. It's had a monster of a move here. So it's slow moving trade just because it's an iron fly, but it's up about $30 today, which is nice. You know?
Yeah.
$30 on a $400 in total risk. It's a nice little move.
Yeah.
And I'm wrapped around the 25 handle. This is exactly where I want it. So you just got to chill.
Yeah. Yeah, I've got the 20-30 diagonal spread, long December, short September. That's up 85 cents on $500 in risk.
Mm-hmm.
So yeah,
if you wanted to, you could buy in some of the risk here because I made it a wider put spread versus a tighter call spread. So if you want to buy in some of that risk on the downside, the 17-20, you'd sell out of the 17, buy the 20. This puts you in a 5x5 iron fly into this move, which is, obviously a positive move.
Yeah.
Frees up, $200-$300 in risk.
Yeah, the same thing can be done in mine. So I have the 20-30. The long option's in December. So if you wanted to, you could sell out of the 20 into this move. You could sell out of the 20 and buy the 25. You'd pick up $2.55. It would bring your cost basis from $5 down to $2.50, and you'd reduce it from a 10-point wide with $500 of risk to a 5-point wide with $250 in risk.
Take some risk off the table.
Yeah. Which is interesting.
Mm-hmm.
Huh.
Especially because there's no skew on the downside. It's all upside skew.
Yeah.
I might just do that. $25 for $275 and
I think I'm gonna do this. I kind of like this.
Buying in some of your risk.
Buying some static delta risk and just move it to dynamic at the money option.
Okay.
Yeah, let's do that. 250. I'm gonna leave it at 250. Okay, I was filled at 250.
There you go.
So yeah, basically cut my risk in half. Still a profitable position. Now I have a 5-point wide for 250.
Very nice.
Any Pepsi earnings trades?
PepsiCo. This is an unlovable chart. Straight down. Does it have earnings? Yes. Tomorrow before the open.
Yeah, so Boulder has the 140 calendar. Short the July 18th, long September. Currently up $190. Close it out.
Yeah, that's a good trade.
Yeah.
Up $90?
Up $190.
Oh.
Yeah, I mean, you basically timed this perfectly.
Yeah.
Even with earnings.
You probably did this when we were 130-ish.
Probably.
Got $3-4 move.
But yeah, I would consider closing it. You have a nice trade on. If you're up $190, it's a very nice trade. And if it goes down at all, this goes away. Because your short option is only trading for 80 cents. And that's going to go to zero if there's a sell-off in Pepsi. But your September option is trading for 350. And if there's a sell-off in Pepsi, there's a $5 expected move. If you get a $5 downside move, that's going to lose a couple $100 in premium. So, yeah, I might just consider closing. But if you want to hold it, there's risk.
I took a little upside shot. 135, 139, call diagonal, August, July 18th. 325 going into earnings. Why not? Stock's on its butt.
There you go. Ranch has a 75 in UAL, 75, 95, 100 Jade Lizard.
There you go.
Yeah,
Very
for 250. So yeah, you don't cover the risk on the upside, but if there's a move to 100, you're basically at a scratch. Because the 95, 100 will only trade for 250, and you'll lose a lot of value in that 75 put. So you'll still be at a scratch, slight winner if it gets up to 100, but you're looking for a neutral move here for sure. I think we're out of time.
Cool. That was a good one.
Yeah, definitely. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Glenn is at Glenn Freibarger with an A on the Twitters. Support at tastyfx.com if you have any questions. Sign up for the newsletter. I put pinned it to the top of the YouTube chat. And yeah, we got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
In the world
of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient, and tastylive does it. Again, they teach it in a way that is fun, it's easy to understand, and you're learning from people that have done it for 40 years.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom.
close.
Oh,
So
my day
close.
is starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got it!
Common color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back.
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's game.
Oh, here
I'll get in this man's game.
Yes.
$5
yes.
mil.
$5 million.
$5 million and a speedboat.
A speedboat.
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny Cancelleri. Bam!
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tom versus Tony. Round 1. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
We're back. It's Wednesday, July 16th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, how's your roller coaster over Wednesday going?
It's good. It's good. It's, Powell's going to get fired. He's not going to get fired. So looks like he's safe for now.
Safe for now. John, we can go to the slides. It's just another day on the Trump coaster here in markets. Indeed, Thomas, we've seen some competing narratives in recent hours where CBS News reported that Trump was going to fire Jay Powell. It is a foul for the market. Stocks sold off, bonds sold off, gold rallied, the dollar tanked. It was a little bit of a sell America moment there once more. We got past it, though, because Trump himself came out and said, no, not planning on doing it at all. He's going to be gone in 8 months anyway. So we have competing narratives in this market, Thomas. Are you surprised by how the market reacted to the initial headline that Donald Trump was considering firing Fed Chair Powell soon?
I mean, no, because it would take away some stability in the market, Fed independence, all that stuff. So it looks like they're going to go with, just replacing him when its term ends. Undoubtedly, it'll be someone more dovish or slightly more dovish. I think when it comes to the market at that point, it'll probably be a positive for the market. But, they have to balance it to make it look like it's not going to be someone that's just going to be purely a yes man to Trump. It's going to have to be someone that at least has the illusion of being an independent thinker. But I think we will get someone that's more inclined to cut rates, even, assuming we get the 2 this year, get a new Fed chair next year, and then more rate cuts likely on the way.
The second headline tells you really everything you need to know about how the market viewed the initial statement. Gold was up, stocks were down, bonds were down, the dollar was down. It felt very much like early April in those sell America kind of days. You get the other headline that Trump isn't going to fire Powell. The dollar bounces back, stocks go up, bonds bounce back, gold and silver sell off. So if the administration wants lower interest rates, the market is very clearly communicating you can't get rid of Powell. Yeah. That's not how this game's going to work. And if you want to keep stocks going up, which the administration's been touting a lot recently, you probably can't get rid of Powell. So we find ourselves in an interesting juncture today where, thanks to this Trump coaster, stocks have taken a bit of a ride. I
think we lost you, Chris. Back.
S&P 500 now back in positive territory, up by 0.2%. But in reality, not much has changed.
I think we lost Chris. Okay. All right. While we wait for Chris, yeah, I mean, the market definitely not liking that. We saw bond yields reverse intraday, going between the headlines. And oh, nope, you're not back yet, Chris. But that brings us to the place of where do we go from here? Obviously, the market's saying no. If you're getting the bond selling off, of course, yields are going up. The stock market is not going to like that. So S&P 500s, we entered the day up a little bit, then a dip when that news came out, and now going back up about 12.5 points. NASDAQ trailing a little bit, staying within its range. We haven't really been able to break the top from July 3rd. So really been capped there, and you likely need something to get us over that. The inflation data this morning, wholesale inflation, coming in pretty tepid, which aligns with the inflation data released earlier this week. So rate cut bets liking that a little bit, some dovish fuel on there. But of course, the Powell news was an interrupter of some sorts. One thing for the NASDAQ that's interesting is we see things like SMH down 1% today. Nvidia could not get us over there, even though it's still green. But that is just going to have to come to earnings. Nvidia does report a little later. We did have some banks in the mix today. Morgan Stanley not doing so well. Goldman Sachs a little better. Record trading revenue on the volatility from tariffs and things like that. And we've seen headlines like the U.S. is actually getting a good amount of import duties. And the reason why it hasn't affected us too much is Europe especially has failed to retaliate. So all things considered there, it is a positive for Trump, at least from a headline standpoint, building those coffers up a little bit from that standpoint. But we go over and look at things like the sector rotation. Today, we have healthcare up the most, real estate trailing in second place. And then the only two sectors down right now are technology, pretty much unchanged, and the energy sector. So I'm not sure where Chris's slides were leading for the future segment, but we'll just waddle into the notes really quick. ZN, we're up about 0.25% there. ZB, nearly unchanged, a really wide range for ZB already today. We hit the lowest going back all the way since May. And then we were above yesterday's high range for yesterday. So that's kind of reflecting a lot of this headline volatility that we're seeing. So pretty volatile day for traders. You know, you can't really anticipate a headline coming out of the White House. You're going to fire Powell, you're going to keep him. So I'm kind of wondering if, you know, of course, the White House, they're watching the price action in the market. You know, it brings you to the question, if that didn't occur, you know, if bonds went up and yields actually went down on that news, of course, maybe we wouldn't see the rollback on that headline so quickly. And the contenders, they said they're going to actually come up with a formal process right now for dictating who the next Fed chair is. There's a couple people that have been in the running. Kevin Hassett, a former White House economic advisor, another Kevin, and then I believe Waller also a current Fed member. So undoubtedly they want someone more dovish, someone who is going to facilitate rate cuts. Trump saying a couple days ago with a truth or a tweet out that it would save the economy around $900 billion if you cut rates by 100 basis points right now, somewhere around that ballpark. But market's still pricing in 2 rate cuts for the rest of the year. So if we look at things like the FOMC countdown to FOMC from the CME group, it is showing right now we are looking at a 2.6% chance for a rate cut in July. About a month ago, we were at 14.4%. About 5 weeks ago and even 3 weeks ago, in between that, we were at about 20% for that. So the July rate cut is all but out of the picture for now. Even the weaker inflation data couldn't help that. Of course, those Fed rate cuts were brought down by the strong jobs report that we had earlier this month, even though it was kind of a mixed bag there. So it's looking like September, the chances for a rate cut, we are going for 58%. And currently it's a 40% chance to stay. So that's come down from 30% chance to stay a week ago. So September is still in the question, not fully priced in there yet. October, we get a little bit more of clarity, 48% chance that we'll be down 25 basis points, 32.9 that will be down 50 basis points by then, only an 18% chance that we stay. So right now, the bond market, especially if we look at the long end ZB, it's been trailing lower and lower. And Chris, it looks like you're back. Did you turn your internet off and then on again?
I think so. I don't know what everything looks fine and then everything becomes blurry and you freeze, Thomas. It was a real scary time, but I think we have it resolved now.
Scary for me too. You left me here alone.
I can't imagine the terror without the slides, without the charts. Well, we can go back into stocks if you don't mind.
Yeah, let's do it.
Did have their ride this morning, but for better or for worse, we find ourselves in a very familiar territory here. S&P 500, pretty much range bound, where we've been since July 3rd. Not much has changed. So we're sitting back to 6,300, Thomas. Volatility still only a 14 IVR. Have we learned anything about the market's resiliency with today's headlines and its ability to bounce back to the midpoint of its multi-week trading range?
I'm sorry, I was reading a message really quick.
Sure. The midpoint of the trading range here, 6,300. Have we learned anything today with us sticking in this range? Should traders think, that maybe this market still has a little bit more left in it?
This range has lasted quite a while, and it's a little surprising because I thought the inflation data, the headline and then the wholesale would kind of help us get to the top of this range and kind of test it on, the expectations that the Fed would have a slightly more dovish path. So today I'm actually looking at getting longer into equity exposure than I have been. I've kind of sat on my hands for the past month, only taken single name directions, things like Tesla and that. So I don't know, the market is waiting for something else besides for, economic prints that can slightly boost those rate cut bets. Is it going to be earnings? We've seen mixed things from the banks so far. They had good trading revenues, other weak spots. Wells Fargo wasn't so great. Other things like Goldman has been strong. So are we waiting for the big tech names to where we could, these big market cap names where we could, say that these companies are still doing good in light of the tariffs that have been going on. While you were away, I talked about the tariff, that the tariff revenue has actually been brought in, but it's in the absence of really retaliation from other company or countries.
Yeah, the tariff revenue being up, what does that actually tell you? Just means that the government's collecting more in tariffs from Americans who are buying this stuff, right? That's more money than Americans would have otherwise spent. That's all it is. You mentioned the banks here, though. It's a nice little rebound. XLF is up by 0.44%. We see ourselves holding out our 1 month moving average. Yesterday obviously wasn't great. Maybe a little bit of disappointment on the earnings after banks have had a very strong run this year. So couldn't have gotten any better. But to that end, we're still holding the trend right now in the market. And you look around the horn, you mentioned tech potentially being a catalyst here. It's another day where we're sharply off the lows. We're holding our 1 week moving average. This doesn't really look like a soft market now on the other side of this Trump roller coaster kind of day.
Yeah, it's just, you know, this range is kind of, it brings you to a point where you're kind of like, you have to do something. Because these ranges, while the longer they go on, of course, the bigger chance it grows that you're going to eventually break out in one way or the other. And typically, you know, at least from what I've seen, I'm not sure if you'll agree with me, the longer a range goes on, especially a tight range, the bigger the chance you have for a move in either direction that's going to be kind of outsized.
Yeah, I find that to be the case too. Like if you're going to go into a trading range, and if it's going to be a continuation effort, it shouldn't last a very long time. And the longer, you know, there's a point where, okay, we got into a new range. Can we hold up here? If we can't, it's going to reverse out quickly. But we've been sticking up here. And I know there are some folks who like to think that a market got overbought and so this thing is going to cool off. The overbought readings in the market have been cooling off for the past few weeks. You can see that in stochastics and MACD, which have been generally declining here in recent sessions. And yet price has not lost any altitude. The market's just digesting right now. It's feels to me like it's catching its breath before we try for another push to the upside. That's a nice long lower wick for what the bears had going yesterday with that upper wick in the NASDAQ, Thomas. You could say the exact opposite today. So have we learned anything new? This is a market that doesn't want to go down yet. It could have easily run with the headlines here and said, okay, yeah, Trump says he's not going to fire Powell because we all panicked, but he's thinking about it.
He
market
wants
didn't care.
to. He wants to, but
We know that though. Everyone knows that.
yeah.
So is it really worth trading around? Powell's going to be gone by next May anyway.
Just when you finish the nice renovations, you got to go.
Yes, right. All right, so we have volatility in a touch here. IVRs are off of the mid-teen levels. You could see here in the VIX front month contract, VXQ25, we did push higher in today's session up to a high of 20.45, and we've since given it back. We're now back to 1947, which puts us 7 cents lower on the day for vol. You can take a look at the VIX here too, and as that hammer, or shooting star candle rather, I should say, we're not quite out of the positive territory for vol, but it's been sucked back in. Clearly the market's saying that this Powell story is over again for now. So where does that leave you here? We're past expiration. We're going into the second half of the month. Markets tend to get a little sticky here and not make much more progress. As a betting man, are you going to bet on more stock gains in the short term, or you think that this may be a range carving at a top?
I'm going to get a little exposure on the long side just because watching this play out and not being in has gotten me a little antsy, I think. I think we can continue to, you know, maybe hold on to the prior trend if earnings is strong and, you know, see what's left in the barrel as far as gunpowder goes. But like you said, this is now going into a time of the year where, you know, the summer doldrums and, you know, are we going to kind of just volatility stay low, kind of not an exciting period, and you know, it's a lot of the trade headlines. You know, even though the market has become somewhat complacent with the price reactions to these, just by virtue of it going on and on, but we have to get to a point where we're either making these substantial deals or, you know, Europe actually does start to retaliate. You know, they've made threats. They've been easy, I think, on, you know, the countermeasures. But there's going to come a point in time, probably sooner rather than later, where they have to do something.
have to do something soon. We had a really bit of interesting action here in the Russell today, Thomas. We've been watching this uptrend off of the April, May, and now what could be the July swing lows here. I would point out that this is a market right now that's finding support right at its 1 month moving average. If we talk about the high that we had on June 11th, near 2210, okay, we'll call that resistance turn support. We were looking at this on the 8-hour time frame yesterday because it feels or was looking kind of picture perfect for a head and shoulders pattern. You got your shooting star for your left shoulder. You got your evening star candlestick cluster for your head. You have an engulfing bar here on the right on this 8-hour time frame. The right shoulder's below the left shoulder. Picture perfect. We slam into support, the neckline, and then we decide to hold the uptrend from the April-May swing low so far. I should say the April and June swing lows so far, Thomas. So one of those small indications, we can go into KRE, the banks. Are they holding up at a place where the market may otherwise think about turning? Yeah, they bounced off of their 1 month moving average again. So you can't dismiss the fact that stocks held up where they should hold up on a pullback. And in the short term, if you think about this market moving forward, it's another punch to the face that it just gets up and starts laughing at. And if we can't get down on a headline like we're going to remove the independence of the Federal Reserve chair role, just kidding. Why shouldn't we take a stab at this going one more leg up?
Yeah, I mean, and you think about if you look at the structure of the trend, if you've tried to get short, you've had to be really timely because the pullbacks are pretty short in length versus the trend higher, which, longer durations. And that's typically how the market is. But I just think from a risk perspective, going long here is going to win out more times than going short if we stay in the same market environment that we've been in.
There are quite a few interesting moves in the bond market today. Twos during the whole Trump may fire Powell phase of the afternoon or more the morning's news. We do see that the twos did jump fairly quickly. Why is that? Because if we're going to fire Fed Chair Powell, then you're probably going to get a Fed Chair who wants to push down short-term rates. And that's the expense of more inflation, which feeds into the long end of the curve. So while you have that bump in twos, right? ZT goes up, 2-year yields go down. At the long end of the curve, it was a bit of a different ride where the market initially sold off quite significantly, with a recovery then taking place after Trump tries to put the toothpaste back in the tube that he's not going to fire Powell. Perhaps that's informative in and of itself, Thomas. If Trump does make the aggressive move, we should be looking for the curve to steepen very rapidly and very aggressively. If it's 2s, 10s, or 2s and 30s, 5s and 30s, what have you, you're looking at a situation where the new Fed chair is understood to be someone who's going to be dovish. And if you push rates down in an environment where inflation continues to run above the Fed's target, which it has, I think, now for 56 months in a row, you're probably going to reinflate things. You're going to drive more inflation. So firing Powell, the trade is gold up, twos up, 10s and 30s down, stocks down, dollar down.
Yeah, this is the new Fed chair going to inherit a position that is, easier to guide than the current environment, or is it going to be a little different of a situation if we actually do get this bump up in inflation from tariffs, if they keep going on longer? But I think the market was very acute in how it handled the headlines today, and it was very telling. And I think that's probably why you saw the news quickly reversed.
Outside of a brief flash that you have for 2 days at the end of May, the market really has treated this 112 area, 111.5, if you want to be a little bit generous, as a support region. And that's where the market sold off into today before carving out this doji candle. Doji candle after a trend usually means a pause. Have we seen that recently? You bet, here on July 1st. Nice little uptrend. You get your doji, signals a change of course. We get the follow through to the downside. You have your topping pattern, and it's been red ever since. So maybe, just maybe, Mr. Westwater, yesterday's engulfing bar, this was the exhaustion move. Bonds flatten out a little bit here. We can operate around the 112 figure. I have iron condors, short iron condors on in ZN and ZB right now. So a little bit of an up move here in ZN, for example, helps recenter me towards the midpoint of the trading range, which is just around 110.5, 111. So all things considered, given what I have doing here, it's not awful, unlike some other things today. But I would point out that if you're looking at ZB, keep in mind the IVR, while being double, triple that of ZN, almost triple, it's twice the size of a product. So maybe head over to TLT if you're looking to play the long end of the curve. Just a thought, because of how restrictions that retail traders have on their account sizes. So you don't want to have one position just eat all your capital.
Yeah, and TLT is extremely liquid, so it's very easy to trade.
So we had the PPI data out this morning as well, Thomas, and it came in fairly soft. I see a lot of people taking a victory lap that there was no inflation. Where's the tariff, inflation, and PPI data? Tariffs are not part of the equation for PPI, so it wouldn't show up there. You would expect to see it show up in consumer prices first, and then producers can't pass it along or eat. They're going to have to no longer eat this, right?
Yeah, I mean, PPI,
so we're not seeing it there yet.
PPI is the prices you pay at Costco, right?
Prices are what people pay at the factory gate, right? So, I mean, if we're just seeing this all pass through right now to a certain extent, it's not, you wouldn't see it in the PPI report is my only point. You would see it in CPI. PPI is not the place for it. But with PPI this morning, I think that's also an instructive release, because 8:30 a.m. Eastern rolls around, and what happens to the bond market, treasuries across the curve, they all rally. That's 8:30 a.m. today, right? This is Trump threatening Powell. This is Trump unthreatening Powell. But this is the release of the PPI. Yeah, unthreatening. But this is the release. You can see on the intraday basis that we're treating like 110.5 as a floor of sorts around here. And we're continuing to push up. So bonds losing that Trump trade, Trump coaster appeal. Maybe we get a bounce now from here. Maybe this is the sort of Damocles has been lifted, and we can rely on that positioning data that we looked at earlier this week. The notes market is exceedingly crowded right now. It is very crowded right now. And so if you do get a short covering rally anywhere in the curve, ZN is probably the place you'd be looking for it.
Yeah, I'm long ZB. I have a call spread. I jumped out of my long ZN position last week. I took some pain, didn't want to take more, so I got out there. I got long ZB in the middle of the range, assuming the inflation numbers would help us out there. Didn't help out as much as I needed to. I'm probably going to keep it on for at least another week and see what happens, because I got 37 days to go in there. So not doing well on bonds lately, though. So hopefully a position that turns around for me.
Bonds have been a tough trade for me, too. The notes are okay with the directionally neutral activities, but directionally in bonds has been a tough sledding for me personally. With respect to today's PPI data, did it move the needle on rate cuts? You bet. Yesterday, there was a 44.4% chance of a hold at the July meeting. At the September meeting. We're now looking at a 40.5% chance of a hold. So rate cut odds are up basically 4% net post CPI, post whatever we've heard from Trump today. So pressing on with the directionally neutral activity here. There's still 37 days to expiration. Short the 108. It's the short put spread at 108, 109. Short call spread at 114, 115. We're bouncing in between those levels. I'd like to see a little bit more recentering back towards 111, but beggars can't be choosers, Thomas. We're playing a game of running down the clock so long as we stay within the range, and that has not stopped working, so not going to get too wound up about today's news.
Yeah, I agree. There's not too much left specifically for the bond market this week. We have a couple Fed speakers, I think, still scheduled for today, but I'm not sure how much we'll get from that.
Retail sales tomorrow for the U.S. could be something that moves the bond market. You go into Friday, though, and building permits, housing starts, maybe consumer sentiment, if there's a big inflation expectations bump up there. Although, given what we've seen, consumers generally have been expecting a little bit less inflation as the tariffs have been pushed off. Will the recent commentary, will it have filtered through into the sentiment reading? That's certainly a place to look. Thomas, the metals here have been an absolute mess, like playing a game of Slinky, as it were. Silver prices, which were up on the day, are now slightly back in the red. They are holding at their 1 week moving average, though, which is the good news for bulls. 38.05 there. We're currently trading it at 38.08.5. Gold, likewise, getting a little bit of a lift here today, although very much pinned to its 1 month moving average for the past 2 weeks. So I don't think anything has changed in that regard. Volatility is pretty low as well. What do you think about the metals here on the other side of today's kerfuffles?
I got out at silver, luckily almost near the top. And I just realized I didn't put my exit on the follow page, which I'm going to do. But gold is just, it's lagging within this range pretty much at the 50% mark that it's carved out earlier in the year. Almost like a wedge pattern forming since April. I've been long gold the first half of the year, and I tried to be, a little long coming into the second half, and it didn't work out. And I think the long gold trade is kind of maybe just overdone a little bit for the time being. Silver, it had a little catch up. I think it could still catch up a bit if you look at something like the gold silver ratio. So if I do get long metals again, I think I'm going to try to play silver more than anything else. I think it would have a little bit more upside versus, gold being a haven and silver showing some of that industrial demand there. So, we've broken into really, new price ranges for multi-year levels in silver. I think a lot of the selling lately has been a bit of profit taking, which isn't surprising after breaking a range like that. So, the horizontal support you're drawing right now, I think that is definitely a make or break. If we drop below that, maybe we go back into this range where we just crowd around for a little bit again. But if we bounce, I think, and especially take out the previous high, I'd probably get long right before we break the previous high.
Yeah, this is a really interesting spot for silver because today's low coincides and aligns very neatly with a former swing high that we had here. June 18th high, 37.73. Today's low, 37.75. Nice. And we bounced from there, and we bounced back above the 1 week. We could say this is former resistance serving as support. It looks like that to me, at least. And it feels a lot like what we had seen in recent weeks, where we have those October and March highs. And sure enough, that was basically serving, you could put a band in here, but that was basically serving former resistance turned support. And it became a pivot point. So as a bull, the prudent thing is that this thing just needs to hold above 37.75 now. That's our line in the sand. If we're below there, it opens up the door for a return back towards 36. Just on a technical basis, you leave a consolidation, you return into it, false breakout, you retest the other side. Rule of thumb. That's how I play by it. So I wouldn't want to be long silver below 37.75 anymore. I'd wait for a more significant setback. Obviously, 37.07, the 1 month moving average, comes first because ever since the 20th of May, we really have been riding that rail higher. And so I would respect that as a potential entry point as well. And you can kind of squint and see on a 4-hour time frame, likewise within the range itself, you get down to 37.07, you're basically at the top side of a recent trading range within the range, kind of like inception. So we can remain constructive here, I think, on gold, on silver. The price action today has been uncomfortable, as has been most of it this week after pushing to $40 an ounce in the SIZ5 contract. But we are still, Thomas, I mean, you got out, I did not. There's 40 plus days to expiration. This thing retains a ton of value. I think we're going to swing higher. So I'm going to hold on.
I don't hate it. I just had to get out. Took my profit,
Yeah, you and Jamal, smarter, braver, more capable apparently than I am.
I'll get back in. I feel like I'm going to get back in soon.
Do you have any thoughts on copper now that we're a little bit removed from the initial craziness that was the tariff announcement last Tuesday? Do you find yourself looking at this with any discerning eye, and maybe not even copper futures themselves? It could be an indirect proxy like an FCX.
Yeah, I mean, Freeport is interesting. It didn't the stock price, it reacted a bit to that big move in copper, but not as much, because if you're mining copper, a 1-day price move isn't going to lock in, operating profits necessarily. It has to really sustain for quarters at least. But copper, I am long on. I got long, I believe, yesterday. So I'm long via put spread at 5.5, 5.45. Kind of seeing this as a little bit of like maybe a bull flag type pattern. Of course, the tariffs, they caused a lot of product to move into the U.S. The first half of the year. Now these tariffs go on August 1st, I believe. So that flow, the arbitrage and things like that, it's already stopped, because even though we're not at August 1st yet, those deliveries for metals take time to move around, so that arbitrage window is closed. So it leaves you looking at things like Shanghai inventory in London. Are they going to have to refill those? And are traders in the U.S. going to be willing to send that product back right away if the spread is still a little bit elevated, even though it's not as elevated as much for arbitrage into the U.S.? So, China is kind of ramping up plans for stimulus. They've been saying it for a while. They're at least doing some stuff on data centers with these chip export restrictions being taken off. So energy projects, data centers, going to require copper. They're probably going to have to, increase their supply a little bit domestically. That requires imports for China to do. So I think we could get some more upside, over the next couple months. My trade is 41 days out. Today a little down move. I don't think, you're expected to see this move retrace violently. If it did, I think it would be like a slog down. But conversely, I think, I'm positioned long, so I expect us to see some follow through next week, maybe the week after. The data I ran, I showed on OTCL, really 45 to 60 days after you get this big move in the copper gold ratio. Historically, there's been a 10% return from 45 to 60 days when that happens.
Interesting. Well, copper here could be in the headlines a lot. I mean, we get to the end of the month and Trump says, we're actually not going to put those tariffs on copper because we don't have the ability to get the mines open quick enough for it to make a difference. And we don't want our business. No, it's going to take years and years and years. Okay, so we're moving on from metals. We're going over to the energy sector here, where for another day, it feels like it's oil down, nat gas up. Is that still the case? Show me oil down, nat gas. Well, nat gas is now a little bit lower here. It was up when I wrote that. It's true. But we're now back to slightly lower, down by 0.14%. Thomas, you're a commodities guy. Tell us what's going on here in the world of energy with some of the inventory figures that have come out this week. Do they help your bull case for natural gas?
Yeah, I mean, so for natural gas, we've had pretty good inventory builds over the past few weeks. And now we're seeing, power. We got this move off the low. It came with some, updated weather models that leaned a little bit more bullish. And we were already in that probably oversold territory. So, the funds and everything, they were starting to take their shorts off because you get this new price level. Then you get the weather models coming in, offering some support. And now we got this tropical depression or tropical storm. They're saying it could become in the Gulf of Mexico. That could disrupt exports, but it could also disrupt energy demand if it, really moves inland. I definitely, last week I bought the micro natural gas on the long side. I took that off a few days after. I still have a short put spread on, and I'm keeping that on for now. It's actually, I'm going to be taking it off soon, or at least rolling it, because it's 12 days out. So 3.25, 3.3, at about 50% of profit on that. I think I'll roll it, and I'm not sure if I'll even adjust the strikes. It depends what, prices I'm getting. But I think, I don't think we retrace really lower here. But that it's all has to do with your week-to-week energy demand, things like that. For crude oil, they released the stockpile numbers today. We saw crude inventories fall by almost 4 million barrels for the week ending July 11th. The thing is, gasoline and distillate stocks rose. So distillate stocks rose 4.2. The expectations were only for a 200,000 barrel rise, so that's pretty significant. Gasoline stocks rose by 3.4. And that was compared to expectations for a 1 million barrel draw. So the analysts, kind of we're a bit off this week compared to the recent weeks. And we're past the July 4th holiday now, where you get some slowing in the travel demand, things like that. Now the next couple weeks, you get kids going back to school, travel plans are off, and you've passed this peak demand season. So the market kind of called Trump's bluff on this 50-day ceasefire thing for Russia. We saw, you would expect, if the market was taking it very seriously, that you would get more upside, but that's just not what we saw. And this goes back to the thing he's been saying, 2 weeks, 3 weeks. He's made kind of similar narratives before for Russia having to come to the table or preliminarily accept some terms. So I'm not getting along on crude here, but I don't think I'm getting short just yet.
Yeah, I mean, 15 days to slow the spread? We remember how those time horizons go.
Yeah, 15 days.
You have some legislation that just passed through the House, for what it's worth, regarding crypto. So crypto's getting a little bit of a pump here. Ethereum extending to fresh session highs, now up 8.36%, Thomas. Bitcoin as well, flirting with that 120,000 level once more, 19,075. Nice recovery after yesterday's, again, push up to a new high and then ultimate pullback over the course of the day. Where do we find ourselves now? We're still in energy here. Crude oil, I do want to take a look at still, because we do find ourselves in the neighborhood of a mid-20s IVR. It is exceedingly coming out of the market. It's not exactly, or it's increasingly coming out of the market. This is not a situation where oil volatility is all that attractive, and yet it is still a higher IVR than what you're going to find in your equity indexes in the futures market right now. So to that point, what's been a good place to operate around? This is going to sound like a broken record, Thomas, because quite frankly, nothing in oil has changed. But we have our former swing lows from March, which more or less became resistance in April and May. Okay, that's where the market stopped bleeding out after we had the Israel-Iran missile exchange back in June. And we're now currently at the uptrend here of recent swing lows. This is a support area. If you're 63 to 64 in the market, this is kind of the spot where if you want to be directionally neutral, it's a place to do it. As long as we hold that low from, we'll call it June 24th, down at 62.84. I understand if people want to take long deltas there. But right now, this is a market that's fairly calm. There's no geopolitical risk. And if there's no geopolitical risk, we play for sideways action. That's been the fortuitous and most efficacious trading strategy outside of periods of geopolitical strife. So I keep it on as far as I'm concerned. I'm going to keep my directionally neutral oil things going. And look at that. We're unchanged on the day. That's zero direction, Thomas. Music to my ears.
Yeah, I mean, the inventory number is not really, not yet moving things.
Talk to me about currency. Has the dollar rally been ruined? We find ourselves in a market where yesterday we rally up to the 50-day moving average here. And what do we see today? We get rejected from it. It's an area where we were rejected in June and in May. And ever since breaking below there in February, we really have not been able to sniff the other side of it. But we bounce off the 1 month today after Trump puts the toothpaste back in the tube. And we can see that the dollar's been rallying back here all session long. So, Thomas, you got to pick a side here. Do you bet on the continued dollar rebound? Or is today's bit of news a reality check for everyone who wants to get bulled up on the greenback?
Yeah, I think it's, a little gut check for dollar bulls. I'm probably biased because I'm long British pound. I got long, I think yesterday. I just think it's a little oversold and trying to play for that June swing low there. It's had a nice little, maybe you call it a relief rally after this extended downtrend. But I don't know what's really changed that much from the previous couple months, and why would it, what exactly is the argument that the dollar is done declining? I don't know. I think it's, I think we were due for a retracement. We got it, and now I think, we are going to set on the predetermined course here.
This is an interesting spot for the pound itself, having run into those swing lows that we do see from where we were in the middle of June, and we're getting a bounce there. We're also trying to fight back above the uptrend from those January, April lows. You could see that we're trying to get back above the 50. We're trying to get back above the 5 EMAs. So this is an important spot. The pound isn't exactly acing it, in my view. Because we had a chance at a bullish engulfing bar or key reversal, but we've since given that up and we've fallen back below those moving averages and those trend points. You look at the euro, it's a similar story where yesterday we closed below our 1 month moving average for the first time going back to May 16th. Today we're trying to fight back above there and yet falling back below the 1 month, back below the 1 week. It's difficult, Thomas, to make a real serious claim that the dollar's done rallying, even in a Japanese yen, which hit the lowest level since the end of March and finds a place to bounce there. Where's the dollar rally stalling out today? Basically at the swing lows where we had May and June carved out. So this is not exactly signs of the market telling you the dollar breakout, if you will, on an individual currency pair basis is finished. If anything, it looks like a retest of breakout conditions and the market saying, no. Thanks for taking your profit. We're ready to keep this thing going. So I'm going to lean long dollar still, despite today. And if stocks are up and bonds are coming back, gold and silver are selling off, the dollar's not going to throw in the towel just yet either.
So yeah, I think, if volatility came back in, you would see the dollar, that would be the best thing for the dollar to retrace lower, because volatility episodes in the past 6 months have been kind of a sell America theme. And so you would assume a volatility driven event would bring that theme back into the market. I'm still going to stay short the dollar. We'll see, what pans out.
Dollar. Bitcoin, Ethereum still running. Is the dollar in trouble today? DXY, you have much work to do, but this break of the downtrend, we can just zoom in and see that little wick here, pulling back up against it, 1 month, 1 week. Maybe that was the pause against the 50. This was the chance to reload, and we now keep going. But the dollar doesn't look done. Today's headlines, quite the roller coaster for markets, and yet we are back to where we started. What's next on the calendar tomorrow? There's some UK jobs data. There's also a US retail sales report. Consumption is the most important part of the US economy, 70% of GDP. The retail sales report is the best monthly indicator that we have on an official government statistics level for consumption trends. So we're going to keep an eye on it. Later in the evening, you're going to have Japanese inflation, which that should be fun, given everything going on with Japanese bonds right now and Japanese rice prices. So tomorrow actually is somewhat of an interesting day. Also, can't forget your weekly jobless claims there for good measure, Mr. Westwater. You and I are finished here, though. It is Wednesday. Wednesday means it's time for Truth or Skepticism. Tom Sosnoff, Dylan Radigan, they're up here next on Tasty Live. So go get a drink, go get something to eat. But at the top of the hour, Radigan, Sosnoff up next on Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks. Thank you, man. Thank you. I really appreciate it. Very kind word.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do. Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Hello, everybody. We are back. It is just a little after 1 p.m. Central Time on a Wednesday. It's time for Truth or Skepticism. I'm Tom Sosnoff, and I'm here with Dylan Radigan, as we have been for the past 10 years. Dylan, how are you?
I've never been better. I just got to tell you, I'm quite excited. I'm delighted. I got ants in my pants. I got to dance. I feel good. What's on your mind, sir?
Wow, you're dying your dance floor. I like it.
I'm ready to dance. I got ants in my pants.
Well, we had a bunch. I had a bunch of different directions that I wanted to go today, and then all of a sudden, at about whatever it was, 10:30 Central Time this morning, the markets go kind of crazy. You know, I'm looking at the
S&P. What was happening? I missed it. Did something happen?
Well, I'm about to tell you.
Oh, sorry. I didn't mean to interrupt you. It's rude. I didn't mean to be rude. I'm sorry.
No. I'm sitting here and I'm watching the S&Ps, and they're up whatever 12, 13 handles, and I'm kind of answering an email to a customer and just kind of looking at my positions. And next thing you know, I look at my screen and I'm like, what the hell just happened? S&Ps are down 20. Bonds dropped from up about 15 to down about 10 or something, and I'm like, what the hell?
And this happened as a sudden moment, just out of nowhere.
Just out of nowhere, completely out of nowhere, out of left field, almost like so. I'm like, oh my god, what did the Orange King?
The bombs in Iran.
What did the Orange King, wannabe king, say? What did Trump? What possibly could he have spewed out of his mouth that would have made the euro explode, so the dollar get annihilated, bonds crash for a second, and the S&Ps drop 30, 40 handles, and I really had no idea. I'm just sitting there looking. I'm like, what could he have said? Just playing it out in my head. And we had expiration of the VIX earlier this morning, so it's like, perfect timing. And then Josh comes in and he goes, yeah, Trump just said that, or somebody just said that Trump said that he is going to, it's highly likely that he will fire Jay Powell.
No kidding. That's quite a statement. That sounds like a rumor, though. That can't be a fact. That sounds like a rumor.
Well, if it was a fact, he would have fired him. But clearly there was a discussion, and clearly he asked a bunch of people what their opinion was, and clearly he made the statement that it looks like he's going to fire him. And then when he saw what the markets did, when somebody told him, because I don't think he watches the markets, but when somebody told him that, the markets don't like this, boss, the markets don't like this, then he reversed course again. Now, what's interesting about the whole thing, I don't really care about the events. He backed off this already, and bonds are back to unchanged. S&Ps are up a little bit, NASDAQ's down a little bit. All that stuff's irrelevant. What's important here is a discussion on just this topic. How independent is the Fed, and how important is it for the Fed to be independent? And does a president have the right or the ability to fire or replace the chairperson of the Fed? And let's remember all along, because Trump slipped up today and he said something to the effect of, well, he's a Biden appointee. No, he's not. He's a Trump appointee. Let's be clear. Jay Powell is a Trump appointee that Biden happened to have kept. And another small little tidbit here is that, over the weekend, Jamie Dimon actually came out and said, hey, you know what? The president of the United States should, and Jamie Dimon is a Trump supporter, and basically came out and said, hey, you know what? The president of the United States should never even consider firing the Fed, chairman of the Fed. So this brings an interesting discussion topic today, which is how dangerous is politicizing the Fed? And what do we do when you have, whether you like Jay Powell or you don't like Jay Powell, or you like these Fed governors or you don't like the Fed governors, the reality is the reason that you're a Fed governor or the reason that you are chairman of the Fed is because you're an economist that actually understands how everything works. Doesn't mean you're always going to be right. Doesn't mean you're going to be the greatest person in the world. It just means you have.
But you can read the dashboard. You can read the dashboard of the financial cockpit.
You can read the dashboard. You can talk the talk. You can articulate your position, and
you have an opinion and use citations to back up your opinion based on data in the dashboard.
That's exactly right. There is no question that what becomes dangerous. I shouldn't say there's no question. What becomes dangerous is if an impulsive president who is either doing one of two things. Now, this is what I'm going to throw out there to you. Is this an intentional distraction to get people to stop talking about the Epstein files, pedophilia, Trump, whatever you want to say about Trump? There's no question. This is the most disruptive thing that's happened to his political career and campaign right now. Being an adjudicated rapist did not hurt him. Being a convicted felon did not hurt him. But potentially being in the Epstein file and being a pedophile, whatever you want to say.
Being client number 9.
Being client number 9 or whatever you want to say, sharing a girlfriend with Epstein for a year, being in all this stuff, whatever you want to say, that does upset his base. So is this a distraction from that, an intentional distraction from that, number one? Or B, is this just an impulsive, slightly delusional, slightly early kind of onset of dementia type of president who's just like, you know what? Things aren't going the way I want them to go. Inflation is out of control, and the bonds are are way too low, and I want interest rates to be lower. So regardless of where the bonds are trading, I'm just going to lower interest rates, or I'm going to bring somebody in the Fed that's going to lower interest rates, no matter what, even though it makes no sense, even though you can't do it.
So I'm going to tell you what this is.
I'd love to hear it.
Well, you're going to find out. So you were around yesterday, weren't you?
I think so.
Watching things, seeing things.
Yeah, sure.
So one of the things that happened yesterday was an objective confirmation that the Trump tariffs are massively inflationary and directly inflationary. And another thing that happened was the Fed chairman said he would cut rates if it weren't not for the inflationary problems of the tariffs.
Okay.
On the other hand, you have Trump who's all into the tariffs, and Trump's opinion is if he just cut rates, I would have less. There'd be less grinding of the gears as I implement these tariffs. So you have Trump sitting there saying, listen, if you cut rates, I can do my tariffs. And then you have Powell sitting there saying, as long as you keep doing these tariffs, I can't cut rates. So I mean, not that these two are intellectual equals, because obviously they are not, but if they are sort of equivalent power in a sense, even if they're not of equivalent sort of competence. And so imagine you got one gentleman on one side of the table saying, listen, if you lay off these tariffs, I can cut rates. And you got the other fellow saying, I need you to cut rates so that I can do my tariffs. And I believe what we're seeing happen here is an impulse as a reflex. I want to say it's an impulse, although there's probably not much of a difference, but as a reflex from Trump to say, well, we're in this dispute. Tom, you want this, and I'm Dylan, I want that. Well, if you don't agree with me, I'm going to get you fired. And so I think what you're seeing Trump do is sort of get frustrated with Powell's refusal to see his point of view, which is cut rates and I can do tariffs, as opposed to I won't cut rates because you're doing tariffs. And so he reflexively was like, well, then if you won't do what I want, I'm going to fire you, because that's kind of his signature. That's his reality TV tagline, is you're fired. And so I think it was just a reflexive reaction to the tension about inflation, which obviously, and I think for the thing that's most consequential for me is I do believe, and I guess before I get to that thought, I don't think it has anything to do with Epstein. I think the Epstein thing is a titillation. It's sort of like I'm not saying that
I think you're giving Trump more credit than he deserves, and I do think that he is that vain and that conscious of it, and I do think that he does create distractions. But can I give you an example of something I think that make everybody understand this?
Sure.
Let's say you are a real estate agent for Trump. You're his real estate agent. He wants to sell a piece of property, and Trump wants to sell a piece of property for $100,000, just to give you an example. And you're the real estate agent, and you say, but all the comps in the neighborhood are $50,000. Every single house in the neighborhood is $50,000. Your house is no better, no worse. It's the exact same house.
It's a $50,000 house street.
You have a $50,000 house in a $50,000 neighborhood. Every single house is the same. Every single house sells for $50,000. There's multiple houses. You can buy as many houses as you want on the block right now for $50,000.
God bless America.
That's right. But Trump's like, I want to sell my house for $100,000. And Hal, his agent, says, there's other houses on the block for $50,000. I can't sell your house for $100,000. So Trump says to Pal, you're a freaking idiot. You're the dumbest real estate agent I've ever seen. You have no idea what you're doing. You're a moron. You have no reason to be in this role. Who the hell hired you? And I got to fire you, find somebody else. I can put anybody here can do a better job than you, because this house needs to sell for $100,000. Yet There are 5 other houses that are exactly the same that are all $50,000. That's the market we're in right now. Bonds are trading for under 112, or they're exactly 112. All right. Now, no matter what you want to say,
above 5.
That is the $50,000 house, where the bonds are trading.
The $50 house. I get it. The bond market is the house price.
Trump wants to sell bonds at 118, okay, or 120 to get the interest rates he wants. But they're currently trading at 112, and there's an unlimited supply at 112. So this is how ridiculous this whole discussion.
That all makes sense. But that doesn't mean he's doing it because of Epstein. That just means he's saying, I want to change the interest rates.
Well, nobody could be dumb enough.
And I'm saying, yes, he wants to change interest rates. What's that?
My argument is that anybody that understands, I don't know, math, business, anything else, knows that if there's 5 other places for sale at 50,000, you're not going to sell yours for 100,000. And that's all Jay Powell's saying.
Fair.
Okay, that's all he's saying.
Yes.
So Trump has 2 things he can do. He can call him an idiot so that he saves face in the public eye, because half the people that like him don't even understand how that works. That's number one. And number two, at the same time, it creates a distraction where he doesn't have to worry about the Epstein files for a couple of hours.
And what I'm saying is, I agree with Plan A. I don't think the Epstein thing is, all I'm saying is, and we don't have to go down the deep path on it. I think the Epstein thing is problematic politically, and it has all the sort of aspects of, scandal and horror that are problematic and also politically challenging for him, because he doesn't really care about scandal and horror. He just cares about his political power. But I believe what we have right now is what you just described, which is a homeowner who wants to sell his house for $100,000, and he's like, I'll just fire you, and I'll find a broker who will get me $100,000. Right. But I also think that Trump is insane enough to think that if let's say he puts in Joe Kernan from CNBC as the new Fed chief, because he's or Maria Bartiromo, one of the real Trumper TV hosts, sure, right? Like the equivalent of what's his name at the Pentagon.
It's the equivalent of Pete Hegseth. That's all it is.
Yeah, it's a sort of financial TV equivalent of Pete Hegseth.
Well, he did it before.
Maria and Joe.
He did it. That's his MO. He did it before with Larry Kudlow.
Yeah. So he puts Joe Kernan in there as the Fed chief. And I want you to drop rates by, of 100 basis points. I need rates in the high 3s, not in the high 4s, not dancing around 5. I need them dancing just south of 4. Cut rates by 100 basis points. And let's say Joe Kernan comes in and cuts rates by 100 basis points. I mean, do you see, the reason that none of it's going to happen is because as soon as he just the rumor that he's going to fire the Fed chief caused a substantial market reversal. The actual attempt to do it would go to court because there's no legal basis to do it. This is, I guess my I don't want to be dismissive of this, but I feel like we need to be a little bit dismissive of this because we know Trump is a nut job in this context. And he can't fire the Fed chief. Even if he says to the Fed chief, you're fired, the Fed chief will say, no, I'm not. Now, he could escalate and say, I'm going to dissolve the Federal Reserve because the Federal Reserve is unconstitutional, which his base would love. But what no one's going to love, including his base, is mortgage rates at 9.5% and inflation at 4% and a block of cheese for $25. And so I just don't see how, the thing that I think is most interesting, this is sort of the most interesting point of the conversation for me, because we've kind of danced around this in the past, which is I kind of take comfort from the fact that I'm like, listen, whatever this guy does, the markets are going to intervene in a way that's never going to get that far off the rails. He's not going to bankrupt America. He's not going to collapse the dollar. He's not going to fire the Fed chief, because anytime he sort of dances up against the wall, the bond market is more powerful than the president of the United States, even if the president of the United States thinks he's the king of the world. And I guess my question for you is, maybe I'm naive. I also, by the way, didn't think Vladimir Putin was going to invade Ukraine. I was wrong about that.
I didn't think Putin was going to invade Ukraine, and Trump defended
the day
him.
Before, I was like, no way.
What? Trump spent 4 years defending him, And I didn't think that was going to happen either. But, you said he's not going to destroy the dollar. He already has. You're saying he's not going to destroy the bond market. He already has. He's not going to destroy American credibility. He already has. He's not going to destroy American goodwill. He already has. So, I mean, let's be careful here. Let's not think he's not capable of certain things.
No, that's my concern about myself, which is that I'm a little too naive in thinking like how bad.
He's lame duck. He's a lame duck. There's no stop.
But it's not about his intent. I'm just saying, I just feel like there must be some resistance from the Republican Party or the marketplace. He'll do whatever he wants, but I mean, at some point,
do you see any resistance from the Republican Party?
I see the bond market in April. I saw the bond market this morning.
Okay, but do you see any? The White House was very clear. This is a really interesting story because I'm glad you brought that up. But I'll read it to you because the White House was very clear in the statement that they made just earlier today. And I think it's interesting because they said, and I'm going to quote this for you. They said that they were very clear to say that hours after Trump told a room full of Republican lawmakers he was likely to fire Fed Chair Jerome Powell, he denied the plan. But then he went out to say, I wouldn't rule anything out, and that he received support for the move from the Republican lawmakers. Now, he probably didn't receive any support for that move at all, but they were very clear to take the burden off him and say that they didn't say who it was, but they said he received support from the other Republican lawmakers in the room. Like it was really important for them to say that, to take the pressure off him. That's not what happened. And
of course,
there's no Republican lawmaker that would be dumb enough. Well, maybe there's a few, but I doubt there's enough that would be supportive of this move, knowing what kind of chaos it would create in the financial markets.
Say that again. You're saying there's not a Republican dumb enough to not understand how bad this is? Is that what you're saying?
No, what I'm saying is that they were very clear to throw a group of an anonymous group of Republican lawmakers who said they supported his decision to relieve Powell of his role.
I got that part, but then you're saying, what I'm
saying is it's highly unlikely to me that actually happened, and that is just
because you're saying the Republicans aren't that stupid.
Well, I'm hoping that they're not. I mean, the Jamie Dimons of the world were very clear. This is a stupid move, and this should never happen. This is not good business.
Shouldn't be a topic.
It should not be a topic. You have over the top of this market, you have tariffs, you have a lot of other issues. What you don't want to have is an overnight tweet where Trump goes on some kind of a rager and just says, you know what, screw it. I'm not listening to anybody. I had a bad day. I'm getting rid of Powell. Because now, the markets are going to be really nervous about that no matter what.
And so, but I think that, so terrible, horrible. But I am of the opinion when you have a Trump saber rattling about tariffs and the market sells off, you should buy stocks because I believe that he'll back up. And I think if the new saber that shall rattle is I'm firing Powell, I would say it's straight up buy the dip. That every single, like if he's going to do this now and he's going to come out and tweet in the middle of the night or leak a letter or whatever he's going to do, I mean, I just think that it doesn't help with the underlying destruction of American credibility for competent executive function, which has obviously been lost.
Yeah.
But I still think there is hope for competent executive function in the U.S. government bond market marketplace or at the custodians of U.S. bonds. I don't think that their executive function. I think Jamie Dimon's executive function, and I'll go down and list all the banks, but I think that the executive function at the large financial institutions is intact, and I think that they'll hit the sell button and run rates to 5, 5.5, 6, like whatever you want, man. I mean, I don't.
Again, it's not that. That's not the important thing. The important thing here is how do we check the executive branch when the executive branch is a little bit out of control, and also you can't trust what they're saying. The exact quote, I just got it for you, was the president asked lawmakers how they felt about him firing the Fed chair. They expressed approval for firing him. The president indicated he'll likely will do so soon, said a White House official who spoke on the condition of anonymity. So, I mean, that's, to me, clear as day that was like just one lackey sitting in the room, and this was just Trump going off the deep end. When he saw what the markets did, he panicked and went the other way. And he probably got a series of immediate text messages and calls from the Jamie Dimons of the world, from the heads of all these different banks who said, hey, what the F are you doing? And then he changed his mind. Okay. But that is not a stable genius. That is a very unstable idiot.
So
sorry to disappoint.
I'm sorry.
MAGA lovers, but I'm sorry. This is what we're dealing with now in the financial markets. This is what we're dealing with in life. And it's not healthy. It's just not good business.
It's terrible business, and again, I think you have to separate the unstable idiot from the actual ability to implement the idea of the unstable idiot.
But you know what?
You don't believe that it's possible.
I didn't believe they could overturn Roe v. Wade. Okay? There's a lot of things I didn't think, Dylan. I didn't think that they could actually convince half of America that we did not have a free and fair election. So let's not underestimate this threat. I mean, did you ever think in America that we would be questioning, that half of the country would question whether the election was fair? Come on.
Incomprehensible.
Incomprehensible is right.
I've been wrong 1,000.
Right. So why does firing the chairman of the Fed why do you even think
there's no legal authority? There's no authority. Like, I can't fire you. Like, if I say fire Tom Sosnoff, I have no standing at IG Group to do that.
Well,
I have as much standing to fire you from IG Tasty Trade as Trump has to fire Powell from the Federal Reserve. I can't fire James.
I don't think that's right. I don't know that there's not some kind of crazy executive order out there. And when you're the president of the U.S. and you've basically been given you're immune to anything according to the Supreme Court, then I'm not so sure you can't do it. I don't know. I'm not so sure that he couldn't fire Jay Powell, make himself the temporary chairman of the Fed, lower interest rates, and then say, you know what? I did it. See? No problem.
And what? Have security meet Mr. Powell at the office and basically just, refuse him entry? Because Powell, I bet you would not, because Powell's not going to, like, if Trump says you're fired, it's not like Powell's not going to show up to work the next day. Powell's going to say you don't have that authority. So it would literally come down to a security team at the Federal Reserve building, disabling his, cybersecurity team, shutting down his tech, and refusing him entry.
Well, you've seen they've already tried a smear campaign against him on this, $2.5 billion of renovation. I mean, it's a pure, you heard, pal, it's a pure smear campaign. I mean, they're already trying everything they got.
All this time. First thing you do, accuse the other guy of fraud.
Of course. In fact, what Trump actually said, this is how crazy, he actually mentioned in this that he's probably not going to fire him now. He thought about it, and he's not going to fire him unless his exact quote was, "I don't rule anything out, but I think it's highly unlikely unless he has to leave for fraud." That's his quote.
I saw it, and I was like, "Oh man,
that's
you're
his
going to do
quote." Now,
that is like the New York switcheroo, baby. That's straight out of Queens.
That is the
all due respect to
scummiest.
Queens.
That is the most low life thing you can say about anybody. That's like, listen, I'm not going to divorce you unless I can prove, here's all the, I mean, it's incredible. It's incredible. I mean, and if your pal,
how do you trade it?
How's it worth it for you? Like, you should say, you know what? Take your freaking job and shove it. Because my
bet is that Powell probably has some patriotic or moral component. Actually, I mean, I've never met him.
Let's hope
but
he
I
does.
do think that there are people that serve in the government that actually hold on, that actually have moral and patriotic aspects of their character that they feel a responsibility.
There was a lot of those people, and that's why they started Doge, so they could purge everybody that was loyal to this country and make it loyal. They only wanted people that were loyal to Trump. I mean, that was the whole concept behind Doge. Let's get rid of lifelong civil servants. Let's get rid of people that have committed their life to making this country a better place, and let's only have people on the staff that support this guy.
But that's not the case at the Federal Reserve at this moment.
Trump appointed Jay Powell.
I know, but I'm saying, I'm just saying Powell is not Pete Hegseth. He's not Joe Kernan. He's not Maria Bartiromo.
Right.
Like, he is an independent economist with a credible history who's not going to just do whatever the president says.
Yeah, I mean, the last person that I would be worried about committing fraud is Jay Powell. But if you're throwing it out there, there's a reason you're throwing it out there. It's embarrassing. It's unbecoming of a U.S. president. First of all, it's embarrassing for a U.S. president to call the chairman of the Fed, who you appointed, an idiot, a moron, and somebody who has a low IQ. And then it's another thing to backhand in a backhanded way to accuse him of fraud. I'm sorry. That is not what this country's about. And stop defending this guy, okay? He's a sick, sick man, and people need to say it. Got to stop hiding, stop defending, and that's it.
And do you think that we will start to see that from the executive class? Do you think you'll start to see the tech and the tech and finance CEOs are probably the best positioned outside of like the sort of top 10 banks and the top 10 tech company?
No, the tech CEOs are gutless. The tech CEOs showed their true colors in the last election. They're gutless. But the finance CEOs, they will speak up, hopefully.
Meaning Jamie.
Well, he's the only one that ever talks anyway.
Fair enough. Who is the CEO of Morgan Stanley? Does anybody even know? I have no idea who's running Morgan Stanley these days.
No,
nobody knows. That's the point. What about Larry? Larry Fink speaks up over at BlackRock sometimes.
No, the other guy does. His partner, I forgot his name.
At BlackRock.
Yeah, I forgot his name.
And sometimes Steve Schwarzman pipes up over at Blackstone.
Yeah, Steve Schwarzman does pipe up, and the other guy at BlackRock pipes up, and then Jane Fraser is the CEO of Citigroup, but I don't know. I've never heard her talk.
I've never heard her say a damn thing.
Thereby.
Does this alter? Do you have a trading perspective that results from this that is of any consequence?
No, I'm fading it. I bought bonds into the down move, so I didn't think he would stick with it, and I thought he would back off, and it actually worked. So I faded it like most people. I mean, when the bonds were down earlier today, when they sold off into the 111.20 something, we bought some. 111.13 was my low buy. So I thought it would turn around. I thought he would back out, and he did. But that doesn't, that's me as a trader. That's different than me doing a podcast.
Different than the existential issue, the institutional rot that exists right now.
Listen, the integrity of the financial system, where all the wealth that I've accumulated in my lifetime is somewhere in this financial ecosystem. Okay, so I care deeply about the integrity of the listed marketplace, the non-listed marketplace, the whole financial ecosystem, and the integrity of all that is really important to me. I can't stand when people say, oh, they've got an advantage. They've got an advantage. It's not a level playing field. And we work so hard to make it a level playing field. And then somebody like, the Trump crime family comes along and they show you how the playing field isn't level when they're involved. And there's nothing you can do about it. And it bothers me. Whether they're grifting in crypto or they're grifting, whatever.
Bother you, or do you? Yeah. Is it just a moral bother, or do you believe that it is an existential risk?
Both.
Do you believe it does represent a small percentage point, but it's not a 0%? It's a non-0% chance that it represents material existential decay, if not total collapse. But,
I wrote about
meaningful
diminishment. I wrote about it this weekend. There's less than a 1% chance of sovereign default. We talked about it last week, and so I personally don't worry about that but I do worry about everything that we've worked so hard to build, and the trust and confidence and the integrity of the system that we've, committed a lifetime to. Yeah, I worry about that.
Where would people go? I mean, that the sort of like the ultimate leverage for the United States as it was in 2009. I mean, it's like, okay, full banana republic, full corruption, full. Where are you going? London? Tokyo? Hong Kong? Milan?
I don't know.
Yeah, I don't see it.
I don't know that there is any. I don't know that there's anywhere else you can go. I don't see it. And with what's happened to the dollar, I really don't know that you can go anywhere else with what's happened to the U.S. dollar right now. I mean, you're going to pay
because the cost of exiting, the cost of the currency situation is so horrendous. You're saying.
Yeah, I mean, you're going to pay an 18, well, not 18, but let's call it a 15% penalty to, an exit penalty. That's pretty heavy, 15%.
Mm-hmm.
So I don't know,
I mean, don't you like long? But I like long dollar here, though. I'm not to go all trader talk, but I just think that I still feel like this is it's sort of like when Trump starts to talk about firing Powell, that's like ringing the bell at the bottom. Like there's nothing else for him to do at that point.
That gets back to the argument that we started with, that this is, part of this is a distraction. And I do believe that. I think that's, like you said, this is made for TV. This is a made for TV presidency. He's not a president. He's a TV personality. And this is made for TV distraction. This is classic soap opera stuff. He loves it. He loves the drama. He lives for the drama. I just don't think he thought that he would ever. I think when Epstein killed himself, Trump thought he was off the hook for good. And that this came back to bite him is something that kind of caught him by surprise.
Mm-hmm.
I mean, listen, when some of your hardcore
I get it as a buying opportunity for the dollar. I look at the bonds to the bond. I think all of it is entry points. I think that
Okay.
like I would say Trump's out of bullets. I would say Trump is 6 months old or whatever, however long he's been president. He's already out of, like, if he's already, what else is he going to do?
Well, the reason that I like the bonds here, is because I do think, the Fed really does want to cut, but I think that Powell is going to outlast Trump, meaning that Trump's going to back off his tariff policy before Powell backs off his Fed policy. So what happens is, if Trump backs off the tariff policy, which he's already started to do, then it gives Fed, it kind of makes the Fed's job easier. And then the bonds can start naturally to rally a little bit. It looks like, maybe they want to start to rally here. And so that would make, everybody happy. So the question, for Trump becomes, at what point does he self-destruct? Meaning, he backs off the tariffs for now. The bond market starts to rally. Powell goes through and starts to, push for lower interest rates. And then Trump seizes that opportunity and brings out tariffs again. It keeps the whole roller coaster going.
And then inflation basically is a disaster as well on the other side of this.
Inflation is a disaster right now that nobody. First of all, the Democrats are horrible at articulating the what's happening right now with respect to inflation. But inflation is absolutely out of control. It's running rampant, and it's a very dangerous situation now. And the tariffs only make it a lot worse. So the question becomes, who's gonna flinch first?
It's a game of chicken. I agree with you. I mean, Powell has there's less pressure on Powell. Powell has the ability to wait it out.
Powell has a $50 trillion market that supports his case. So there's a $50 trillion marketplace that says exactly where bonds should be trading right now. It's not his call. He doesn't have any money in it. It's got $50 trillion out there. They're marked to market, tick by tick. It's not some arbitrary, it's not some subjective number. It's not something arbitrary that somebody makes up. There's a marketplace that is the biggest marketplace in the world that says to the 100th of a penny where the market is. So Trump can scream and yell and huff and puff and do whatever, but you can't. The market is what the market is. Gets back to the houses are 50,000. Can't sell yours for 100, no matter how much you want to. They're 50,000, and until you get those $50,000 houses up to 100, you're never selling your house for 100. Period. And that's the marketplace. That's on Powell's side right now.
I think we should leave it here, sir.
I'm Tom Sosnoff. He's Dylan Radigan. Thanks so much for spending time with us today.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. I've been trading for about a year and a half, done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck. No. That's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. Back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
What is going on, everybody, and welcome back to today's assignment. We're back in the classroom with Dr. Jim. We got a little bit to talk about today. We got some earnings to get into today, Dr. Jim. So the segment today is earnings on deck. But before we do that, how are we doing? How are we keeping up today, Dr. Jim?
Man, what's going on? Look at you, man. You made the move. Like, you are a Chicago resident now.
I mean, Chicago.
That's big time.
Yeah, I mean, some deep dish pizza. I mean, I don't know what else you need to check off the box to be considered a local. Maybe a Wrigley's game.
Well, you got
like that?
to take it. Well. So it could be a Wrigley's game, but from what I understand, and I mean, I was there for 5 years. You've got to take a side. Like, are you going to be White Sox or are you going to be Cubs? You can't really be both. So.
Is that a thing?
Oh yeah.
Okay.
Yeah.
I'll get back to you on that. I'll do a little bit of research and I'll get back to you on that. But if there's anything else I need to know, let me know. Yeah, we're local now.
That's exciting. That's exciting stuff. And no, Chicago's an amazing city. I absolutely loved being there. It's very fun, especially now, especially in July.
Oh yeah.
Like it's so beautiful outside, right? Like Armageddon's coming. Like it's coming. Like about October, November, you can't get away from it. But right now it's amazing.
Oh yeah. No doubt. Before we do get into that, Dr. Jim, we got some earnings. Today, we had a lot of volatility in the market. I mean, if you don't have your news sources open or your Twitter open or something like that, you're going to be like, why am I getting whipsawed right now? Do you have the platform open at the time of all that whipsaw action? We're going to get into it here in a moment. But we have a lot of volatility heading into the next earnings that we're going to get after the bell and into the rest of the few days of the week we have here.
No, I certainly did. I saw it happen like live. I didn't know what was causing it. I didn't have my news sources open like I should have. But man, it happened like twice. On the way down, like the market was just creeping higher all morning, and then it sunk, and then it actually kind of started creeping back up, and then it sunk even further down. And so I was like, wow, man, like what's going on out there? And apparently it was all the Trump Powell stuff.
Right.
And it's so funny, man.
Isn't it
it's
crazy,
so funny.
Though? That's a crazy feud to be having right now. The president and Jerome Powell. I mean, it feels like I'm watching a South Park episode for real sometimes when I really think about what's going on right now. So we'll see what happens. A lot of volatility, a lot of headlines, a lot of stories. So will they come to fruition? I don't know, but it's moving the market. So we can go ahead and jump into.
No, it definitely is. And I'll tell you, the market, though, the market's resilience is still, it's second to none, man.
Yeah.
Like, it's just the tariffs, the Powell stuff, all the other stuff. It's like, man, it's just taking it all in stride. And here we are, immediate S&Ps at 6,300, basically, 0.5% off of all-time highs. And so that's pretty incredible, to be honest with you.
No, it's been insane lately. We can go ahead and jump into these slides. Earnings on deck, Dr. Jim, and to your point, I mean, we've just been floating to the upside. I'm really curious just to see how these earnings are going to be, or the market participants or the market as a whole is going to respond to some of these outcomes. But we can go ahead and jump into the first slide here. We got earnings on deck, just a little overview on what we got coming this week, and then what I want to do
earnings on deck, man. Look at you, bro. I mean, Chicago, it's already changing you. It's already changing you for the better, I might add. We're doing segments. Yeah, we're doing segments on earnings. Like the whole focal point is earnings. I've had to drag you.
Are you hating on the weight loss drugs, Dr. Jim? You hating on the weight loss drugs?
Yeah, I mean, what a comeback. What a rebound off of the weight loss drugs last week. I've had to drag you kicking and screaming to do an earnings trade. Now it's the focus point of the whole show. Like, I love it.
No. I just got to remind you what we got coming. I haven't put on the earnings trade yet. We have United Airlines after the bell. I don't know. Maybe we could whip something up to where we can pull the trigger, send something through for United Airlines earnings. Maybe. But on the radar, Doctor, you like what I did there? On the radar, we're earnings on deck, on the radar. Wednesday, July 16th, after the bell, we got United Airlines. A lot of headlines surrounding Boeing, some other airlines like Delta. So will United Airlines be influenced by what happened with Delta and the other, or anything else within that sector? I don't know. We'll see. Premiums are pumped up pretty big right now. We'll get into the platform, maybe put a trade on. Thursday, July 17th, we have Netflix. Good old Netflix, the OG. I do have a Netflix position on right now. I have an out-of-the-money call spread. 30 days left to expiration. I gotta get your thoughts on that one when we get into the platform here in a minute, and how I want to manage that one. We're up a little bit on it. We'll get into the details. And then we got Friday, July 18th, American Express, financial services, credit cards, consumer business spending. And right now, these could be very important. I know student loans, the buy now, pay later services are now going to be reported to the financial bureaus, if I'm not mistaken. So there's going to be a lot that goes around just the credit lines as a whole. So I think these credit card companies could see a little bit of volatility too, but that's going to be on Friday. But I did kind of pick and choose which ones I threw up on here. These ones are notable to Errol. Are these notable to you, Dr. Jim? Did these stand out at all? Were there any other earnings that were on your radar? But these are the three top of mind for me this week.
Yeah, I didn't know about United Airlines and I didn't know about American Express. Obviously, Netflix is kind of on everyone's radar.
Yeah.
For me, it seems like the way that the schedule usually unfolds, Netflix is kind of the start of the earnings season, in my opinion. Like, we've had some banks, obviously, this week. I think even some banks last week. And so the banks are technically the start of earnings season. But to me, a lot of times the big moves aren't going to come until the tech names start dropping some earnings. So Netflix is usually first, and then shortly thereafter, you've got everybody else. You've got Meta, you've got Microsoft, you've got Apple, you've got Amazon, you've got Tesla. Like, that's all going to kind of follow, the stage that Netflix sets. So Netflix is obviously on my radar, but I didn't even know about United Airlines or American Express. But Goldman Sachs was this morning, and then earlier this week was like J.P. Morgan and Citigroup and stuff like that.
Were you doing anything in any other earnings prior to today?
Yeah, I did all three of those. I did Citigroup. Yep, I did J.P. Morgan. I did Goldman Sachs. Citigroup ended up being a nice winner on an expect to move butterfly. J.P. Morgan was kind of a TBD. It didn't go, much in either direction. And then Goldman Sachs this morning. I don't have it in front of me. What is Goldman Sachs doing? GS?
GS is doing.
I think it's up, right? I mean, because the market's obviously recovered nicely.
GS is up 370 right now.
Nice. So it's what, 705, 706?
706.20. 706.20.
Okay. That should work out then. That should work out.
Yeah.
It won't be a huge winner, I don't think, but it should be profitable. So I'll come back to that tomorrow on From Theory to Practice. But those are the three I've done this week, and then I've got you know, kind of all hands on deck for Netflix tomorrow.
All hands on deck. Earnings on deck. Let's get it. We can go ahead and jump into the platform here, Dr. Jim. See some of the earnings we're going to be looking at. I know we got PEP. I see over here in the chat too. United Airlines.
Pepsi has earnings today?
Pepsi. You know what's so funny, Dr. Jim? Pepsi was on the slides and I took it off.
What? Man, you're killing me, bro.
I know. I was like, it's either Netflix or Pepsi. I wanted to do one for each day, like something the most notable for me each day. And Pepsi, I was like, Dr. Jim and his Pepsi. Yeah, we're gonna go with Netflix. Let's go ahead and remove Pepsi.
Like, not only should you have a Diet Pepsi in your hand right now, but that absolutely should have stayed on the slides.
I actually cannot lie, Dr. Jim. I've had a Diet Pepsi. I think I might have had one yesterday and the day before that, but I never drink. I don't really drink soda, but I never really, especially Diet Pepsi. But I've had it the last couple of days and I see the appeal. I'm not saying it's superior, but I see the appeal as to why you might sip on that. I'm not saying it's better than Diet Coke, but I get it. I get you. I get it.
This is how it all starts, though. This is how it begins. Like, now there's a little crack in the armor. Yeah. Like, this is where we find our way inside.
Right.
And so
before you know it, you're trading earnings every week. Yeah.
So is Pepsi today?
Pepsi is, let's double check. Pepsi is going to be before the bell tomorrow on the 17th. So in the morning, pre-market.
Okay, so it's so it's basically today then. You have to trade it today. For
sure.
Okay,
yeah.
All right.
So we got Pepsi. We can look at that too. 85.9 IV rank. August cycle. I mean, contracts are looking decent, and we're not even going to start with Pepsi before I get a little salty here. We're actually going to start with Netflix, Dr. Jim. And then I want to take a look at this Netflix position. You know, we got Netflix after the bell tomorrow. This is a position that I have on right now in Netflix. I sold an out of the money. I sold an out of the money call spread. It's about $5 wide. What did I collect on that? I collected $223 on it. We're up about $36. You know, we're up a little bit, almost break even. Things could really swing in one direction within the next 24 hours. I could take this one off. This is the one that I'm pondering on the most today, especially before the close, because I think I need to do something or I need to make my mind up. But I'm pondering on just maybe taking the position off, taking the $33, repositioning for earnings if I want to do that, redeploy the capital elsewhere. But I do think sitting in this through earnings is just going to be a gamble at that point, if we're being completely honest. So I didn't put this one on initially as an earnings trade, or I wasn't planning on holding it through earnings, but that's the predicament that I'm in right now in Netflix. I mean, it could work out even better. I mean, it is defined risk. So I am accepting the risk that I already put on order entry. What are your thoughts on that one?
Yeah, so you're in a really interesting spot, in my opinion. So you're up, 30, 35 cents on the trade. One of the things that I always talk about when you're in a position like this, or even a lot of positions this is going to apply, is the idea of economic significance. So you need to figure out, is your profit right now economically significant enough
to consider taking it off. It's one thing to have a profit. It's one thing to have, a position hit your profit target. Then everything is easy. Everything is simple. But when you're in a position where you're only up 10 cents or 20 cents, or like in this case, 30 cents, in my opinion, you're kind of in that gray area of being economically significant or not. From the standpoint of, if you were only up 5 cents or 10 cents or 15 cents, it's an easier decision to say, hey, let me stay in the trade. There's not much of a reason to take it off right now. It's basically break even, so I'll stay in the trade.
Right.
If you were up 50 or 60 or 70 cents, then it's an easier decision because it is economically significant. It's like, let me take this off. Maybe I do a new trade for earnings. Maybe I don't, but I don't want to let this get away from me. Right now, though, you're kind of right there in that gray area. You're kind of right there, in between being economically significant or not. And so it's really going to be your call right now. Now, you said it yourself, and this is, of course, obviously true. This is a defined risk strategy. So if this was undefined risk, it would be a different discussion. I think it would be, a lot more heavily weighted in favor of taking it off. Because it's defined risk, though, man, you could honestly make a good case for either. You could take it off, book the profits, and then decide what you want to do for earnings, or you could just let it roll, man. You could just let it go. What do you think when it comes to economically significant? 33 cents. What do you think?
Yeah, no, I think it's decent. I think that it is earnings. I think because we're going to look at a few different earnings trades, I could take this one off, especially if I get involved in something like United Airlines. So because we have those two decisions, I'm looking at taking this one off the table, and I might just go ahead and do that.
Well, there you go. So, the fact that your knee-jerk reaction was it's decent, then I think that you've kind of, you've clearly decided that about 30 cents or so is economically significant enough for you to take it off, and I think that's totally fine. So I would say, yeah, book it, and you probably don't have to do too much discovery, maybe a penny or two.
Yeah, we'll go a penny.
Do one more. I bet you if you do one more, you'll get filled.
Yeah, we'll get. Oh, these markets are slightly wide. Actually, we'll actually go a couple, $1.88, and then we'll be a little patient on there. We'll be patient, see if we get filled throughout the show.
Okay. Yeah, that's fine. Okay. So you were talking about United Airlines.
Yeah. Before we get into UAL, Dr. Jim, I guess we can save that for the last 5 minutes. Just want to show you a couple things we got on right now. We do have a micro NASDAQ position. This one's been extremely volatile all day. Green P&L, red P&L. You guys have seen the price action today. Coin ended up closing this one. I just wanted to get it out the portfolio at that point. We were so far in the money on this one, wanted to redeploy that capital elsewhere. CRCL, I took this one off today. It was working out a little bit better today. Some of the premium was coming in, was able to collect a little bit over a half of the credit received on that one. Disney closed this one off. This one, again, was just way too far out of my grasp. So ended up closing this one, 2 days left to expiration. Got a lot expiring at the end of this week. Eli Lilly, this one's coming in a little bit more for me today. We're up on the day, 18.14. And that one has made up most of the gains just from today for me. I sold an out of the money put spread on Eli Lilly. You're not familiar with Eli Lilly, is it? This one isn't in one of the baskets of stocks that you typically trade, right?
Well, no, but we talked about it last week with all the GLP-1s and all the muscle that it's going to burn and all that kind of stuff.
I just got to pause for a quick moment to show you some of these weight loss drugs, Dr. Jim. Sometimes you got to trust the process, but we're going to give it some more time to cook.
I don't know what we were trusting last week, but that was some crazy stuff. But Eli Lilly, no, I haven't traded. You know what's funny about Eli Lilly? One of the very first stocks that I bought ever, in my whole career, I was maybe 17 or 18, had opened up a Scottrade account, and I'm like, man, I want to figure. I hadn't even started college yet. I'm like, let me figure this out, right? And I don't know why. I don't know why I bought Eli Lilly, but the very first stock I bought in my whole career was actually Eli Lilly.
Right.
And back when I bought it, I remember it like vividly. I'm gonna say I bought 10 shares for $30 a share. And what is it? What is it today? $700, $800 a share?
Yo, hey,
I should have just held that. I should have just held that the whole way.
Make sure your intern's not watching this segment.
We should have just let it all ride on Eli Lilly. I think that's a better return than Bitcoin.
Right, it might have been.
Same
we're trading 790 right now, so this thing's volatile.
And I bought 10 shares.
You're reminiscent on that one, Dr. Jim.
10 shares at $30.
Oh yeah, that one's bittersweet. I can tell.
That was the last time I traded Eli Lilly too.
You said never again. But we got Eli Lilly. We have 30 days left till expiration. That one's $10 wide, collected a third on that one, sitting at around break even. Market's decently-ish wide, pretty liquid still. We have Netflix. We sold an out-of-the-money call spread on Netflix. We're going to close that one right now. Nvidia, bought one put on Nvidia. This one's for the week, risk of the week with Gus and I on Tuesdays and Thursdays. We're going to see how this one pans out throughout the rest of the week, especially with all the volatile earnings we're going to be seeing. And then QQQ.
What's the strike on that? I can't quite make it out. What's the strike on that Nvidia
I bought the
put?
170 put on Nvidia. That's what it's at. 170.
And the stock price is 175.
The stock price is 170. 170.
Oh, okay. So it's an at the money put. Okay,
right,
at the money
right.
put.
Yeah,
Okay.
it's an at the money put. For risk of the week, we put on a little bit more risk and get a little bit more directional on that one. So QQQ, Dr. Jim, we got quite a few positions on in there. We have an iron condor expiring by the end of the week. This was one where I unintentionally legged into that iron condor. One side is getting tested right now. We only have a couple days left, so whenever you do these shorter time frame, iron condors, you don't get the best opportunity to roll the untested side for a credit. So not much I can do in that one, but we do have the out of the money call spread on QQQ as well. 30 days left till expiration. That one's $10 wide. And the market's been rallying for the last couple of days. So that's where we're at right there, Dr. Jim. Other than Netflix, other than Eli Lilly, does anything else stand out to you? I mean, Nvidia is trading at its highs. IV's super low on Nvidia. That's the one I'm most excited about or paying attention to the most.
Yeah, and it's a weekly, like it's done one way or another on Friday.
No,
no.
Not Nvidia. We got the iron condors that expire by the end of this week, but Nvidia we got ourselves 30 days.
I gotcha. Yeah. Okay. Man, yeah, that's a big play to the downside. I mean, it's relatively small, of course, but I'm just saying, like, that's a pretty directional play to the downside.
Yeah.
For tech, for Nvidia. It's August 15. They have earnings before then, right? I think they have earnings in August.
For Nvidia.
Yeah.
Nvidia earnings is August 27th after the bell.
So it's after. So it's after the cycle. Okay.
Yeah, about what,
right.
6 to 8 weeks away. So.
Yeah. Okay. All right. Well, that's gonna be interesting. So, what's the target on that? Like when you and Gus put on a trade like that, this is one of the tricky parts about doing a long put or a long call. What's the target? Like when you sell premium, it's a lot more clearly defined for you. But when you buy some premium to take a shot, you're kind of off in the forest by yourself. So what are you guys looking for, and what would determine a successful trade here?
I mean, very simple, just a directional move. That's about it. I mean, if we're buying a put, time's not on our side, so a directional move sooner than later, hopefully. But that's really what it is.
But how much?
Right.
Right, of course. But how much?
In terms of how much is a premium going to move? Like, would you like?
No. Yeah. I mean, like, so you bought the put for what'd you pay for it?
Let's see. We paid
$3 or $4.
Yeah, for this we paid $635.
$635. Okay, so if it's marking $750, is that enough? You looking for $8? Like, what are you looking for?
That's a really good question. I would say that's enough. For me, putting on that one, I will take this one off if I'm down 50% on the position, but I'm also okay with the entire with the debit paid on the position as well. So I would say success on the trade would be 50%. I would say that would be success for more of a risky environment or for more of a speculative position for that show.
Sure. Okay. Yeah. That's fair. One thing I will encourage you, though.
Yeah, absolutely.
Is when it comes to the loss, you may not have noticed, but you actually just said two very different things. Mm-hmm. You said, I'll take it off at 50% of the debit that I paid. And then right after that, you said, but I'm actually okay losing the full debit paid.
Yeah, as in.
Well, both of those are okay.
Yeah.
Both of those are totally fine. I would encourage you right now, before things get crazy, another Trump tweet comes out, whatever, decide which one of those two it's going to be.
Yeah.
Like, I think that it would be very helpful if you have clarity right now. That way, when you're in the middle of it, as you've been, we've all been, everybody can relate to this. You're not trying to make your mind up while it's difficult to do that while the market could be moving really quickly. So I would decide what your actual maximum loss is going to be.
That's a really good point. The maximum loss is actually going to be 50% of what I paid unless Trump says something overnight and we gap down and I have no choice but to accept the loss in the morning because I'm not able to manage it while the market's closed.
Okay.
That's more so what I mean by that is like.
Okay, so that's good.
Right.
Yeah. So if it's during regular trading hours,
right,
you're at 50%. But if it's an overnight gap, it's a Elon, it's a Trump, it's a whatever tweet. Okay, that makes sense. Okay.
Yeah. But yeah, no, that's Nvidia, Dr. Jim. We'll see what else we get though. We have a few moments left. We got some earnings,
United Airlines,
Jim.
baby. Let's
go. We got some
United
Airlines.
There it is.
United Airlines still pretty volatile today. We had a pretty big move the last few days. Gonna go start off in the 30 days till expiration. Dr. Jim, I feel you never use 30 days. I feel you're pretty much in the shorter time frame most of the time. Am I mistaken?
You mean for earnings?
Yeah.
I would say 75 to 80% of the time. I think you're right. But every once in a while, I'll mix it up with something a bit longer term. It depends on the strategy and it depends on the objective.
Okay.
Yeah.
Something with United Airlines. This is something that I wouldn't mind being in after the earnings. It would be nice to catch the earnings move, but it's not something I wouldn't mind being in within the next couple months. So I'm going to look at the August 15th expirations, start there. I wouldn't even mind going out to September 19th just to get some exposure to that airline industry.
Okay.
I'm feeling a little bit more bearish on airlines, Dr. Jim. I don't know what your personal opinion is on airlines or if the intern has any personal opinions.
I'm a Delta guy. So
you're a Delta guy?
Didn't Delta have good earnings the last couple days?
I was looking at Delta. We'll just take a quick second. I think Delta was down a little bit the last couple of days. I mean, we had a really good day a couple of days ago, yeah. And then
that
we just kind of been floating
earnings.
since.
Yeah, sure.
Yeah,
well, I mean, this makes sense to me though. I mean, United compared to Delta, United is bad, bro. Like it's real bad.
Is it really?
Oh yeah, and it's bad, dude. Like you're in the HQ now. Like you're in the United like Mecca. Like Chicago is where they're headquartered. I'm pretty sure. Yeah, it's real bad, man. I'll give you a great example. Here's a great example. I mean, I just flew Delta to Boston, right? For the live Boston event that was Sunday, which was amazing, by the way. Thank you for asking. So, but I flew Delta there and I flew Delta back, right? And every time, 100%, you always have that screen on the seat in front of you so you can watch, whatever you want to watch. Like it makes the plane ride go faster if you forgot to download something on Netflix, whatever. On United, bro, it's like 50 Delta that you're going to get one of those screens.
Really? 50
Come on,
Delta?
Man. 50 Delta. That's ridiculous. That's ridiculous. And so I'm all set on United, man. Delta's
no, I mean, I hear your gripes. Different strokes for different folks, no doubt. But with that being said, then Dr. Jim, I got to get short United. You
got to 100%.
I got to get short 100%. United. I'm looking at
the only way. I mean, look at that. That's setting up so nice. That 90.95. That's good.
Yeah, no, I'm really liking the 90.95. I know I'm pretty close, but I am 30 days out. It is earnings. It's not like it's an instant pain, instant gain. It's not going to expire in 2 days. I give myself a little bit of wiggle room. I'm going to collect $1.91. It's a little bit more than a third of the width. $300 of buying power. $300 worth of max risk on the trade. 30 days left till expiration, and we got earnings after the bell. I think we're going to go ahead and send this one through unless we get any objections or anything else on your end, Dr. Jim.
No, it looks pretty good. And one thing too, I mean, if you just look at the trade bar really quick before you send it through.
Yeah.
Yes, you are close to the stock price. You've got the stock price at 88 and some change. Your short strike is 90. So you are kind of snuggled up right on top of that stock price. But because of the premium that you're collecting, because of the implied volatility in the stock, your probability of profit is still 60%, 62%. So that's pretty solid. Like that's a solid foundation for a short premium trade, even though when you look at it, it looks like you don't have that much room.
100%. We're going to go ahead and send this one through, Dr. Jim. Let's see if we get filled on there we go, instant fill. See how United plays out after the bell.
There it is. So United, and then so you got to do a little something in Netflix tomorrow, man. You thinking about repositioning?
Little something in Netflix tomorrow for the bell. No. This is one, I'm just going to look to get closed on Netflix. I'm going to try and get out of that one before the bell. If I don't get filled on that one tonight.
Yeah, I would do that.
I will just try and get filled sometime tomorrow before earnings drops. But I'm going to get out of that one.
There you go. Yeah, there you go. And once you get out, you can get right back in.
That's true. Or if United Airlines works out tonight, tomorrow I could just decide to use that to finance the Netflix trade.
Yeah, there you go. You just You just parlay it into a Netflix trade. I like that a lot. I like that.
Anything else to add before we hop on out of here, Dr. Jim?
Nah, man. We survived the PPI print. We survived, a couple of Trump tweets. I mean, it's been some crazy stuff today, and so we live to fight another day.
Yeah, we live to fight another day. We'll see what we get. We have some notable earnings over the next few days. We'll see how United Airlines turns out. Dr. Jim, we always appreciate you, having you here, getting your insights and thoughts on these trades and on the market. Thanks for joining us today. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy.
Scoopy! That's one of my favorite. That's when you're just like scooping.
Get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
Hello, everybody. Tonight here, and we've got a green day on our hands. It's been a kind of a crazy day. Earlier on, there was a widely believed rumor that Trump was going to fire Powell, and there's no assurance that he can do that, but it would have been one of these countless situations in which he does something and the courts figure it out and then rule in his favor. But there was talk about a 99% likelihood that he was going to fire Powell. Everything freaked out. The US dollar plunged, bonds plunged, equities plunged, a lot of plunging going on. And then they trotted out, I guess, a delayed press conference like they recorded earlier or something. Something came out which basically said, no, I don't like the guy. He's a knucklehead, but I'm not going to fire him probably. And then everything recovered. It is amusing and kind of illustrative, I think, showing what would happen if he did this, because I mean, they've got a handful of smart people in the administration, so it's a little surprising that they believe this, but it seems like the narrative is, well, when we can finally get rid of this guy, we're going to put in one of our, bootlickers like Besant, and he'll just say the rates are now 1%, and then we'll pay a lot less interest on the federal debt. That's the logic. I mean, they've made it very clear. This is not, I'm not reading in between the lines. Trump is expressly saying we're paying way too much in interest. Powell's always too late to drop rates. We should pay lower rates. And there's this notion that, Besant will sashay into the building and say 1% everybody, and they'll say yes, sir. And the bond markets will suddenly be at 1%. That's not how it works. I mean, what would happen is that the bond markets would collapse and interest rates would explode higher, no matter what Besant says. Given that sort of complete interference in the financial, in the interest rate markets. You can't just dictate. I mean, the Fed kind of just apes whatever the market's doing anyway. So the market moves, and eventually the Fed's like, okay, we're going to change it to like what the market already is. I mean, they could write a basic program to do the same thing without 1,000 PhDs running around. Anyway, it is a wrong-headed idea. And so the very rumor of the idea sent global markets briefly plunging. And in fact, there's this magical level on the ES at 62.58, which was breached briefly today. That level is held repeatedly over the past week or so. In fact, last night, around exactly the middle of the night, my time, the ES was falling and kapoing. It just hit that almost to the penny and then went zipping higher. So that's a very strong support level. As I said, we did poke it for a few minutes, but it sprang right back up again. So everything's green. ES, NQ, RTY, ZB, YM, you name it. The majority, well, not the majority, let me be fair, about half of my short positions are down, which is good. And nothing real nasty out there. It was more fun earlier, definitely. It's one of those things where the market was plunging. It's just like ka-ching. But yeah, that stopped because we sprang back higher. But stopped out of nothing and just sail it along. I've got the charts loaded for you so we can thumb through them. And let's jump in. Here is the spider. Just as the ES broke below 62.58 for a little bit, likewise, the spider broke below this very long-term midline for a little bit. You can see it booking below that dashed line there. And it's been above that dashed line pretty much, well, all month long. And so we pierced it based on this false rumor. And now we're just kind of hanging out where we've been for days now. 1, 2, 3, 4, 5, 6, 7, 8, 9 days, just kind of thumbs shoved in our pockets, just hanging out at the corner grocery store. The diamonds up about 0.5%. They had their lifetime high a few days ago, and they've just been kind of slowly sinking. But again, very little change in 2 solid weeks' time. The IWM, the small caps, are up. We're stronger than that. They're up about a full percentage point. And no clean pattern here at all. Their counter trend rally high was a few days ago. Yesterday was a nice big tumble. But yeah, very little going on. That very small body there, you can see with the candlestick showing that the current price is a little different than the opening price. Overseas, I just want to mention regarding China, this is the Hang Seng Index Futures lifetime high way back here in the Pleistocene back in 2018. So lifetime high here, major lower high here, and then another major lower high here, and kind of a double top too. We peaked right there back in mid-March, and we've just about matched it today. I've gone ahead today and shorted some FXI, and we'll see how that goes. Pretty tight stop on this, right around that gap. I've got my stop at 37.75, so we'll see. That's a new one. We are ramping into the earnings season. As always, banks are the first to come in. JP Morgan, Wells Fargo, Bank of America this morning. Down a little bit. Here's BAC. As you can see, as with everything else, a lot lower at the lows today. Just down a touch. And at lifetime highs just a few days ago. And you can see, thanks to the generous help of the federal government, just what an amazing turnaround this has been for all banks. I mean, the lower quality banks had a much larger percentage gain than this, but even the likes of B of A went down to $1.97, and now it's about 46, thanks to trillions and trillions of dollars hurled into the banking sector. So that's been a big recovery there. XLF is up a bit. We did crack under the support level, which really kind of belongs more like that. That was the former high there. So we're below it still, but very fuzzy right now. I mean, you can see those past 9 days, we're just kind of just grinding around. I guess we need a lot more earnings for the smoke to clear. Another wild one was bonds. Here's TLT, which I show pretty much every day now, just like the spiders. And we continue to make progress to the bottom of that pattern, but we're a ways from piercing it. It's not that far though. A couple of weekdays would do the trick. So we're getting there, and it has been slipping like so in jibs and jabs And we got lower today than we've been since May. But yeah, with the rumor squashed for the moment, we're actually pretty much unchanged on that. On the heels of the PPI news, which was zero, no inflation, the bonds actually rallied. But then this Powell rumor hit, and they went from like up 0.5% to down like 1%. So pretty big. A lot of smoke with very little fire. Gold is up a little. It was up stronger earlier for the same reasons. I'm just hitting on the same story again and again. This gap was sealed, so we'll just get rid of that. Palladium, very good day. This is our old friend Palladium. I was looking back. I first talked about this positively on January 22, when PALL was about $90, and it's 112 now. So about a 25% lift in the 6 months has transpired since then. So yeah, Palladium continues to do great. Very pleased with this, and the volume, as you can see, nice thick volume for the past couple of months. Very supportive of that price move. Nvidia up just a little bit. Lifetime high yesterday, just kind of hanging out in the ionosphere still. Although it's not universal, Nvidia is definitely kind of the superstar. In fact, I was sort of musing yesterday. No, we actually did it. How about that? I was just sort of thinking out loud yesterday about a island reversal top, or an abandoned baby, more impolite term for it. And we've actually got it with SMH, assuming this high is correct. Financial data is funny. You have to kind of wait till the end of the day when all the dust settles and they clean it up. But at present, it looks like we do, in fact, have an island reversal pattern on this. So there's the low from yesterday, and today's high is below that. So we'll see if that is actually true and sticks. But that could be an interesting flip. I'm short AMD, although it's getting dangerously close to that stop loss, which is that gap right there. So I could well be blinked out of that. On semiconductor, also still short that. A little bit more wiggle room on that, but not a whole heck of a lot. Over in oil land, I've mentioned my renewed interest in energy shorts. Crude itself is up a few pennies. It's basically unchanged. USO is down a little, about 0.25%, although off the lows of the day. But XLE, which is one of my energy shorts, this is down 0.6%. And XOP is down double that, 1.2%. So I got into those a couple of days ago. It's going good. We got 3 red bars in a row. And I've got a smattering of individual items. For example, I've got BTU, which is Peabody, and the stop on that one, nice and clean, right at that most recent, excuse me, let's get the right object here. At that most recent low, 15.43 is the line that we don't want to cross. And ConocoPhillips, COP, down 0.85%, and a stop like so. So yeah, still, in spite of the V bottom today, stopped out of nothing thus far. We'll see. AMD just keeps chugging along. Yeah, in like 21 different positions still. Here's a few that I like in particular. Costco is still doing great. This is a stock I used to be terrified to go near, and it's one of my best performers. It's down almost $16 today. The lifetime high on this was way back in February. We got up to 1076, and then we had a lower high here more recently back in June, got to 1067. So just about matched it. Since then, it's pretty much getting clubbed. Like so, we've had some bounces like here and to a lesser degree here, but on the whole, as you can see, the trend is pretty plain. And importantly, I was watching this with great interest. We have finally cracked this support. So yeah, Costco doing well. And in spite of all this drop, we're down about $125 from the lifetime high. And this is not a cheap stock. PE of 55. You got to sell a lot of mayonnaise and dress socks to make up for that. So Costco, so far so good. Kind of a retail theme here today on these three. I just picked out three of my favorite shorts. They all happen to be retail. Dick's Sporting Goods, DKS, down about 1 1/3%. Not a really clean pattern, very sloppy, but it's going the right way. And RH up just a little bit after yesterday's smackdown. But the broad pattern is still quite good on that. This one I have no position. It's too thinly traded for me, but I just wanted to mention it as an aside. Axon Enterprises, which I've mentioned from time to time, it's been in this long ascending channel for decades, really. And I've been pointing out the resistance defined by this red line here, and here, and here, and here, and it got mushed right up against it because there was a lot of faith in the Trump administration is going to provoke the purchase of lots and lots of tasers and body cams and so forth. And that may all still be true, but the high valuation there is starting to feel the heat. So this peaked back on the 30th of June, and we're down almost $100 from there. Just to wrap it up with some very long-term stuff. These are just the big equity futures. The incur. On this one, the key element is this broken channel, which we collapsed beneath and went raging higher, and we have been just smashed up against the underbelly of that broken channel, but have not managed to re-enter it. That's NQ. We've got the ES, like so, and this one doesn't have any such clean property to it, so we're just kind of hanging out here near lifetime highs. And then one that still interests me, although it kind of broke my heart when it screwed up that analog there, is the RTY. As a reminder, the analog used to be, you can see quite plainly here, these two patterns. The violation, if you want to call it that, was the strength that showed after this green one, which did not take place here. So the analog ain't there. But if this does weaken, I would say major support is down at this blue line, around about 2120 or so. And it is the bottom of the hour. So I will get out of here. And thank you for coming by. I'll see you tomorrow. Bye-bye.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event. at work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm, listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call, the last call, the last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the closing bell here, Sosnoff. What'd you think about today? I thought it was a little bit peculiar. Bonds really looked kind of sick for most of the day, but what do you think?
Well, I got to tell you. So I was working on something after, our show, and I was answering an email, and I just out of the corner of my eye caught, all this stuff, just the S&P's dropping, 30 handles, bonds dropping, about 20, 25 ticks right away, and from up 15 to down 10. And I honestly didn't have any idea what was going on. I didn't really care. I figured it was a tweet or something, but I didn't know. So I bought some bonds around like 24-ish, 11.24.
111.24. They trade down to 11.11.
Yeah, I bought some at 111.24, 111.21, and 111.13 on the way down. And then I'm like, and then SPOOs were down like 35 or 40. Gold was up 40. I'm like, all right, I better just ask somebody what's going on. I mean, I didn't know. I don't care.
What's the T is all you're asking.
What's the T? Yeah. And
sure.
So I asked Josh, and he goes, Trump said this, whatever. I'm like, okay, fine. So I didn't buy any more bonds. That's all Trump I did.
Trump. Yeah. Okay. Go ahead.
Yeah.
Mm-hmm.
And I adjusted some. I probably made one or two bad adjustments in gold. That's it, just gold. And I didn't do much else. And I waited it out. And then bonds rallied back. So I scratched them, made a couple of ticks. Nothing really. Made a couple of ticks on the whole thing, and and then just went up my way. So to answer your question. Yeah, it was a little bit, crazy for a few minutes. And then, as is usually the case, I think Trump was testing the waters, and then he saw the reaction. It wasn't good. He probably got a Jamie Dimon and a bunch of other text messages from some key bankers and CEOs in that space. And then he said, okay, you know what? It's only in the case of fraud or whatever he said. Whatever. It's all bullshit. Whatever. It doesn't matter. Point being, I just did a whole podcast on this with Dylan. So I gave out all my honest feelings. And I guess the point being is now we're kind of, although the bonds are about 10 ticks lower than they were, the S&Ps are back to where they were. The NASDAQ is a little bit lower.
The S&Ps are 5 handles off of their highs. They're a little bit higher than where they were, but go ahead.
The NASDAQ's a little bit lower because it was trading around even, around it's trading
a couple of ticks away.
A couple of ticks away. And the Russell's a few ticks higher. And And that's about it.
And volatility's higher also, Sadnov. Another day with volatility higher and the market higher.
Volatility is a lot higher than it was. I mean, not a lot higher, but like, 2.5% or 3% higher.
Yeah, 1960 versus 1930 or so on an up move in the market again. We saw this on Monday, and we're seeing it again on Wednesday.
Well, yeah, because now there's a new. So before you just had.
There's a new canary in the coal mine.
Yeah. So before you had, a tariff tweet was your risk, right? I mean, that's what people thought. Now you have a tariff tweet, and you also have a PAL firing. So now you have two things.
Sure.
So volatility reflects that, and it's funny that today, they waited until after, like, you didn't do this pre-market when volatility before the expiration. The VIX expiration was this morning.
Right.
So it was a little later than that. But anyway, as far as individual stocks go, I mean, the stock market was a little bit muted today. I mean, not much. I know the S&Ps are near their highs. There's a couple stocks like, Tesla had a really good day. I think it's up like 10 or 11 bucks. And, Coinbase had a really good day. And funny thing is, one of the stocks that I want to sell this morning was AMD, and it actually had a really good day as well. So like none of those stocks that I thought might turn around today, except for some of the Chinese stocks, they really didn't turn around. The only stock I have,
your Roblox is up another 6% after being up 100%.
Oh yeah, the Roblox
since April.
Yeah, Roblox is crazy. United Airlines, which has earnings tonight, it's up $1.80. We actually, the best trade I made all day was when the market was selling off. United was only up 20 cents, and so I sold puts in there, and those came in. That was the best trade of the day for me. But stocks that have earnings today, United's up almost $2. That's a lot. TSM, which had a monster move the last couple of days, is up another $1, and I'm surprised by that. I thought it was down earlier.
Sure.
So that kind of move, those surprised me. The biggest down move I see is probably Costco, but I don't really trade Costco, so who cares? I mean, do you see anything else that's a big giant?
No. I actually got a little bit of long delta in Costco the last couple of
me too. I'm short a put spread. I could write it here around the 50 strike. Are you doing anything in TSM or UAL? UAL, I'm short some premium. UAL, I looked at, it's up $1.90, IV rank of 28. I mean, it's a stock that has, a decent monthly implied volatility, but look at this expected move, $6. I mean, I guess that's higher than what we've seen as of late for earning stocks, but it didn't do well for me. TSM 11 IV rank. I mean, it's even worse. So no, I think you have to have a directional bias in both of them. TSM, I agree with you. That is a very low IV rank to be messing around with. I mean, UAL has a little premium.
UAL has a little premium. I just don't. I don't know. I don't have an idea on what I want to do. Does that make sense?
Yeah, and TSM 11 IV rank. It has an implied move of, I want to say like, now remember it's a semiconductor stock and it's got an implied move of like less than 4%.
Yeah. Yep.
That's a pretty hairy underlying.
Yes.
I looked at a bunch of stuff in there. It's got tons of volume. So if you're looking for the volume play, it's TSM. It's traded 11 million shares, but if you look at the option volume in there, it's really, really active.
It is.
Yeah, and so if you're interested, so I haven't done anything yet. I was waiting until we did the show this afternoon because I don't think any premiums come in there anyway. It's like, it's not. But if you're looking for something potentially to do in there, if you go out to the expected move, which is, let's say $10, okay? So you go up to
it's 9, but sure, amongst friends.
Whatever.
Go ahead.
So you go up to the 250 strike, which I think is just outside the expected move.
You on the 2 days?
On the 2 days. I think you go out to the 250 strike, and you buy those and you sell anything you want above that.
A guy like you would probably sell. A guy like you is going to sell 3 of the 57.5s. But you should probably sell the 60s because they have better markets. It's by a penny, not that big of a deal.
I haven't done anything yet.
Well, that's my guess. A guy like you is going to do something like that.
Guy like you. I don't like a guy like you. I don't like the guy like you talk. A guy like you.
I'm sorry. I didn't mean anything by it, to be honest with you. I really didn't.
I'm going to. Oh boy. I don't know.
You did August just now.
I know. I'm just trying to mess with I'm trying to figure out some stuff. I'm trying to look for a spread to do. I was thinking of selling 2 calls and 1 put in August and then doing something funky in. So I sold some calls in.
I sold some calls in August. The August 270 calls at around $1.73.
Yeah, I haven't done anything against them yet, though.
I understand that. You could do this all as one spread. Probably get feel better too.
Well, I don't feel good about myself right now.
Well, you were looking to do an omnidirectional ratio spread in the 2-day options.
What?
And now you were looking at the 2-day options. Now you're looking at the 1-day options. I mean, now you're looking at the 30-day options.
Yeah, I know. I'm not very good.
Okay, that's fair. I've been there.
This trading game's tough. Yeah, I didn't honestly I didn't trade very good. I thought I was trading pretty good this morning. I just did a ratio spread in TSM. I bought the 260s and sold the 270s. That's just for starters in August. The expected move in August is about $16 from where we're currently trading. I don't know. It's not very many.
A 1x2, got it.
Yeah, it's not very many deltas. It's tiny. I don't really like that spread. I was just don't like what I was getting myself into. I kind of wanted to be.
That's okay.
I want to be short calls, short puts. That's kind of what I think. But I like the 2 days better.
Okay.
I don't know.
You're entitled.
I don't know what to do. Yeah, I don't have a lot of confidence here. I'm not a. Yeah, I don't like my position.
You do not like your position. Oh no.
No, I don't like. Let me take that back. I don't like.
That means it's gonna be a winner.
I don't like what I'm thinking about.
I don't know what that means, but okay. So you did a 1x2.
Yeah.
That's that your ratio? Okay.
Yeah.
All right. All right, you're good.
Yeah, I'm just seeing what we got here. I got to tell you the truth, Pat. I don't really love anything in Taiwan. I mean, you're right. The 11% implied volatility.
It's bad, man. It's bad.
Yeah.
At least you have a little bit of call skew, so you can say you're taking advantage of that ever so slightly.
Yeah, maybe that's it. I like UAL actually a little better, but we traded good in there today, so I don't want to. What else?
Jinx it?
What else you got today? Give me something good.
Roblox was the only one that I could give you that was good. Sad.
Not good for me. I'm short Roblox. It's one of my favorite shorts.
Well, you can get it short, even shorter now at better prices.
Yeah, I never liked doing that.
I don't blame you.
I started getting short Roblox when it was $88, and now it's what is it now? I can't even look.
Oh, you don't want to look then if you got shorted at $88. It's $119.
No, I have defined risk on in there. I did the smart thing.
Oh, okay. Well, then you're all right.
Yeah. No, I'm short spreads at every strike.
Volatility unchanged, market higher, Saz. What do you think here?
I don't read too deep into that. That's just the
bonds are up 6. Bonds were sick today, Sadnoff. 111.11.
Yeah. No, I agree. You know what's so funny is when this morning I covered some short call spreads in the Qs. Then when we went down, Qs, the NASDAQ's down like 100, 150. And I'm like, oh my God, I stink. I can't believe I covered those. Now the NASDAQ's up 37 and you're like, oh, what a great cover.
Oh, what a genius I am.
What a genius.
Ugh, am I good?
Yeah.
How'd I get so good?
How'd I get so good? So yeah, exactly. No, I think this will be just it's another topic. It's on the table. I personally hope he doesn't go that route. I think it's a mistake, but who knows?
Yeah, again, I agree with you.
Whatever his whim is, that's what he's going to do. Mm-hmm. It's called It's called presidency by whim. All right, let's look and see what else.
Man in charge.
Yeah, right. Great. Mm-hmm. Let's see what we got here.
How about taking a look at the Buckers? I know you mentioned Costco down 15. That's probably one of the biggest ones, but you also have Meta down 7 and change. You already mentioned the Chinese stocks, but Baidu's down, First Solar's down 5, Amazon's down 3. Anything get you going there?
No. I mean, ENPH under 40 is more interesting to me. Some of these crypto stocks really took off today. I'll throw that out there.
Crypto stocks really did. How about Ethereum? Look at Ethereum up $330. That's one of the biggest moves we've seen in Ethereum. 10% moves. I don't know if in recent history.
I know, and I put an Ethereum strangle on today. It did not work. It's your fault.
I had a feeling it was going to be my fault somehow.
Well, it was a viewer's trade from What's Your Assumption, and it did not work out very well for me. The kids.
Oh, so that makes it my fault.
Well, yeah. You encouraged
him. Understood.
Yeah. The tape action today, I think was a little busier. I mean, I think the S&P's traded, like 1.2 million cards. I haven't looked, but they were on pace for that earlier. 1.2, 1.3, I think. Which is a busier day that we've had. And I traded a lot more, almost double what we traded yesterday. So definitely a lot more going on. I thought the move in the
a lot more going on.
I thought the move in the currencies was really interesting. They were down early, then they were up huge. There's no question that when Trump does Trump, the currencies explode, the bonds get killed, and the dollar gets murdered, and the stocks are, uncertain. Then everything's fine again for 15 minutes later.
It does seem to be short-lived. I will give you that. It does seem to be short-lived.
Yeah, I have a lot of green on my screen today, so we'll see how this holds up. Now we're getting into a period. Tomorrow is, like we've talked about in the past, it's traditionally very bullish, the close tomorrow into Friday morning. So, that's a period you have to just be careful.
But we could do that from a lower place tomorrow,
of course,
right? I mean, it doesn't mean anything for today. Right?
I'm short some deltas going home tonight. We're short a little delta, a little less than yesterday, but we're short some deltas. Theta numbers are about the same. When we don't play earnings, there's really no theta change. We did get a few trades on today, but like I said, they were a little mixed. Biggest loser for us today was Roblox, and biggest winner, I don't know. I don't think we had a big winner.
Oh, don't sound like that. Bonds have got to be your winner.
Yeah, bonds and Japanese yen.
Okay. See, so there, you have something.
Yeah. Yeah, a little something. Whatever. I don't know for tomorrow. I think I'm going home pretty flat.
Pretty flat too. I'm leaning a little bit short here, Sadnoff, on this rally. Maybe just for
I'm a little bit short too. I'll give you that. A little bit short.
Okay, for a little bit of a day trade here.
Yeah.
I don't have the Ethereum exposure that other people do, but that seems to be everybody's happy about. You just gotta forget about the noise, Sadnoff, and buy Bitcoin and Ethereum. That's all you got to do.
Sure, that's all you got to do.
Thanks.
You can do
Makes it easy. The game.
You can do with your money. I'll keep my money very happy. My money likes
the game is easy.
My money likes where it is right now. It doesn't need to be in Ethereum at these prices.
I hear you.
Last time
I hear
Ethereum
you.
got to 4,000, we sold some, and I regret obviously not selling it all because it went to 1,000 after that.
Right. Yeah, no, I got it.
I have not sold any Ethereum yet. It might, you know what? You might have just talked me into it with that last comment of yours.
I mean, I think you have to at some point. I mean, a little bit. I mean, you can keep what you like, of course, but you got to lighten up a little bit.
I haven't sold any yet. I'm gonna go.
10% moves are like blow off tops to me. Blow off bottoms, blow off tops.
I just sold some. I'm gonna sell a little bit more. I think you're right.
Oh, you're gonna hate me.
Done. No, it's fine. I haven't traded
good.
Ethereum.
Good.
The last time I traded ETH was we bought some at 1,700 and 1,800. And this is the first time I've sold it. So it's 33.60. I'll take it.
Yep.
It's a good trade.
Yep. One of the better ones.
Yep. Haven't touched it for, 1,700 points, 1,600 points.
Very good, my friend. Good job.
Yeah, nice trade. Yeah, it's so easy on this platform to do everything. It's nice. I honestly have no idea. I'm not saying this to be negative, but how does somebody trade on like Coinbase? You got to trade on that platform. They got to go different platform to trade stocks. You got to go different platform to trade options. Like, why do people trade there?
I don't know. I just probably don't know any better. Great marketing.
Yeah, I mean,
it's great marketing. It's all.
Why would anybody trade where you have to go to multiple platforms to do everything you want to do?
Yeah. I don't know. Well, you want to ask the guys from Overtime if they have that answer for you?
Yeah, sure.
Sure, let's go. Let's go to the Overtime boys. Hello, gentlemen.
Sorry, I was on my Coinbase account trying to do some trading.
Why?
Well played.
It's a serious question. Why would anybody trade on a platform that's a one-trick pony?
Like, now that we have Spot FX on the Tasty platform, which is my first love, I don't really see any reason to.
But I mean, it's not. To be
spot.
fair, it's not just Tasty. You could do it on. You can do it on Robinhood. Yeah. You can do it on Interactive Brokers. You could do it on Tasty. I mean, there's a lot of companies that support all products.
But is it maybe
Coinbase has 300 plus different coins right now listed?
Yes.
I don't think we have that many.
No. We have I think 18, or we're on our way back to 28. But yeah, that's the only thing you can trade. Their markets are a little better, and you can trade 300 coins if you want to. That's it.
That's probably why people use Coinbase.
You have services like, let's say, a Trading View, where all the brokers, including us, are plugged in, and you could have it all in one place that way. But it just tells you people want it in one spot.
Yeah.
I think there's an issue. I think you're dealing with some unstable idiots, personally.
With what, Dylan?
Unstable idiots.
Just insulting future clients. Nothing at all.
Yeah. You're insulting future.
That's a. No, I'm using.
That's why we had a campaign called
client recruitment.
We had a campaign, Dylan, called "Join the Club, Genius."
Yeah. No, it's like, are you a Tasty trader or are you an unstable idiot? You decide. There's nothing
you be the judge.
Well, today was a pretty wild day, Mr. Vecchio. I'll start with you. What do you put the chances that this this Jay Powell firing is done? Like, what do you think do you think this is this is going to be a reoccurring theme, or do you think that was this a one-off event today?
I think if they were sending out a trial balloon, Trump got a replay of some of the market dynamics that we saw in early April. Dollar down, gold up, bonds down, stocks down. And, we saw that made the markets yippy, as he pointed out. and he reeled it back in. So you got the same exact reaction.
Well, he didn't reel it back in.
Hour?
You guys really think he's looking at the market and
No,
knows the
no.
S&Ps that move 40 handles? I think you're really giving somebody too much credit.
I think he's a tasty trader. I think he's got the app. I think he's in there all day, 45 days.
No, Tony.
I think the news
man.
on, and the news has an S&P ticker on it, no matter which channel you
guys are
look
all
at.
crazy.
And all of a sudden, if the numbers get red,
He's got Howard Lutnick. He's got.
Oh my
Howard,
God!
Howard
You guys are crazy. Can I tell you what happened? You guys are crazy. What happens is his phone just lit up. He just got text messages left and right, and then he said, "That's it."
Yeah.
That's it.
And the text said S&P's down 40.
Yeah, that's possible.
Look at the half-life of this thing, right? With the reciprocal tariffs, it took him like a few days to see the Sell America thing and go, whoa, hold on a second. No, yields are going up. This is the opposite of what I want. And today it was an hour. It took 1 hour. So I think the reaction function on this is only going to shrink. We're just going to keep finding new and interesting ways to get the markets to think Sell America, but we're going to walk them back, it looks like, very fast once that's the signal.
I think instead of Tom and Tony, it's Howard and Donnie. All day in the Oval Office.
You know, I think
meanwhile, Scotty is sitting under the desk in the fetal position screaming, "Can you stop already? Jesus."
What do you think? What do you think could turn this market around? Like there was a lot of people in here today, like
turn it around to the downside.
Yeah, like Nikki was really bearish for next week. There's a bunch of people that think that, this is kind of like a little bit of the, kind of the capitulation stage. Do you think that this is a capitulation stage?
Increasingly so, yeah.
Okay. Dylan,
and
you
volatility is too low for this
I think the opposite. I think Trump fired his last bullet today. All he's got left is fire the Fed chief. I think it was a dud, and I think that the whole issue now is inflation. Actually, yeah. I think that the real situation is not Howard and Donnie, but inflation in the world. So
that's I think that's a real problem as well. I think now we're going to focus on the economy. I think a lot of the other stuff is just noise.
I was enjoying the Epstein files way more than the economy. Can we stick to the Epstein files for the next couple of weeks?
Me too.
I mean, the Epstein files are way more fun than the economy.
Do you think Epstein was working for Mossad?
It's even funner than Crazy Elmo.
Tom, do you think Epstein was working for Mossad?
For sure.
For sure, you think it was a puppeteer kind of situation?
You know what I can't get through my head is when we were growing up in town I lived in, the only Jewish deli in town was called Epstein's. It's like,
did they have a good knish?
No, it wasn't very good at all.
Man.
But as kids, all we ever used to say is, "Yeah, we got to go down to Epstein's. Yeah, we're going to sit at Epstein's." So Epstein's Deli was where we all, that was the only deli in town. All right,
well,
boys.
The name has been soiled. They got
the name has
it
been
to
soiled.
Rosenberg's.
Yes.
Tom, there's an SNL skit. There's an SNL skit with John Mulaney where he pretends to be Harvey Epstein, a New York City councilman, assembly member, and it's a play on Harvey Weinstein and Jeffrey Epstein. It's a really funny sketch. You'll enjoy it.
You can't give us a little rendition? Can you give us a little highlight, a little reenactment?
I don't have the prosthetics to make that work right now.
My favorite Harvey Weinstein thing is on Curb Your Enthusiasm when Jeff, what's his name? What is
his agent, Jeff? Jeff, the agent.
He looks exactly like Harvey Weinstein. He goes, and some woman goes, "Who invited him here?" they are dead ringers. That was so great.
All right, boys. My favorite Harvey Weinstein was when Tom Cruise played the studio chief in Tropic Thunder, which was another interpretation of Weinstein.
Fantastic. With the closing credits to the ludicrous song.
And the phone call when he's in the negotiation with the heroin dealers. So when he's like literally take a step back and do a certain thing to your face is really quite a thing.
Fantastic work.
That's the line.
Boys.
He's like, okay, flaming dragon, step back from the phone. Amazing. Anyway, I'm sorry.
All right, boys. Have a great show.
Ciao. See you in 90 seconds. Overtime next. Peace.
Ciao for now.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
I want to play a game. It's a relationship game. So I'm going to ask you each a question. Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the bed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Trump threatens to fire Powell, and the NASDAQ notches its highest close of the year. It's Wednesday, July 16th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, to take you through the rest of this hour. Futures market closes at 5 Eastern, 4 Central. If you're joining us on the platform, Tasty Trade, or the website, tastylive.com, thank you. Come on over to YouTube, though. Tell us what you think of the market action today. The Trump roller coaster that we all strapped in for this morning, when indeed we saw a report from CBS News that Donald Trump was thinking about firing Jerome Powell, went so far as to bring the idea to some House Republicans, and the chummy friends were, well, encouraging him to do so. That was confirmed by the White House this morning. And then about an hour later, Trump came out and said, no, I'm not. Me? Fire Powell? Who would suggest such a thing? And the markets quickly snapped back. But it really was a window where the market told you how it would react if that was a reality. Dollar was down, you had gold up, stocks were down, bonds were down. It was that sell America world that we saw in early April. And that early April world gave us a Donald Trump who said things were too yippy to keep going down that path. So he got a glimpse into that window today. And, well, toothpaste back in the tube for now. NASDAQ finishes up in positive territory, and that is a cheeky high close of the year, technically moving above yesterday's close of 23,056.75. We notched 23,000.
Technically is the key word there.
76.50. Dylan, you're overseas. You're watching these fireworks, this topsy-turvy market today. What did we learn from Trump's?
I mean, I really agree with Ilya. I just feel like I feel a reassurance that the bond market's more powerful than the president, because there's no checks and balances in the government. The Congress is useless. The executive leadership of America has no resistance. And if it wasn't for the global bond market, there would literally be nothing to stop the president. And so I believe it's a second confirmation of the bond market's relevance as the final arbiter of what policies will and will not be tolerated. Now, with that said, the dollar's been destroyed, so I don't know. It's not exactly a totally reliable thing, but I think that that the story of the day is the bond market stops the president from firing. If you're writing the headlines for Bloomberg or the Wall Street Journal, bond traders stopped the American president from firing Fed chief.
Ilya, was it the bond market today melting down again? Was it the stock market melting down? Was Tom right that it was the text messages he was receiving, or trial balloon rumor? Is this something we need to pay attention to, is my point, because I look at volatility collapsing across the curve, spot VIX, futures. The market's not saying this is something that we should be worried about.
No, I don't think this is something that we should be worried about because I think it was a trial balloon. I think the trial demonstrated that this is not a road to go down. I think the president went in April and told the markets all kinds of scary things about tariffs and brought out a foam board and did this whole thing. And within a day or two had to walk it all back because the markets told him, no, bad, stop it, in a very emphatic kind of way. We just saw the kind of the temporal life of a similar kind of shock here get squeezed to an hour. So what took him 24, 48 hours last time to realize, maybe even a few days, it took him 1 hour to walk back. So I think very clearly the markets are saying, look, you can't go and mess with the independence of the Fed. That's just not a thing we're going to allow to happen. But that's too far. We will blow up your whole agenda. And I think the thing that immediately sort of sticks out is they sold bonds, so they drove up yields. What could possibly be more counterintuitive to what the president would want to achieve by installing a dovish stooge at the Fed if doing so drove up yields instead of driving them down? So very quickly, the markets sort of disabused the White House of the notion that any of this makes any sense. And you can kind of tell by what the president said. When he was asked, he didn't just say, no, it wasn't me. He had command of the details. He came out and said, no, in 8 months is when we'll do this, which would be appropriate. In 8 months, Powell's term expires. So it's not like the president doesn't know what's going on. It's not like this was some off the cuff thing where he's like, oh, whoops, I've said the thing I shouldn't have said. No. So I don't think this is anything to worry about. I don't think we're going to get an attempt to do this. I think we are probably going to get rhetoric around it. And I mean, we saw Mike Johnson come out today, the House Speaker, and say, "Oh, it'd be good if we had a leadership change at the Fed." Yeah, okay. So we're going to have the conversation. It's not going to be anything to. It's not going to be any much more lasting, though, as far as its influence on prices, in my mind, than how we looked at oil during the Israel-Iran conflict. There's going to be jitters around headlines, but I don't think it ultimately means.
But don't you think this? I mean, I said this to Tom earlier on Truth or Skepticism, where like, if you sell oil on World War III and you buy stocks on tariff dips, I think you definitely buy whatever stocks or whatever it may be on Fed Chief Powell firing actions. I think those are all buying.
I don't think you buy stocks. I think you buy dollars.
Okay, fair enough. But but the point is, it's an entry point. It's not going to happen,
right?
And maybe it's.
I wasn't long. I didn't get any more long dollars on this today when the dollar sold off for a hot hour.
Hit its 50-day moving average yesterday.
Didn't exit anything.
Sold off today, right? Yesterday. Hits the 50 today.
But don't you think that there's a bigger issue here, which is that the economy has a drag from these tariffs? Inflation is back. You know, I mean, like we have a real. I feel like we're sort of talking about the soap opera, but meanwhile, there's a foundational problem that is afoot here that is not a good one, my friends. Not a good one.
Exactly. That's exactly right. The PPI data showed it again, and that wasn't helpful. Surely, CPI obviously earlier in the week. The PPI numbers were a great example of this kind of like you look at the headline and you go, well, this is okay, right? And then you look like an inch under the hood and go, oh Christ, this is not okay at all. And so I think now in the second half of the year, Dylan, exactly to your point, you're past the soap opera that was the first half, and now you've got to look at what's actually going on. The problem is the grenade thrower in chief keeps throwing grenades. But
the derivative effect of the grenade throwing is a higher cost of everything. I mean, instead of paying attention to the grenades, it's like pay attention to the damage to the terra firma, the restructuring of the foundation of the current. The U.S. dollar isn't what it was 6 months ago, and inflation is back.
Right.
Yeah. Well,
and
people are taking
retail sales tomorrow, consumer confidence on Friday. It'll be a real good test of all of this.
People were taking a victory lap on inflation this morning with the PPI report. PPI doesn't measure imports. So if you're going to measure tariff inflation vis-a-vis PPI, it would only happen through a later stage of the production process,
or really early, which is where it showed up,
like steel, right?
Intermediate trade services margins for the initial stages of the U.S.-based supply chain had their biggest margin squeeze in April since 2012, I want to say. I'll verify that in a second. I've got the chart here, but huge squeeze. They haven't improved since. They haven't fallen, but by the same magnitude. But they've inched lower. That's the biggest in 12 years. Excuse me.
Yeah, no, but that's notable though, right? Because if PPI doesn't measure imports, and so you can't measure the tariff impact directly, you'd have to go into a very minuscule line item and sniff it out.
Yes.
And only if there's legitimate pressure in the system would it show up there, and it is.
Yes.
The CPI report yesterday showed that without the weakness in the housing data, tariffs would have had a bigger upside influence on the inflation number. There's actually more weakness going on in housing than I think we've all given any credit to. Maybe that weakness and the reset that you guys have long discussed as what's needed for the housing market, maybe that's actually starting to build in some places where when you look around the country, Nashville, Portland, Austin, Atlanta, some of these places have double-digit year-over-year declines in rent prices. So it's okay. That aside, though, the reaction
and wholesale goods prices in the PPI did go up by the most since February. So it is there.
Right. It's there, but you're not going to see it in the top line. So, I mean,
no,
JD
you're not going to see it in the
Vance,
top line because services are falling, and they're falling for the wrong reasons. The biggest decline in services was the traveler accommodations and airlines. So you're seeing that at the front of the supply chain, margins are getting squeezed at levels we haven't seen in over a decade. And at the top of the supply chain, wholesalers are basically belt tightening. They're saying, don't take a flight. Don't spend the money.
Dylan, I got a comment here earlier from someone saying the reason why Trump is pushing on lower rates is he probably thinks that he has some properties that need refinancing due. Why is Trump leaning so hard on these rate cuts? He said that interest rates should be
because
a full
Trump
3 points
believes
lower.
that cheaper money, because Trump's a real estate guy who believes if you reduce rates, you get more action. And he's an action man. Doesn't care about the currency, doesn't care about inflation. And he's a simple math. He's like, listen, if I can get, what's the monthly payment on the mortgage for the building? And if I can drop the monthly payment on the mortgage for the building, the value of my building goes up. I believe he is completely disconnected from the consequences that are manifesting both on the inflation side and on the currency side, and is singularly focused on rates because that's the thing he understands. Or that's the that's the thing he values. That's the important KPI for him, which is if rates are up, the world is lousy. If rates are down, the world is good. Lower and if I get lower, he doesn't understand that lower rates actually going to propel inflation. And he thinks that the solution, my perception, I don't know what he thinks. My perception of what he thinks is that the offset to the drag of tariffs is lower rates, as opposed to I think most economists and the Fed chief believe that lower rates would compound the inflation. There's one worldview, which is lower rates compounds the inflation problems created by tariffs, which I think is the sort of logical economist mathematical view. And then there's the Trumpian view, which is I'm raising the cost of everything on the tariff side. So I need to lower the cost of debt, of borrowing money as an offset to the elevated cost of foreign imports of any kind, while America retools for the next 40 years building domestic factories. So we're going to need low rates for a generation in order to wait for the climate to change enough so that we can grow our own coffee.
That is true. We may have a burgeoning banana and coffee industry soon. Dylan, maybe you have a point there. Ilya, is it just a function of, I mean, I'm thinking about this from the real estate perspective. If he has lower rates, then the value of his property goes up and his cap rates fall, and his investments look more stable to his lenders. I suppose there's that angle. But I think Dylan, you're spot on. Ilya, do you have any critique of what Dylan had to say? Because I have certainly nothing to add there.
No, I mean, I think we're looking at a situation here where the president clearly wants lower rates for all of the various things that we've just outlined. He wants an economic boom, even though it'll be short term, even though it'll be inflationary, because that's what helps the immediate optics. You could run on that in the midterms. I think that's helpful. Never mind that in the back half of the 4-year term here, you're going to have inflation. I mean, it's not like we haven't seen this. What happened with the tax cuts in 2017? Why was the president so mad at Powell then? Because what the president did with those tax cuts is he ramped up inflation. And Powell had to go and hike rates. So it's not like this is shocking. And of course, the president, just as he stoked inflation then and forced the Fed to be more hawkish, just as that happened, he also started the first rounds of the trade war with China and then crashed an overheated economy. Before COVID, in 2019, U.S. growth was at a 6-year low. The pandemic obviously washes over all of that. Everybody tends to forget because, of course, immediately the following year, we got walloped by something huge. But by 2019, U.S. growth was already very weak. And it was because of the dual impact of, A, the short-term thinking on taxes and their implications for inflation, and then, on top of it, a trade war. So the short-term thinking there. This isn't different. It's the same.
Taking a quick look at the equity markets here, we cover 25 sectors. 7 of them are in the red. The other 18 are in the green, led higher by biotech. Can't help but notice a lot of real estate and bank-related names are leading the way higher too here. IYR, VNQ, throw in a KRE or even an XLF with some of the earnings reports that have come out. On the downside, we see that's the energy names, XOP, OIH, IYE, XLE. SMH took some cream off the top in today's session. But I want to focus on those energy names here because we do find ourselves looking down the barrel at a crude oil market that's now settled back into the midpoint of its range. Dylan, we're not going to spend a lot of time around here because there's no geopolitics, and you've made your dislike for oil unless there's a geopolitical flare clear.
Well, it's not dislike. I just don't want to. I'm willing to go out on a limb in public and say, listen, I think it's a good time to do. I just don't feel comfortable expressing an opinion about its direction. I don't know. You know, like
sure.
where I don't want to. I hate to say things when I don't have any idea.
No, I think that's a good point, just to be able to say, I mean, all of us should, I should do that more. Be like, I don't have an opinion on this. This one I actually do have an opinion on, though, Ilya, because the range continues to sideways shuffle. We're sitting right around the midpoint, 63.5 to 65 or so. What's your take on how oil moved today around these headlines? Obviously, Powell gone, growth scare active.
Yeah. I mean, I think you don't get much of anything here absent that spook. So you get a drop, you get a wick, and ultimately you're kind of back to where you were. It doesn't really seem like there's much to consider here. This is still the story of we had a big geopolitical scare. The markets shot up, then were quickly pushed back down, and now they're kind of skidding. It's like a tennis ball that's been dropped from a high and is now kind of bouncing along the ground after the first hit. There's not really anything that's occurring here. We're still kind of in this fair value-ish mid-range. So I think now that we're in the second half of the week, and we've sort of seen the first half, which was about inflation and whether the Fed has the green light to go, and the answer is no. Now we're in the part of the week where we ask, well, why do the markets want the Fed to go? We're in the growth concerns part of the week. And really, if you look at the price action in the first 6 months of the year, I've said this recently, you get a very clear story about what the markets are thinking. Yields are down across the curve in the first 6 months of the year, and crude oil ends up with an over 9% loss for all the fire and fury of Israel, Iran, blah, 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 blah. So the markets are concerned about growth. They want rate cuts. They don't see sovereign risks like what we saw episodically today. Why do they want these rate cuts? Why are they concerned about growth? How is oil down 9% in the first half of the year with all of what we saw on the geopolitics side of things? well, obviously the market thinks demand is a much bigger concern than supply disruption. And in the second half of the week here, we're going to get retail sales, and then we're going to get the consumer confidence number. And if all of that is telling us things are soggy at the same time, that both CPI and PPI are telling us that tariff-linked inflation is finally surfacing, this is not going to look very good for second quarter GDP numbers or thereafter at all. And in the first quarter, we already had weak consumption. As I've been saying, the weakest in almost 2 years. So if all of this adds up to we have weak consumption, which means weak growth, and the Fed cannot and will not do anything about it, a cyclical asset like oil isn't going to find it to be smooth sailing. But I don't think you have the confirmation to be a seller here. I think you've got to essentially wait for a clean break, let's call it sub 63, where you have that center line there. And then it's a sell down into the 50s and maybe further.
Yeah, I'm still leaning the short iron condors there, just like I am in notes and bonds still, which today a bit of a bounce back. I was looking a little stickier there. Dylan, it poses a really, you asked the question, and I think maybe Tom asked the question on the last call, is this done? Is this Powell-Trump story finished now? As Trump said today, we're getting someone new in 8 months. He can get what he wants. He just can't get it as quick as he wants. So why bother the market? Let Powell go out with dignity. You get your guy in there. It's all done above board. The rest of the FOMC is not going to resist the appointee like some plant. Why not take a shot at long bonds? We're currently sitting near 111. We just bounced off of the 111 area today. Or is just what's happening in DC too chaotic and the market?
No, I think I like long bond. I like that. I like long bonds, long dollar.
Yeah,
my attitude is, on the Trump side, it's buy the dip. When Trump rattles the cage, you buy the assets, whether it's the bond or the dollar. My concern is inflation and an economic slowdown. I think anything that's sort of in this sort of extreme moves, the same as an oil spike should be sold on World War III. The bond, I think, is all yipped up on Powell termination fears, which makes it, I think, a worthwhile long position. I just don't, the issue is oil doesn't have inflation on the other side. I mean, I guess it does in a certain sense, but if anything, inflation sort of, anyway, it's a different, it's relevant in a different way. In this case, if it was just Trump and there wasn't inflation, you'd buy bonds all day, in my opinion. But because the inflation data is there, because rate cuts are going to be kicked down the road, I still don't know exactly how to decipher how much of the bond is sort of yippiness around Trump and how much of the bond is bona fide repricing of assets because of the return of inflation, because of the Trump tax policies.
Ilya, you're already there. Are you going to stick with it?
Yes.
Why?
I mean, I think the risk reward at these lows looks good. I don't think that you've really shown anything has been proven wrong here, because you're very close to the bottom, going all the way back to those April levels, and really even before that. I mean, if you look at where we are on ZB, these are bottoms that go back to January, and you're basically hugging them right here. So I think the overall story here becomes of just pure risk aversion, of the most basic kind, out of a really regular, normal cyclical concern. Oh no, the economy is slowing. Oh no, the Fed won't come to the rescue quickly. This is just baseline de-risking. We're going to need rate cuts. That makes bonds at these levels attractive in the sense that locking in these rates is probably a good idea, because the longer that the Fed lets this thing fester and the more the data makes it obvious, the likelier it is that they really do have to cut, and then yields come down. So why not lock them in here? You're probably near some kind of a cycle top as far as rates go. You have all the reason in the world to look at long-term bonds as some kind of a haven in times of risk-off markets, as, again, we clearly saw in the first half of the year for all the Liberation Day nonsense and the Sell America narrative and blah, blah, blah. 10-year yields fell in the first half of the year. The markets were perfectly happy to buy long-term U.S. debt. There is no sovereign risk concern that anybody really cares about. Now, does that mean that the U.S. is doing fine and managing the fiscal side well? No. It just means that there's no alternative. There's nothing else that's going to come in.
Well, and that was what I was talking to Tom about, because you can sort of just run this thing into the ground, but then it's like where it goes back to 2009. Where are you going to go? Yeah. London? Tokyo? Hong Kong?
There isn't anywhere to go.
You got to come to Milan? Good luck.
Yeah, there isn't anywhere to go.
Load up on BTPs and hope the Italian government doesn't collapse again.
I mean, that shows that's a little bit of a hearkening of the past. Italy is in a very has the most stable government that it has had since World War II, and has the most popular leader in the free world.
Why do you have to say the most stable government since World War II? How many governments has Italy had since World War II, Dylan?
Listen, buddy. Look at who's the president of
since 10 years ago.
I don't see anything funny with this. I don't see anything. Prime Minister Meloni is the most popular world leader on earth. And she has been she is the most popular leader.
In the G10 for sure.
She's the 70th prime minister.
Oh, you're telling me the prime minister of Bhutan rates above her? Is there's some? You're telling me that some world leader in country number 77?
I think Mark Carney is up there in Canada at this point.
Now we have to fact check this, Dylan.
Ask ChatGPT. Ask ChatGPT. That's why God invented ChatGPT. But there's no alternative to the United States. I mean, that's why I think you got to like the dollar and all the rest of it. I mean, it's as bad as it gets. Where are you going to go?
Exactly right. At the end of the day, it's a game of liquidity. So, and the 08-09 example is the perfect example. The mortgage crisis, all of the pain is in the U.S. So what do markets do? They buy dollars. Why? Because where else do you get cash that's liquid enough to absorb everybody's margin calls? Nowhere.
Modi currently ranks as the top leader.
According to who?
According to what?
A global survey conducted by Visual Capitalist, which is a company that
he's running a Muslim genocide. That is not a good way to make friends, sir.
And also, there's got to be, if it's a survey, there's got to be a population component.
I'm gonna stand by. This is nonsense.
It's just probably the Pope. I don't know. I'm pulling up the graphic.
You know what? Maybe.
So tell me why I shouldn't buy. The inflation is the only thing that keeps me from buying bonds. What is this? This is nonsense.
This is the list.
Malay is up there.
Morning Consult conducted the polls. That's a reputable polling company. Let's get that ad off the screen. We don't need you advertising. Yeah, there you go. Modi. It's based on polling from each individual country. I mean, so like Modi.
GPT, is Meloni the world's most popular leader? No. Giorgia Meloni is not currently the world's most popular leader.
That's based on the poll that is probably reading here. I digress. So
Nayib Bukele of El Salvador, 91% approval.
That wouldn't surprise me.
When you jail anybody that answers the survey wrong, that's going to happen.
I mean, that'll juice the numbers.
Yeah,
that will juice the numbers.
That's a little bit of a cheat code there for Nayib Bukele.
So
Okay.
we have
Vladimir Putin, number 2.
Oh, off the charts.
78%.
Don't fall out of a window now.
Listen, I think that the dictators rate high because if you don't say yes, you go to jail. I think I think Modi, because that's right now I got Bukele 1, Putin 2, and Modi 3.
As a former Soviet, I have some familiarity with how this works.
So we turn our attention to the crypto market here, where anti-dollar is still strong. Ethereum up 11.8%. Oh my goodness, that's a heck of a day.
This capital's got to chase something.
Got to chase something. Bitcoin's up 2.87%, closes above 120 here. We see that there's a few pieces of legislation that are making their way through. The Genius Act looks like it passes the vote to go to the floor. Same thing with the Clarity Act. Republicans carried across the line. And so crypto here is having its time in the sun. It's a reversal of yesterday when the legislation stalled out and failed. But moving forward here now, Dylan, because you are a true believer in morals and making money, what's your stance here on Bitcoin? You've been constructive on buying all the shiny stuff. Is this still a shiny object?
No, I mean, I think it is. I don't know what else to say. The short answer is yes. I mean, I'm horrified. I'm disturbed, but I just got to put it in a box and stick it on the shelf and wait for the crypto gods to send me back more money and just not talk about it with the Pope.
Ilya, what is it going to take to get you on this train?
I mean, I'm not getting on this train not for tactical reasons. I'm not getting on it for philosophical reasons. It's just not an asset that I want to own. But I don't really see a particularly compelling technical reason to own it. I mean, even just let's take all considerations of what the ticker is out of the equation. Take a look at a monthly chart, a weekly chart. You're setting higher highs, but momentum's fading. Stocks can't seem to get out of their own way. And as we talked about really all week this week, crypto was mirroring the stock market from the end of last year into the turning point in February, into the turning point in April, into the stalling at the start of, let's call it late May into June. But stocks have since roared higher, and crypto was stuck from late May until basically a few days ago, a week ago, maybe. So this is in many ways catch up to what before a brief deviation for about a month and some change was just a more volatile version of a risk-on asset, just a broad sentiment asset, just leveraged up with Bitcoin level volatility. But this was basically the NASDAQ or the S&P. And then crypto underperformed. So I don't really see anything here that should compel anyone to think that this has a tremendous amount of legs to go. It's going to catch up, but if sentiment is going to turn, as I think we're all kind of looking at and saying, okay, well, the runway for stocks is short on the upside and long on the downside. If that's what this is, in a risk-off scenario where correlations go to 1, high beta assets like this are going to get smoked. So I have no appetite here whatsoever.
Dylan, this is a fun headline. We don't ever talk about this company. Trump says that he's talked with the executives at Coca-Cola who have agreed to take corn syrup out and put sugar back in. Do you have any thoughts on that?
This is like a health improvement?
I think regular sugar stuff there.
Sort of.
But thing. I mean, but this is sort of like a demonstration of Maha at work, like taking corn syrup out and putting sugar in.
Yeah, screw those people in Iowa. Let's support the Cuban farmers.
I believe that the screw Iowa concept is long overdue.
Oh,
I
really?
believe Oh, yeah. I believe the Iowans have been jacking us up for decades with their silly primary and all their ethanol racket and their corn syrup racket.
Ethanol is a racket.
I
Corn syrup's
believe
killing us.
I believe the Iowans, the whole Iowan jackup, is one of the great corruptions of American society.
And they just kind of hide there in the middle of the country.
And meanwhile, they've got everybody fat as a pig. They're jacking our gas with corn. The soil's been completely corrupted and degraded by the nitrogen fertilizer that they use to jack the corn all over the place.
But this isn't a problem you have with the Nebraskans or the South Dakotans. This is a very
no, because they don't do the first. They're not the bellwether for who's the next president. So the Nebraskans and the Kansans and these other fools are just in there riding on the tailwinds of the Iowans. But the Iowans have got the whole country by the balls, and they're squeezing a little too hard, in my opinion. And I've had it. I mean, we're in a situation where we can't allow the Iowans, just because they dictate the momentum for the fundraising for who the next president is, to poison the entire country, poison the entire country's soil, set a standard for every other state to poison the country. And I could not be more subjectively and objectively in favor of this marvelous decision from the President of the United States to get the corn syrup out and put the sugar in. So that's how I feel about that. Yeah.
It's not where I thought we were going to go with it, but that's a place.
Listen.
Right. I find it really interesting. I don't know if you guys saw the news this week, but MP Materials, they produce magnets. The Pentagon took a substantial stake in this company. So did Apple, which I found to be interesting as well. But this is an immense investment, hundreds of millions of dollars, into a private corporation where the Pentagon basically gets right of first refusal on the magnets that they make. Dylan, is this a step in the right direction? And I say that as someone who thinks we need a robust industrial policy to counter what's happening in China. Should we have more federal government involvement in corporate affairs?
No. I mean, no. I mean, the government needs to have an intelligent tax policy to drive investment, private sector investment, in the development of critical resources. The primary issue with this country is the issue of tax policy. Every single time anybody gets into political leadership, left, right, center, instead of actually addressing the underlying issues of tax policy, they ultimately always come back to allowing the corrupted tax policy to function forever. And then they actually try to exert more centralized control. They're like, I'll take all the money and I'll decide. I mean, they go full Russian oligarch. And instead of having a decentralized, distributed capitalist system, whether it's the Bernie plan or the Trump plan or the Biden plan or the Obama plan or whoever's plan, the plan is always give me the biggest pile of money and I will decide what to do with it. And as long as the instinct is for whoever the political leadership to come out and say, give me the money and I'll decide, the more this country is going to be screwed up. And the more we actually drive a tax policy that encourages distributed pools of private capital to take risk and adapt, then we will see prosperity. So anything that goes towards the control of resources and the consolidation of resources by the Trump administration or any administration, for them to then pick winners and losers, is catastrophic and stupid and destructive to this country and despicable.
One might say
and
all
disgusting.
of that boils down to the Lawrence Lessig argument that if only you were to reform campaign financing such that these interests couldn't then shape policy to their interest primarily via tax policy, you'd solve 9 out of 10 ills that the general population is concerned about.
And also, there's a Supreme Court Justice Brandeis some number of years ago, whose whole operating premise was solve the decision close to the problem. Like the further that the solution creator is from the actual problem, the worse the solution gets. And no one could be further from anything than the central government. And you compound that with the ego, arrogance, and giant budgets of our money, It's despicable. Shame on all of them.
And we may have just lost Chris.
We lost Chris. Yeah, we did lose Chris.
That is how emphatic of a point.
It was my use of the word here. Despicable.
That's right. That's how emphatic of a point.
Now that we're down to a two-man crew, my whole thing with you, Ilya, is
yes, sir,
is balancing the Trump buy the dip tariff piece with the inflation risk. Not to come back to that, but that's the thing that I'm actually most interested in from an investing standpoint, despite all my political ramblings.
I don't think that there is a strong case, at least in equities, to say that the Trump rambling about inflation being just noise is a reason to be long risk. I think what we're now going to do is, if the first 6 months of the year was tariffs, the soap opera, and that's noise, the second half of the year is going to be tariffs, the economic consequence. And not just tariffs, but among them tariffs. So there's tariffs and there's tariffs. There is tariffs, the thing that happens when the president types something out on his social media and goes, blah, 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 more tariffs for you and more tariffs for you, and that's noise. And then there is the CPI data and the PPI data telling you that goods prices are starting to creep up. And that's real. So for that reason, I don't think that this situation lends itself to be a buyer of risk. I don't think that if you haven't been a seller near the top of this range, that this is a good spot to be a seller in, because you're at the bottom. And so the risk reward isn't great. So either you get a bounce back to retest the tops of the range. You already have that in NASDAQ. So that's now, I think, an attractive risk reward sell. If I didn't have it on, I'd get it on. S&P, I think, better. It's near the upper half of the range with today's close. That's, I think, an attractive sell. Russell is not. It's closer to the bottom of the range, so I wouldn't put that on if I was putting something new on today, though again, I have all of these things on near the top of their respective ranges, basically saying the risk reward is risk goes down, stocks sell off, dollar goes up. And so in my mind, if you didn't buy dollars on the Powell kerfuffle today, maybe you missed a window, but maybe there'll be another. And anytime you see a meaningful sell-off in the dollar, probably until further notice, probably for the next several months, you buy that. And that's sort of how you do it.
Equities are entering a window now where after July 17th through the end of the month, they basically chop around. July 17th typically represents the last day of the bullish cycle mid-month for equities, and then they trade sideways to lower before in the final 2 trading days of the month poking through to a new monthly high. So I think if we're going to follow a seasonal path here, right, if that's informative in any context whatsoever, Ilya, these ranges that we've had since July 3rd, they might persist.
They might persist.
22,800 of the NASDAQ, that's 1% away. You think about the S&P 500 going back down to the bottom side of its range, 62, 40? So 1% from here.
Vol is super cheap.
And is that worth getting worked up over? Like, I think my point is we're entering a period of time where if bulls can't make hay in the next 2 trading sessions, tomorrow really it ends, but then by the end of this week, maybe we've been exhausted up here. And we need to have a little bit of a pullback as we go through the typical late summer, everyone goes on vacation, take down risk.
Well,
we've seen it every other year.
Exactly. And I think when you look at then what happens from here, right? So let's say this week you've gotten markets shell-shocked. You're going to meander. When you look at what's going on next week, you've got a Powell speech on Tuesday. You've got a little bit of housing data on Wednesday. And then you get in the end of next week into the next round of flash PMI numbers. And you get a growth check on all of what we're talking about. If that growth check is disappointing, especially in the US, you've got a real issue and a real catalyst for markets to essentially say, right, okay, we're in the shootout and the provider of Kevlar vests won't open the store. Okay, sell risk, go to cash.
Well, the seasonal calendar here, just to visualize what the market looks like, we've basically crossed to this point in our chart. You can see why August over the past 20 years has produced an average return of 0% in SPX, negative 0.7% for September. So the sun's getting real low around here. If you're one of those believers in seasonality, I certainly am. It tells me that we're running out of time to press to the top side here, and it's better to perhaps operate elsewhere if you want to be blindly bullish. That doesn't mean to take the pedal off the metal for any long-term equity holdings, but calling for another 3, 4, 5% higher from now. Maybe we need a step back. Maybe we need to go down 3, 5% over the next few weeks, clear the cobwebs out, get rid of all the top-heavy breath, and we find ourselves living in a brand new world. Ilya, so that's our S&P, that's our NASDAQ. Our Russell is bouncing at support here today. This is actually a really interesting place because if it's a head and shoulders pattern, we don't break our neckline. And we do ultimately hold the uptrend from those April and June and now perhaps July swing lows here. So there's a few nice things going where you can't, S&P didn't break down, NASDAQ didn't break down, Russell didn't break down, they didn't break out. NASDAQ may have technically put in a new closing high for the year, but that doesn't really tell the full story. Calendar tomorrow, retail sales, those are on docket. We have a little bit more earnings coming up. What do you care about the rest of the week?
Retail sales, I think that's going to be important. And then the University of Michigan Consumer Confidence Survey on Friday. I think that's going to be important because I think, again, those things are going to tell us about the other half of the ledger in this story. If the story is that we want rate cuts and we want them for growth reasons, and the Fed won't give us rate cuts because we have inflation concerns at the same time, then this is where we are. And this is the kind of data that's going to tell us why those growth concerns make sense. At the same time that we, at the start of the week, got a sense of why those inflation concerns at the Fed's side of it make sense. So this is exactly where we don't want to be. A paralyzed central bank can't do anything about an economic downturn.
Sounds like we should stay long gold and Bitcoin. Hey, listen, we're done here today. We're going to end up a little bit early. We'll be back tomorrow, Thursday, same time, same place, 4 p.m. Eastern, 3 Central. So with that, we'll say overtime's out of time. For Ilya Spivak in San Francisco and a Dylan Radigan who is somewhere in Milan, I've been Chris Vecchio. Good luck trading. Up next after a brief break, Macro Money with Ilya Spivak.
See you there, everybody.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. I've been trading for about a year and a half, done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck.
No.
That's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. Back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle. Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
If you missed the live show, here's our cherry on top weekly recap.
I did let off fireworks. I should have brought a video. I honestly have never paid attention to the amount of powder in there. And they say it. So like those are like 200 grams of powder, right? And so I got a 500 one this year. So it's usually me and my youngest Austin. We literally, it's like this. It's like, nah, dead serious. Like I don't mess around.
Tom and I normally park on the same level in the parking garage. And so when I go to get out of my car, I have all my stuff, and I see.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
What a day, what a day. The president seems to threaten to fire Fed Chair Jerome Powell, then walks it back within an hour after the markets go back to April-like sell America mode. And we get some inflation data that once again make the case that tariffs are starting to surface as a reason for prices to go higher. So now what are we going to do? Well, we have the second half of the week in front of us with some key economic data to put all of this in context and perhaps to give markets another push. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. We're going to unpack all of that here as we ask the question. We are not going to get rate cuts in the near term, at least looking at this week's inflation data. But do we need them? And indeed, why are the markets seemingly out here pining for them? So let's first consider what we just saw when we looked at the day's offering of U.S. economic data. Surely the story on firing of Chair Powell is a bit self-explanatory at this point. But when we consider sort of the market response, it is, one might argue, relatively straightforward. We end up with a situation here where the markets basically convulse for about an hour when the news comes out that apparently there was a letter written and apparently also a consultation made with congressional lawmakers around this idea that we are going to have a forced firing of Chair Powell because, of course, the president has expressed acute frustration with the slowdown in rate cuts. And for a while there, the story appeared almost credible. Some major outlets picked that up. And indeed, the White House later confirmed that, in fact, the consultation with officials occurred and that the sort of outlines of the story are, in fact, something that was on the menu. But when asked about it an hour later, the president essentially just said, well, no, we're not doing anything, and we're going to wait the 8 months for Powell's term to end. And when he terms out, then we'll make a change. So you can see the performance here for the major stock indexes. You get a sharp sell-off here when the news hits. That's this right here. And then subsequently, once the spook is over, everything climbs back. It is notable that with the fall in stocks when this happened, the dollar also sank, again, very briefly, and bonds also fell. So yields actually went up. The irony of ironies here is that the president wants lower rates and wants to fire Powell so that somebody else can come in and be more dovish. But of course, that is not exactly what you would see here if you actually took that action, apparently, because what the markets are saying is if you compromise the independence of the Fed and you create this kind of instability, then there's going to have to be a greater risk premium that's added to U.S. yields, and yields will actually go up. And so you would be doing something sort of directly counterintuitive to that which you want to occur. So not surprising, perhaps, that the president walked this back as quickly as he did. Then you get to the day's economic data. And here we have the producer price index numbers. They follow the U.S. CPI report. This is wholesale inflation, and it was expected to tick lower, and tick lower it did. Both the headline number and the core down here, and meaningful lower levels, actually. When we look at the headline, it came in at 2.3%. That's a little bit lower than the 2.5 expected. The core, which excludes volatile food and energy, that was down to 2.6 versus 2.7 expected. Both of those are meaningfully lower numbers than recent readings for the headline. This was the lowest in 9 months for the core, the lowest in 11. And so you have here sort of levels that are certainly eye-catching, but when you look under the surface, you see something that's a little bit more troubling and a little bit closer to echoing what CPI showed us earlier in the week. So taking it apart piece by piece, the most immediate evidence that goods inflation is starting to creep into the picture, much as it did in CPI, is right here. So when you take apart PPI and look at the final demand component for goods, you get this increase here, which ends up being the largest since February, up 0.3% month on month. Why then do you get soggy PPI numbers? Well, the services side, which is a much bigger part of the economy, you get a downswing of 0.1%. And of course, services are a much bigger chunk. So take all of that together and you end up with a situation where overall PPI is basically a goose egg for the month. But then you start to break apart that services number and some troubling details begin to appear. So first, all of the decline is mainly airline passenger services and traveler accommodation services. So that was really the big decline for final demand on the services side. And that basically seems to suggest that wholesalers are tightening their belts. They're trying not to spend money on things that perhaps can be something that's foregone for now, something that's optional. But the much more troubling thing here is when we move from final demand earlier in the supply chain into intermediate demand. And what this measures is margins for wholesalers early in the supply chain. So they're not supplying final goods to be distributed to retailers. They're supplying the intermediate goods that go towards having the final goods that then go to retail. So this is earlier in the U.S. supply chain. And this is where you'd start to find the costs from inflation. If that inflation were linked to, let's say, higher input costs from tariffs. And in April, you see this dramatic 2% margin squeeze early in the supply chain, the biggest one in 12 years, as a matter of fact. And for the subsequent months, including this latest June data, no rebound, just further squeezing of these margins. Now, obviously, these are not the same magnitude squeezes as what we saw in April, in both May and June here, but nevertheless, you're not seeing improvement. You're seeing slower but ongoing deterioration. In other words, wholesalers at the beginning of the supply chain are essentially eating the tariff costs to try to insulate demand at the end of the wholesaler supply chain, and by extension for consumers. So we're trying to keep demand destruction at bay, essentially, by these companies, like importers, early in the supply chain, eating the cost, the extra cost in margin, and not passing that on. But it looks like their appetite to do that is running out, or perhaps their capacity to do that is running out, because, of course, goods inflation does ultimately perk up at the wholesale level. And, of course, likewise at the consumer level, which is exactly what we saw yesterday when we looked at the CPI numbers. And while, of course, in the CPI numbers, it's still mainly services that account for the lion's share of inflation, 2.24 percentage points out of 2.7 on the headline, we can very clearly see here that the delta here from 221 to 224 is much smaller than the delta on the goods side, from 0.05 to 0.13. In fact, we can see it very clearly here. The swing, the momentum, the thrust in goods inflation in terms of its contributions to overall CPI was 4 times that of what happened in services. And so this is where we start to get the sense that despite insulation at the early part of the supply chain from wholesalers attempting to shield consumers and therefore protect demand, we are starting to see this goods inflation surface. We're starting to see it move into the overall calculus. And of course, with that in mind, we are left with a picture of the overall economy much in line with what the Fed has been concerned about. We've heard since March that what the Fed has been saying is, look, we are fearful that, as with most episodes of this kind of a tariff policy in the past, we are going to end up with a situation where the tariffs are going to boost inflation. And these numbers seem to start to show us the evidence of that occurring. And at the same time, it's going to be a hit to growth because it will undermine consumer demand. And with those two things giving us a conflict between our mandates for price stability, that is controlling inflation, and maximum employment, that is sustaining economic growth, we really don't know which thing to prioritize. And we're going to wait while the economy is relatively benign with an inflation rate that's obviously higher now, but still generally manageable, and an unemployment rate based on the latest figures, likewise not the worst of all possible things by any stretch at 4.1%. In fact, relative to history, that's fairly low. And so we get into a situation then where what the numbers on inflation are saying is that the Fed is likely to remain in this mode, at least for now, because what all of this data then implies is that the Fed is, to some extent, validated in sitting on the sidelines and saying, we're going to wait. We don't need to be making any radical moves here. We don't yet know how this mix of inflation and growth concern is going to work out. But of course, from the market's perspective, there isn't the controversy. In fact, if we take a look, as we oftentimes do, at what the markets are baking in for Fed policy, as opposed to what the situation looks like for Fed officials, what we find, as ever, is that for the markets, the controversy has been solved, and that the concern is growth and not inflation, and that the place to go here is to start cutting rates. That's, of course, exactly what we see when we look at what Fed funds futures are baking in here. They're looking at 110 basis points in rate cuts between now and the end of next year. And when you compare what that stacks up to, when you look at what the Fed is suggesting, that, of course, outstrips the Fed by at least one, if not more, rate cuts. The Fed, in its June update, had just 75 basis points on the menu. And that's essentially a breakdown of 2 cuts this year and 1 cut next year. Whereas what the markets are saying at this point is the Fed is going to be more delayed and so wrong on doing 50. They have only 40 basis points baked in for this year. Not so far from the Fed's calculus, but sort of questioning whether after this inflation data they can manage even that. But then for next year, we're looking at 69 basis points against the Fed's single quarter point cut. And so the markets are leaning in the direction of 3, outstripping the Fed's calculus by almost 2 full cuts. So the market perspective clearly is that the Fed should be prioritizing growth, and the delay is unwarranted. Against that backdrop, we're going to get a test of just why the markets think as such. With U.S. retail sales numbers on the board, the expectation is that we're going to get a decline of 0.1%. That would be a nominal improvement after a 0.9% fall in receipts in the prior month, but hardly anything to celebrate because, of course, if the consumer were motivated, these numbers would look meaningfully higher, and that motivation clearly seems to be there because these tariff increases that have been put on pause since April are due to expire now at the beginning of August, but of course were due to expire until very recently when they were delayed on July 9th for all countries except China. China's deadline mid-August, the deadline for all countries excluding China now August 1st. And so there was a potent impetus in June for consumers to try to front run, especially as costs rose. But if that didn't happen, well, then consumers are already so downbeat that they're not even chasing the pre-tariff bargain, much as they did, by the way, earlier in the year. This 1.7% surge in March is telling that story. Now, this is what makes the market concern appear so acute. Already in the first quarter, if we take out all of these shenanigans with the front running of tariffs at the wholesale end, this vast surge in imports, the vast surge in the investment component around the building of inventories, where, of course, all those imports went. The larger story is this very weak contribution to GDP from consumer demand. And that, of course, is exactly the issue here. If you have a consumer that's weak, that is a much bigger sort of a concern than whatever shenanigans you have on the trade side, because consumption accounts for 68% of GDP, whereas the trade side, netting out imports and exports, is less than 5%. And so as you look at all of this sogginess in retail sales, assuming it comes out relatively in line with forecasts, as you look at then the picture on inflation, what you end up with is the worst of all possible worlds. The most important part of growth is flagging, and the Fed isn't going to come and help in the relatively near term. Which, of course, speaks precisely to the price action that we saw, as we've been talking about on the show for a couple days now, through the first the first 6 months of the year. What we're looking at is a situation where we have clearly a bet on rate cuts, with the front end of the curve going down in yield, and the dollar, of course, moving in tandem with some pretty explosive losses here against gold, against the euro, against the yen. Stocks being very flattered by this dollar sell-off. Indeed, as we can see here, with stocks having increased less than the euro or the yen, in non-dollar terms, U.S. stocks are actually down for the year, adjusting for the exchange rate. But more importantly, crude oil is down 9.2% for all the fire and fury in the Middle East. So we put all that together and we say, well, the markets see lower yields, weak demand for commodities, and a weaker dollar. And stocks are not exactly the risk-off or the risk-on champion that their valuations would suggest. This is not exactly a story of a buoyant business cycle. So the markets are clearly onto something here, and the Fed is clearly making it apparent that they're not going to act while inflation is doing precisely the thing that they were worried that it might. And so the upshot then for markets becomes, well, what is there left to do but to raise cash and de-risk portfolios? If there's going to be some kind of a negative economic outturn and help is not immediately on the way, then the mindset among investors goes from sort of the usual attempt to maximize returns to a more defensive perspective aimed at protecting as much capital as can be protected. That probably means there is divestment from risky assets like stocks and Bitcoin. It probably means capital going into the relative liquidity haven that is the US dollar. As we saw in the first half of the year, the dollar is clearly not selling off for some sort of displacement by other currency reasons, because this decline in 10-year yields very pointedly says that there's no shortage of appetite for U.S. sovereign debt and no real attempt at replacing the U.S. at the bedrock of the global financial system, as though that were even possible in any kind of a near-term sense. And so the dollar then begins to stand out as a haven once again, a haven of liquidity. You probably likewise get some support at the long end of the curve on bonds and get a rally there, again around the same logic. If the impetus isn't maximizing returns, then why not lock in yields at these relatively elevated levels if what we're expecting downwind is an expansive rate cut cycle as the Fed, perhaps even next year, catches up to having been delayed and dragging its feet this year. And so were the retail sales number to disappoint, a lot of the pieces of this story would appear to start to come together. And that is macro money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace. Across from me is Dan Cecilia. And with us today, of course, fan favorite, Greg Magadini, Director of Derivatives at Amber Data. Greg, what's up? Just dropped my phone.
Hey,
Apologies.
how's it going? Happy to be here. Thanks for having me on again.
Yeah, absolutely. Thanks for coming back. Every time you're on the show, it seems like we're hitting a new all-time high. So we're going to keep this cadence going. Greg, it feels good again, man. Not that it didn't feel okay last time, but we're feeling better and better by the day in this bull market. I guess let's just start there. Bitcoin at all-time highs. ETH, BTC looks like it's maybe breaking out of the downward trend it's been in. Across the board, what are you looking at? What are you seeing? How are you thinking about the markets right now?
Yeah, well, one of the things I do want to contextualize, I've always said this in crypto, what's scarier, a world where Bitcoin is worth 0 or a world where Bitcoin is worth 1 million? I think we're on the latter half of the escalation, but one of the themes I'm keeping in mind here is that we had a big shift in monetary policy in the 1970s when we left the gold standard, and gold basically went from $35 an ounce in 1970 to $700 an ounce in 1980. 20x essentially is what happened to gold. And I'm really seeing, potential macro trends that are kind of similar. Today we had the rumors that Trump was going to get rid of Powell, and that really sent the long end of the yield curve a lot higher because Trump's plan is to essentially crush short-term interest rates at the expense of long-term interest rates. And that's a little bit of an inflationary force, or maybe a lot of bit of an inflationary force. Great for crypto, great for hard assets, but definitely something that's a game changer in terms of sort of policy and how things work right now. So that's the scary world of $1 million Bitcoin, but very good for trading environments and for Bitcoin holders. So that's kind of the context that I want to just mention off the top here.
Do you think, beyond kind of the big picture macro, obviously shifting monetary policy environment, do you think that's what's kind of behind this bid recently, why we're at all-time highs, is that in some ways you might be seeing, I struggle to say that there's a shift away from the dollar, but there might be some cracks that have emerged. I think we've talked about this before, 2022, everything kind of changes with the sanctions that go in place and the assets that are seized post the invasion of Ukraine. Does that, in your opinion, kind of send shockwaves across the system? The cracks emerge. Is that in any way behind kind of what we're seeing? Why Bitcoin's at all-time highs? Why you're seeing institutional participation? Is it a move against or away from the dollar?
So in part, it is a move away from the dollar. So to me, that's the Bitcoin is digital gold narrative, and you have gold at all-time highs. Gold in October 2023, just 2 years ago, was like $1,800 testing 2,000. And now we're at $3,300. So I think there's that aspect of it. But then there's the other aspect where, we have the procedural vote passing today to vote on the Genius Act, the Clarity Act, the Anti-CBDC Act. So that's very bullish to the blockchain industry specifically. Then you have the notion that stablecoin issuers like Circle are going to be big buyers of the front end of the curve, which is how the administration plans on refinancing debt at the short-term T-bill level because it's going to crush down interest rates. That's why he wants to get rid of Powell. So that's another kind of juxtaposition or coming together of the macro and the industry-specific micro. So that's kind of interesting. And then lastly, we have this, huge rally in tech stocks, AI stocks, and that really plays nicely to the risk-on world of Web3, which is really where kind of Ethereum shines, Solana shines, And in the case of Ethereum, for example, 65% of the outstanding stable coins of Circle are on EVM chains. And so, again, we have that very industry-specific development happening at the same time. So I hate to just point at only macro. I just think it's kind of a conflation of all of these three things at once. And that's really making the market essentially a fear of missing out, rally higher type of move that we saw today.
Yeah, I think it's a good point. And you mentioned ETH, and I think you spoke about ETH last time you were on. We finally saw this ETH BTC ratio kind of move up, break that downtrend that's been going on since over a year ago, 2024. You said it was undervalued the last time. Is there anything in the options markets or anything that you're looking at specific to ETH that could tell us where we're going next?
Yeah, I'd love to actually just share my screen here because there's a couple things, both in the futures markets and the options market. So one of the things I just want to show, just to contextualize, where ETH has come from and where it can go in terms of pricing of futures and the basis. Back in December, the basis was 18%. Today we've rallied from 4% to 7%. So that's kind of interesting. But just to show the difference in sentiment. So when people pay for leverage and pay a higher funding cost, they expect the asset to rally. That's why they're willing to pay the funding costs. If we look at the orange line here on the left-hand chart, that's the funding cost year to date accumulated for Bitcoin. Call it, 2.5%, 5% annualized. In ETH, we're just flipped back towards positive funding for the first time in 3 months, so to speak. So that's kind of an interesting phenomenon where we're seeing sort of a differential in pricing. But then if we look at the options market, here's the real story in my mind. If we look at dealer positioning on Deribit, essentially dealers are just short gamma all the way through to $4,000. And so there's kind of like an air pocket here. The process of getting from, call it 2,500 to 3,000 is probably going to have been a lot longer than getting us from 3,000 back to 4,000. And 4,000, we were just there back in December, and that was December of last year. If we look at the open interest across CeFi markets for futures, well, notional open interest, which factors in the price of the asset, has just had a high in December of last year, and that has just been exceeded, even though the asset is still not back at $4,000. So there's a huge increase in the participation in the futures market. So I think this is kind of interesting in terms of the participation of traders in ETH, and not to mention we're seeing the inflows into the ETFs. And if we look at the liquidation data, a lot of buy to close liquidations from the e-shorts. So it's really a sentiment shift in Ethereum, and there's a good amount of reasons for that as well.
So, Greg, when you look at dealer positioning there and you talk about the speed at which we possibly could move from 3 to 4, are you alluding to a gamma squeeze when you look at option positioning in this expiration because dealers have to hedge that exposure if they're negative gamma?
So normally I would say yes, that's how I would look at it. Again, crypto vol is still such a small space that we're not at the point where the tail wags the dog yet. It's still too small. But it's a really good gauge of sentiment nonetheless. So we know that the street is essentially just buying a bunch of call options at these prices, and they want to get long, and there's no sort of drift in sentiment downward. But at this point in time, ETH option markets are still a lot smaller than the underlying asset.
Okay. Kind of sticking with options, sticking with volatility levels here, which when you look at ETH have popped a bit, but Bitcoin, arguably, I think last time I saw it was 39%, 30-day implied, still near a one-year low. Even though we've had the Delta move, do you still believe, and I think you've been absolutely right on this call, we put the trade on the first time that you had mentioned it weeks ago on the show, bought those upside call options or bought that upside tail. Do you still see an opportunity for those types of trades with volatility at the, really at the yearly lows, even though you've had the Delta move?
Yeah, I do. So here's how I think about it. The long end of the option expiration time cycle, the thing that I'm sort of betting there is not necessarily that we'll have a huge explosion in vol, but I think we'll have a very one-way directional trade so that the delta will just compound in one way. So So that'll exceed the cost of vol on the long term. But in the short term, really when you're trading a lot of gamma, to me, gamma still seems kind of cheap. Like call it the weekly options where we are today. There's so much going on. I mean, is Powell getting fired? Is Powell not getting fired? That'll move the market. Is Genius Act, Clarity Act, Anti-CBDC Act going to get passed, not passed? That'll move the market. We just had CPI yesterday. We just had PPI today. There's a lot of fluid things in the very, very short term that I could just see gamma paying off buyers here, either to the downside or the upside. So there's something interesting there. Medium-term vol is the least interesting in my opinion. I think once we get past the next week or so, we're probably back in that kind of low vol grind, and then we get back to this contango curve, and then the medium term just kind of rolls down the term structure.
Awesome. So kind of sticking with those short-term weekly expiration periods for that trade specifically, or that idea.
Correct. Yeah.
Speaking of that, we took a look at the newsletter. Obviously, that gamma point you made. Is there any interesting options trades that you've seen come in, like big buys, kind of that's trying to capitalize on that, or anything you're seeing in the data there?
I actually haven't looked at it after today. Today's been kind of a crazy day, but I'm sure there's a lot of stuff out there. If anyone wants to check out the platform, we do have like a block trade sniffer, and you could just see all the block trades that go through, but I haven't had the chance to look at sort of the biggest trades going through yet today.
Anything else on your radar, Greg, outside of some of the moves here recently in Bitcoin? ETH we've hit on my screen. I've got it up about 8% versus around a 1.5%, 2% or so move here in Bitcoin. So finally outperforming. I'm not quite sure if we're outperforming yet on a relative basis year to date. Bitcoin over everything has been the trade, at least up until now. Yes. So you get all-time highs. It feels good. And inevitably, naturally, everyone starts to ask, well, when is that rotation out of Bitcoin into not just ETH and Solana and other larger market cap alts, but when altcoin season, Greg? Is there anything that you look at here that gives you an indication of whether you want to trade? And I know we've talked about this before, where a lot of your positioning and your activity is in the options markets themselves, not so much spot markets. But just curious, in terms of how you analyze the market, is there anything that you look at that would give you some indication that if I've been long and I've been riding that move higher and higher in Bitcoin, that now I want to start to look at whether it's ETH or Solana or something that's a little bit farther out on that risk curve? Is there anything that you look at for that indication?
Yeah, so one of the things that I want to keep in mind for Ethereum specifically, from a fundamental perspective, is, if we think about Ethereum is a staking asset. So the tradable float reduces in size as more and more ETH gets staked. So right now we have sort of the highest staking percentage that we've had in Ethereum. It's around 30%, or maybe 35, something like that. So all that float is kind of non-tradable. So let's keep that in mind. Now we're also getting inflows of the ETH ETF. So essentially those ETH are coming off change and going into the ETF, which, the ETF is tradable, but that's still kind of a reduction of things on chain, and essentially people are accumulating the ETF, so that's good. And then we have corporate treasuries starting to allocate to Ethereum, which is also kind of a float reduction activity. So altogether, if we get this continued sentiment higher and some of that ETH gets staked, we get the spot staking ETFs, that will be kind of interesting as well. We get continued ETH flows. I think we moved to 4,000 pretty quick. There's no reason to step in front of this train. I know that we jumped, $350 today. That isn't a reason to sell ETH. If anything, I think we're going to just slice through this air pocket all the way up back to that December high of $4,000 pretty quickly, which is, again, kind of a catalyst for one of those gamma plays. So I think that's kind of interesting. To me, though, the other interesting asset, and I talked about this last time, is Circle. I think people are really sleeping on Circle. One of the things, like the main argument that I hear against Circle is that it's too expensive now because it's moved up so much. Again, that to me is not a very convincing argument. Too expensive is, it's have to be really certain that you can model out future cash flows of Circle. I don't think you can do that right now. And if I look at pure market caps, again, it's not that big of a market cap. We're talking about 50 billion, give or take. ETH is around the 400 billion. Bitcoin is, couple trillion. So like, it's kind of one of those things that there's a lot of upside in USDC here.
Yeah, I've got the Circle chart up here on the screen. Last price of $233, up $37.87 here today. It's about a 20% move. I haven't been following the news flow that closely today. I'm assuming, and you had mentioned earlier, some things are happening with Crypto Week here with some of the legislation. I'm assuming that some of this move here on Circle is related to that. Would that be correct?
Yeah, 100%. This Genius Act passing and the co-integration of having, Powell maybe being fired and reducing rates and needing a buyer of treasury bills kind of all together. I think there's a lot of fundamental reasons for Circle to be kind of successful in its stablecoin endeavor. Obviously, lower rates are not necessarily good for its T-bill holdings, but the incentive to work with Circle as a buyer of T-bills, I think, is very promising. And the Genius Act really encodes transparency into stablecoin issuers, and Circle's got a huge head start on that. USDT I think is going to lose a lot of market share because of its non-transparent approach to the market. And so as the Genius Act comes online and essentially creates a moat around Circle and the USDC stablecoin, I think they're going to be a big beneficiary. And there's a need for them to exist because there's a need for them to buy front-end treasuries.
Yeah, for everybody that's watching, Greg, last time he was on the show, had a great trade idea. Maybe we could walk through that again, Greg, because it was a really interesting way to kind of position this where you're looking at selling a put with a decent amount of time until expiration, but just the return on that capital, if you're trading in a margin account, that you're going to generate as a function of the premium of the put option. Obviously, you have downside risk, but that return versus locking it up into short-term treasuries is quite substantial. So I've got the trade page up here, and you can see that Circle does have an earnings announcement. It appears on August 12th. So that'll be the first since going public. But just to give everybody an idea of this trade, what would be kind of your ideal duration here when you look at where you want to sell that put?
Yeah, so the longer dated you go, the less risk you're taking. The shorter dated you go, the more risk you're taking. And then there'll be a synthetic interest rate differential. But if we just look at, say, the 1 year from now, call it, maybe the June or something like that, and we look at the $100 put, this will give us a good proxy right off the bat, simple math. What's the implicit yield on that? I can't really see what the current price is. It's a little small.
Yeah, so we've got a price of, let's give it a mid price of $11. And we've got a buying power effect here of $2,610 if you're in a margin account.
Yeah, so if you just think about the simple yield, it's 11%. If you think about the current yield, it's really like $11 divided by 89. So call it about 12%. And if you look at the yield on margin, it's pretty high. So all said together, this is a great way to get some of the action without chasing the top if this is a local top.
With these types of positions, is this something where, now granted the theta decay is not going to kick in for some time, at least on a daily basis, you're not going to see much of a change here with as much time as there is. But is this something where as you get closer to that expiration date with these positions, you manage them, or how do you think about that as this kind of decays over time? I guess my question is, do you get out of this early, or do you wait until you're basically at this point in time next year and hopefully the price of Circle is well above $100 a share?
Yeah, so the way that I view it, I want to own these shares. So for example, if we actually traded down through my strike, I would actually just buy back the put at the loss and actually just buy the shares. And that actually afforded me the opportunity to wait for my prices without essentially kind of FOMOing in at higher levels. So the way that I see it is that the big trade is going to come from owning the shares and riding those to hopefully $300 billion market cap or whatever, $700 a share, $800 a share, whatever that ends up being. To me, that's where you're going to make the real money. But you don't want to rush into that. So you want to be patient enough to buy the prices you want to buy. So that's kind of the best case scenario in my opinion, is we get the downward move in the shares and then I can actually buy the shares. Now, if we don't really get a downward move and the shares just kind of sit here and there's enough time to decay, I'll do one of two things. I'll either buy back the option and sell something a little bit closer that's a little bit more short dated and kind of hope to get exercise on that and kind of recycle the trade. Or if not, I'll just essentially collect some of the premium, call it half of it, and then end up just buying the shares at whatever the market price is. If we didn't move higher and we're kind of at a decent price and it's just been consolidating, I'll still get into the shares at some point and at least have gotten some action along the way.
Would you consider selling a call against that position? Let's assume you get exercised, you take assignment of the shares. Are you now looking to just ride this higher? You're bullish on Circle, you like the prospects for the company, or is this something where presumably there's still some volatility premium in here? You'd look to sell a call option against that?
Yeah, if you own the shares, earning some yield from selling a call, like you can sell like right now we're at 240. You can sell the 445 call that expires in January for a pretty decent premium. I think it ends up being kind of like 13-14% annualized. I always think that type of thing makes sense because if we just rally to 1440 pretty quickly, you'll probably get a chance to rebuy your shares below that strike at some point anyways if you get called out. So that's one way to play it, or you can just roll up that call as well. But I definitely think generating income if you're going to warehouse the high volatility asset, you might as well generate income from the high volatility environment. Not generating income is kind of like you're kind of wasting away the risk that you're warehousing for nothing.
That's a great point. And I love how you always kind of look at this from that perspective of the return on your risk, return on capital. That's a constant theme here on Tasty Live, but it's really important to look at it that way and always compare it to what you could get with your risk-free rate. And when you think about that, what can be at times a substantial kind of capital outlay. Dan, over to you.
I mean, I don't really have any. I guess like what I'm interested in is, we're in this situation where markets are ripping, altcoins seem to be next, ETH is ripping. Is there anything in your mind that could be a risk, like something to the downside? Because obviously these markets are super volatile. I've been through a couple cycles. On our way to 150, we could still get 20-30% pullback. So is there anything there that you could see as a risk?
Yeah, so to your point, so from the gamma trade perspective, I think as long as we get volatility from downside or upside price action, that essentially pays on the gamma side. I think there definitely is a risk when we get to these kind of environments where things leg up very quickly. The slow grind higher is the true bull market that lasts years and years and years, and assets just compound. But let's remember, 3 months ago, Nvidia was at $89 or whatever it was, and now we're at 170. That's a pretty big move in the largest market cap asset pretty quickly. So to me, let's keep that in mind. That's a little bit of a risk in terms of market structure, I think. And I can't imagine that if we get risk off in tech stocks that we don't get risk off at least in altcoins or Web3 coins. I think Bitcoin still remains its own beast in the sense that gold and digital gold are moving higher for reasons that's different from tech stocks and Web3 crypto. Obviously, there could always be a risk there from regulation and things like that. I see that more as a stable play, though. I don't see as much risk in Bitcoin for that reason.
Gotcha. And then, we've seen these corporate treasury stocks pop up, right? Like, I think the biggest one right now is that SBET, SharpLink Gaming, was buying up all the ETH and now holds more ETH than the ETH Foundation. Obviously, you had Strategy, which then he issued 2 or 3 tranches of preferred shares. And then I think Tom Lee launched another one. I mean, that seems to be bullish for like flows. And like you mentioned earlier, you know, ETH supply kind of coming offline, maybe being staked. Do you think there's any risk with like these treasury companies? Like some of these are just like copies of strategy. I mean, you know, is there any play there? Do you see like is SharpLink a good options trade? Is there anything you can think of there?
I think the point is a great point. I haven't looked at any specific trades, but one of the things I remember back in, I think this was like 2015 or 2016, oil broke down below $50 a barrel for the first time in a long time. And the CEO, I think of ConocoPhillips, he decided to take off all the hedges on oil. And he was like, all right, take off all the hedges. This is low enough. And I remember reading this comment on, I think it was on Wall Street Journal. And he said, the comment said, you're the CEO of an oil company. I invest in the oil company because I need you to be a good oil producer, essentially. Anyone is able to buy or sell a future. I don't need you to do that for me. If I want to get that exposure, I can go do it myself. And I think that remains true with corporate treasury strategies. I don't need to invest in strategy to get exposure to Bitcoin. I can just go buy the Bitcoin myself. I don't need to invest in SharpLink to get exposure to ETH. I can just go buy the ETH myself. That used to not be true before we had the ETFs, or before we at least had the spot ETFs. And I think that's a very important thing to keep in mind. Now, obviously, MicroStrategy is giving you a levered bet on Bitcoin, and the funding is not just like this short-term perpetual leverage, but it's actually fixed-term bond funding, just like you have a mortgage on your house and you pay the mortgage. As long as you make the interest payments, you can own the house no matter what the asset price is, so you can hold the volatility. So that's a little bit of a useful vehicle for that. But I think let's keep in mind that at the end of the day, just buying an underlying asset is not a very valuable business proposition. So I want to keep that in mind. And then the second point is, you know, leverage can cut both ways. Fixed term leverage is a little bit safer than essentially margin. So that's good. But if we actually did get a big crack or a huge shift in sentiment, probably a pretty good short.
Greg, couple more questions for you before we wrap up here. One, I want to ask you about kind of the Bitcoin volatility profile right now. And given, as you've said, it is its own animal. It's in a class on its own. It's driven by different factors. One of those possibly being, a shift in terms of the perception of the asset by much larger institutions. Pools of capitals go so far as kind of sovereign nations or sovereign wealth funds, at least. Given that, does the price matter? And what I mean by that is today at 120,000 with the participants that are entering into this space, do you think that the volatility ever goes back to what we've seen in prior years? And sure, there's tail risk, but with who's participating, does it matter to them if we get excited if it goes to 120, from 120 to 150? Does it matter if it's $500,000 or if it's 300,000 or if it's 1.2 million? Will we be thinking about it differently? Just given, I suppose, why these pools of capital might be investing in this? Like, how do you think about that?
Yeah, it's back to the full circle of what's scarier, $1 million Bitcoin or $0 Bitcoin. But to your point, I mean, if fiat is losing its purchasing power, then it's just kind of a stupid number. Like, it doesn't matter if it's 1 million or 2 million or 10 million. It's a stable value of money. Again, if we think about 1970 gold, $35 an ounce. I mean, gold was $35 an ounce for a long, long time, and now it's $3,500 an ounce almost. And 1970 is just 55 years ago. That's a huge jump. So if we rebase Bitcoin, $100,000 Bitcoin, call it $35 an ounce gold, in 50 years, it's a pretty big multiple. That's 100x essentially. Can Bitcoin be worth $10 million in 50 years? I mean, it's been done before in gold as the asset. I think the big distinction is that gold's been around for thousands of years and it's been accepted Bitcoin's a little bit more of a new technology, so not everyone's as bought in at this point.
I have one from the chat, Greg. Will 100K be breached again, or have we found a new bottom?
So the way I would think about this, 100K, I mean, you can just do the volatility math and figure out what's the probability that we break 100K. I think that's probably the base scenario to keep in mind. It's just a normal distribution of volatility and what it looks like. I don't think 100K is like a rock solid wall, like support floor that never gets broken. We just saw it broken a couple weeks ago and quickly got bought back up. So I wouldn't be surprised. And let's keep in mind that, I mean, I've been in crypto for a while. I've seen a lot of 80% pullback bear markets. If you think about owning Bitcoin from the beginning, it's not as easy as it looks to hold something that went up and is worth a lot, and then you watch all your wealth disappear because you're in the middle of a 90% drawdown. I mean, so we'll probably get another opportunity to buy 100K.
Right.
Yeah, that's a great point. Last question for you, Greg. ETH, we're bullish. Is there a price target in mind just for fun? We never hold anybody to this. My price target for this cycle, and you can watch this on the Tasty Crypto YouTube, is 30,000 if the math plays out the same way that it has in prior cycles. Rudimentary analysis, but that's a 10x basically from here. Entirely possible, though it's a big number for people. With the rally that's underway, is there a point where you take profits or you see, given option positioning, there's the potential for this to possibly slow down, could exhaust itself, but kind of what's the number that you have in your mind?
So the way I'm thinking about it is more from a short-term perspective, but I think we don't slow down right here, and I think we're at $4,000 in 10 days type of deal. I think there's a lot of interesting sort of gamma plays to be done in the short term here, and that makes a lot of sense to me. There's so much pent-up catching up to do in ETH, and pretty much the asset is under-owned, and the sentiment has clearly shifted. I think it just rallies very quickly, just like Circle rallied really quickly right out of the gate. It was worth $64 as the first trading opening price, even though the IPO was 31, and then 10 days later it was worth 300. So don't underestimate how fast these things can move, and the move that we've seen today is a reason to buy more, not to sell.
Awesome. Well, we appreciate that. We're going to leave it there. Greg, before we wrap things up, if anybody's interested in getting in touch with you, reading your work, you put out a great newsletter every week, where can they find you?
Yeah, you can go check out our website, pro.amberdata.io. That's going to be our website. We can look at all the vols and things like that. You can sign up with a free email. And then we also have a Substack where we write our weekly newsletter, which is amberdataderivative.substack.com.
Awesome. Well, thank you very much for coming on the show. As always, looking forward to having you back here soon. But that's going to do it for our show. Hopefully we see 4K ETH in the short term as well. We'll be back next Monday. Until then, I'm Ryan.
I'm Dan.
Peace.